Hello students, how are you all? I hope you are doing well. In the previous classes, we have completed the chapter ledger. Now we start a new chapter, that is trial balance. Before discussing what is trial balance and how it is prepared and what are the objectives of preparing this trial balance, let us revise the concept of accounting cycle once again. Look at the concept of accounting cycle. See, every businessman wants to know at the end of the year whether his business earned profit or suffered from losses. For that purpose, we use the tool called accounting. So, to ascertain the profit or loss, plus to know the financial position of the business, we follow sequence of steps. During out of them, the first and foremost step is we have to ascertain or we have to identify which transactions are recorded in the books of accounts. Generally, the transactions which are measured in terms of money are recorded in the books of accounts. Now, after identifying those transactions, next step is recording them in the journal. This we have already discussed. After recording the transactions in journal in debit and credit forms, now these debit and credits are transferred from journal to ledger through posting. In the ledger, we total the both sides of the account, debit total, credit total, and we identify the balance of the account. Balance of the account is nothing but the difference between debit total and credit total. That becomes balance of that particular account. Any account shows either debit balance or credit balance, or some accounts may be closed. At the end of the year, personal accounts and real accounts are balanced and carried to the next financial year, and nominal accounts are totaled and closed by transferring them to profit and loss account. This concept already we understood in ledger chapter. After preparation of the ledger, after balancing all the accounts, we prepare a statement. A statement. That statement contains, already in the ledger chapter, we prepared the trial balance itself. How? So, first, what we did, we have made a list of the accounts and we have written the balance of that particular account, whether this account is showing debit balance or credit balance. Debit balance, all debit balances in one column, all credit balances in another column, and all accounts showing debit balances total is equal to accounts showing credit balances. This statement is nothing but trial balance, and this statement is prepared to check the arithmetical accuracy. This also we have discussed, means whether debit total equal to credit total or not, because we followed double entry system of accounting. Now we followed double entry system of accounting. Double entry system, as per double entry system of accounting, every debit will have corresponding credit. That is a fundamental rule of accounts. Every debit must equal to credit. Hope you understood. Now, in our accounting cycle, the next step is preparation of trial balance. Preparation of trial balance. After that, next steps. So, preparation of trial balance is the third phase in the accounting process. Yes or no? First, journal. Second, ledger. Next one, trial balance. Now we start understanding what is trial balance. Already we understood. After preparing ledger, after totaling and balancing the ledger accounts, we prepare a list. And this statement is nothing but trial balance. Look at. Now come to the third chapter, trial balance. First look at concept of trial balance. After the transactions are recorded in the books of primary entry, nothing but journal, and posted into ledger accounts, and their balancing, the next step in the accounting process is to prepare statement to check arithmetical accuracy. For what purpose? To check arithmetical accuracy of the accounting work called trial balance. Hence, a trial balance is a statement prepared with the ledger account balances. It also includes the balances of cash and bank. Cash balance and bank balance also included in the statement. If you have any doubt, go to the second chapter, look at the practice question 1, trial balance we prepared. At the same time, for second problem also we have prepared trial balance. Look at the same we learn in this chapter. Next, trial balance contains various ledger account balances on a particular date. This trial balance is prepared as on a particular date. Okay, next, a trial balance is a statement and not an account. Fine. Next, preparation of trial balance. Simple. First, we take the ledger book. The ledger book contains all accounts, okay, consecutively numbered. One page is allotted for one account now. So what we do, we take one page. Okay, first page, what is the account? First page, let us say first page, cash account. Okay, cash account balance is what? Suppose 71,800. Sorry, 7,180. 7,180 is the balance. Yes, write down. That's it. Second page. Go to second page. Second page is bank account. Bank account balance is how much? 25,000 debit balance. Go to third page. Inventory balance 20,000. Go to fourth page. Building account is maintained in the fourth page. Balance 10,000. Go to next page. Vijay account balance nothing. Closed. Because Vijay account is closed. Next, go to next page. Madhu account balance 2000 debit. Like this, each page is checked because one page is allotted for one account now. So that account name and account balance we draft separately. That draft is nothing but trial balance. Basically, this is prepared to check the arithmetical accuracy. Plus, by using this statement, we prepare financial statements. That is the purpose of trial balance. Next, so preparation of trial balance is a third phase in accounting process. Third phase in the accounting process. It is prepared on a particular date. Do you remember? That's why in the heading itself, we write trial balance of. Here you can observe trial balance of business name we write as at a particular date or as on a particular date. And this trial balance is correct only on a particular date. On the next day, automatically the trial balance may get changed. Why, sir? Next day again transactions will happen. We record them in the journal, we post them into ledger. Automatically the account balances will change now. So trial balance also changes. That's why this trial balance is correct only on a particular date. On the next day or next dates, the trial balance will get changed. A trial balance can be prepared at any time at the end of the month. At any time means generally at the end of the month or every quarter or every half yearly. If not possible during the year, at the end of the year, compulsorily we have to balance all the accounts. All the accounts. Do remember, in the ledger chapter we have discussed personal accounts, real accounts, nominal accounts. Personal accounts, real accounts are balanced and carried to the next financial year. Nominal accounts are totaled and those total is taken to the profit and loss account to ascertain profit or loss of the business. Is it clear? Next one. But it must be prepared at the end of the financial accounting period to ensure the arithmetical accuracy of the ledger accounts before preparing the financial statements. Okay, next one. See, format of trial balance. Format of trial balance. Generally, we have two formats. Generally, we follow two formats for preparation of trial balance. First one is journal type format. Sir, journal type format means will we have 5 columns? Not like that. Journal format is what? Statement format. Journal format means what? Statement formats. Column. We draw different columns. Generally, journal will have 5 columns now. But here we draw only 4 columns. Observe. 1, 2, 3, 4. Even if you want, you can maintain another column. 3, 4, 5. Here you can write LF. Ledger folio number. Here we write serial number and here account name now. So here you can write the page number of this particular account in the ledger. Page number 1, page number 2, page number 3. Technically we call it as folio. Okay, suppose here I have written building account. Here I have written building account. This building account is there in the ledger. Page number 5. Page number 5. Here also like this also you can maintain, no problem. But in the examination problems, they will not give you the ledger folio numbers. That's why we ignore them. So effectively, how many columns we have? 4 columns. Journal type, serial number, name of ledger account, debit amount, credit amount. If you observe in practice question 1 and question number 2, we followed the same. Serial number 1, 2, 3, 4, account name, debit balance, credit balance. This is journal format. Journal format. So here all accounts we write one by one, one by one. And what is the heading? Writing heading is very important for trial balance. Look at heading is trial balance of so and so company name. If you get company name, write down the company name. Otherwise, leave it as it. Write down the date on which this trial balance is prepared. Clear? Serial number we write 1, 2, 3, 4. Suppose if we have 30 accounts, we write 30 serial numbers 1, 2, 3, 4 like that 30. Next, second column we write the account head or name of the account. Here we have written account name, cash account, capital account, purchase account, Y account, Z account and sales account. Like that account name we write. After that, we write whether this account is showing debit balance or credit balance. Next we write if the same is showing credit or debit. If it is showing debit balance, write down in the debit amount column. If it is showing credit balance, write down in the credit amount column. Like this. Now observe cash account is showing debit balance, so that we have written debit balance column. That's it. Capital account is showing credit balance, so that it is shown on the credit balance column. Understood? This is journal type format. This is journal type format. Next one. And we also have another different format, that is ledger type format. Ledger type format means, see, if you observe, ledger type format is nothing but account shape format. Means we divide the account, the page into two columns. Okay, look at. This is trial balance. What we do is we draw two columns like this. This is left hand side and this is right hand side. Left hand side we write debit amounts only. Right hand side we write credit amounts. This format is followed to save the space. Okay, if you observe journal type format, we write all the accounts one by one. But under ledger type, what happens is all accounts showing debit balances we write in one side. We write on one side. All the accounts showing credit balances we write on other side. So here name of the account. Observe trial balance of so and so company as at. So here it is a T-shape format. Observe carefully. T-shape format. Serial number, account showing debit balance, amount. On the right side also 3 columns. Serial number, account showing credit balance, amount. Understood? Very simple. So this is a basic introduction about trial balance. Apart from this, nothing. Sir, which format we follow, sir? Shall we follow journal type format or ledger type format? You can follow any format. First, check in the problem which format they have given. In the examination problems, what they do, they give you account name and its balance. They will not specify whether the balance is debit balance or credit balance. No, just they give you, here I will show you the problem. Just they will give you the problem, account and name. That's it. Account name and amount. They will not specify whether it is debit balance or credit balance. Understood? Yes, sir. Now you have to identify whether this particular account shows debit or credit. Suppose the given account is cash account. Cash account shows debit balance or credit balance? Debit balance. The given account is capital account. Capital account shows debit balance or credit balance? Credit balance. Capital account always credit side is more. Purchases account. Tell me, shows debit balance or credit balance? Debit balance only. Understood the logic? Yes, this is how we prepare ledger or trial balance. Right. So you people just pause the video and go through the concept once again, and this concept link with our ledger chapter. Practice for practice question 1 we have prepared trial balance, and for second problem also we have prepared trial balance. Link the concept with those two trial balances, then you can understand. After that we discuss methods of preparation of trial balance. Methods of preparation of trial balance. Okay, make it fast. Now we discuss methods of preparation of trial balance. Sir, what is the methods of preparation of trial balance? Nothing but in this format. Suppose, for example, take ledger type format we are following for the preparation of trial balance. Here we take account name, serial number anyway we write 1, 2, 3, 4 and account name. And here we have to take balance, that means debit amount or balance of that account simply. If you observe, just go to ledger chapter once. Just go to ledger chapter once. Here we have cash account. Here we have cash account. Now what I am doing is, here I will take cash account. Cash account. Okay. Next, if I take the balance of the account, if I take the balance of account in the trial balance directly, observe carefully. This is the account name. Opposite to this account, I am taking what? Balance. Balance. Second account. Second account I am taking bank account. What is the balance? 25,000. Okay, I will take another account. Just a minute. Okay, take bank account, no problem. Yeah, bank account balance is how much? 10,000. Bank account, what I am taking? Balance. If I prepare trial balance like this method is called balance method. This method is called balance method. Means I am preparing trial balance by taking that account balance only. That account balance only. Balance means either debit balance or credit balance. If I prepare the account like this, then this methodology is called balance method. Or else, I have another approach, that is I am taking same cash account, but I am not taking balances. I am taking total. I am taking total. Observe, total debit, total credit, total debit, total credit. Listen carefully. Observe the account here. Particular account, cash account na? Yes, cash account. What is total debit? 11,280 is the total debit. 11,280 is the total debit. Now the same account, cash account, what is total credit? 4,100 is the total credit. Then what about 7,180? 7,180 is balance of that account. But here what we are taking? We are taking the totals. Total of the particular account. Total debit, total credit. Take one particular account, cash account. Observe debit side, calculate total. Total is 11,280, sir. Okay, 11,280. Now go to credit side. Calculate total. What is the total amount? 4100, sir. 4100. This is also called trial balance. But here, here, while taking the amounts, which amount you are taking? Are you taking balance of that particular account, or are you taking the total debit as well as total credit? If you follow this methodology, then this is called total method. Total method. The methodology depends on which amount you are taking. Simple. If you take that particular account, total debit and total credit, this methodology is called total method account. Okay, total method. Suppose you are taking account name and balance of that particular account, balance only, not totals, only balance, then this is called balance method. We have another method, third method. This is first method, this is second method, and third method, total and balance method. Total and balance method means we take the total as well as balance also, that we discussed. If you observe in the total method itself, we can identify the balance now. Look at total debit is 11,280, total credit is 4,100. Difference is nothing but 7,180 debit. Debit is more now. 7,180 debit is more. So in the total method, we can also calculate balance. Tell me, methodology depends on which amount you are taking from ledger. Suppose from the ledger, if you take total of that particular account, totals of that particular account, total debit and total credit, then this method is called a total method. If you take that particular account balance only, then that method is called balance method. If you take both totals and balance, then that is called total and balance method. You may ask, sir, which method we have to follow? Second method we have to follow, that is balance method. Balance method we have to follow, because for the preparation of financial statements, we need the balance of that particular account, not totals. Balance of that particular account, not totals. Do remember. That's why balance method only we follow. Now look at total method. Total method. Observe carefully. Under this method, every ledger account is totaled, and that total amount, both debit and credit, is transferred to the trial balance. Trial balance can be prepared as soon as the ledger account is totaled. Time taken to balance ledger account is saved under this method, as the balance can be found in the trial balance itself. Generally, ledger account is balanced. Now, what we have to do? Total debit, total credit. We have to identify closing balance, and that closing balance we have to carry to the next time period, next period. So, time taken for balancing that particular account can be saved by following this method. But this method is not followed. Do remember, we follow balance method. This method is not commonly used for preparation of financial statements. Why? Because under this method we are taking only totals, na, not balance. But for the preparation of final financial statements, we need balances. To remember. Next one, balance method. Already we discussed. Na? Under this method, every ledger account is balanced first, and those balances are carried to the trial balance. This method is commonly used by accountants because for the preparation of financial statements, we need balances. Financial statements are prepared based on the balances of the ledger accounts. Now, finally, total and balance method. What we do? We combine total and balance method, both together, both together. Then we get third method. This method is also not commonly used. To make you understand these three methods, now here they have given some illustrations in our ICI material. You people just go open ICI material. Here I will show you ICAI material. Then you can understand. Look at first. Yeah. Look at ICAI study material here. They have given some accounts. Look at cash account, furniture account, ready-made information, salary account, sham account, purchases account, purchase returns account, ROMs account, sales account, sales returns account, capital account. 10 accounts they have given. Look at, already they posted, posting completed, totaling also completed, at the same time balancing also completed, balancing also completed. Now what we have to do is first make a list of 10 accounts: cash, furniture, salaries, okay, sham account, purchases account, purchase returns account, ROM account, sales returns account, capital account. First make a list, 10 accounts. Okay, which method we are taking? Total method. So first go to cash account, tell me the total of debit and credit. Total debit 35,500. Total debit 35,500. Then what is total credit? Simple. 30 from 35,500 deduct the balance. Deduct the balance. How much? 28,000. Total becomes 28,000, or credit side total 28. Now 35,500 debit, 28,000 credit. 35,500 total debit, 28,000 total credit. Like that we take one by one account. Next account, furniture account. Furniture account, observe, total 3,000, credit side total 0. Why? Because it is balance, no? It is balance. Total means before balancing, what is the amount that we have to check? Total debit 3,000, credit nil. Salary account, observe, total debit 2,500, credit side nil, that is balance amount. Sham account, total 25,000. Just a minute. Sham account, observe, total credit 25,000. It is balanced, na? Deduct balance amount. How much? 21,500 debit. 25,000 credit, 21,500 debit. Look at, this is 3,000 over, this is 2,500, 21,500 debit, 25,000 credit. Next one, purchases account, debit 26,000. This is balance. Don't calculate balance. Means purchase account only debit 26, credit 0. At the same time, purchase returns, observe, this is balance. Don't consider balance. Means credit 500, debit 0. Credit side total 500, debit side total 0. That is balance, na? Okay. Next, ROM account. Observe, debit total 30,000. Debit total 30,000 minus closing balance, deduct. 30,000 minus closing balance 4,900. Total is 25,100 credit. Now, look at trial balance. ROM account 30,000 debit, 25,100 credit. Understood? Next, sales account, to look at, total credit 30,500, debit side 0. It is balance. It is balance. Okay. So we take 30,500. Next one, sales returns account, debit 100. It is balance. Don't calculate balance. So total debit 100, credit side 0. Next one, capital account, total credit 10,000. This is balance. Don't count balance. Now total debit how much? 500. Credit 1,000, debit 500. 10,500 over. Now total it. You get the same amount. This is called total method. This is called total method. Now second method is what? Balance method. Under balance method, what we do? We take all accounts first. 10 accounts. 10 accounts. Now we take only balance of that particular account. If you observe cash account, What is the balance? It is showing 7,500 debit. We take 7,500. Furniture account 3,000 debit. Salary account 2,500 debit balance because debit side is more now. Sham account, sham account, observe this closing balance is written on the debit side. That means it is showing credit balance. It is showing credit balance. Next, purchase account always debit. Okay, how much? 26,000. Purchase returns account credit balance. So try to understand, to balance CYD is written on the debit side, means credit side of this particular account is more. Credit side of this particular account is more. Credit side is more means this account is showing credit balance. This account is showing credit balance. Don't forget. ROM account debit balance 4,900. Sales account credit balance 30,500. Sales returns account debit balance 100. Capital account credit balance 9,500. Now look at the balances here. Now total 44,000, 44,000. Understood this example? Very simple example. In this particular method, we have taken only balances. Under total method, we have taken total debit and total credit. Now third method is what? Total and balance method. Third method is total and balance method. So here we maintain two columns for balance and two columns for total. Look at account head is same. This is meant for balance and this is meant for total. Look at cash account first. What is the cash account balance? 7,500. What is cash account debit total? 35,500. Credit total 28,000. Like that, one by one account is prepared. Observe carefully. First, write down only balances. Furniture account balance 3,000. Salaries account balance 2,500. Sham account balance 3,500. First balances, just fill the balances. Purchases account 26,000. Purchase returns 500. ROM account 4,900. Sales account 30,500. Sales returns 100 debit. Capital account 9,500. Till here, till here, balance method. Now, beside that, also maintain columns for total. Columns for total. Okay, whatever the first method we followed, just write down these amounts here over. This is our third method, total and balance method. But out of these three, which method we follow? Tell me. Balance method we follow, because this method is useful for preparation of financial statements only. Financial statements also. Understood? Observe this. Just pause the video once. Go through the illustration 1 and 2 once again. Illustration 1 and 2 already question is given. Accounts, and what we have to do? We have to prepare trial balance from those accounts. Make it fast. Now look at the concept of suspense account. This is very important concept, students. Now you people observe carefully. Suppose we are preparing trial balance. We are preparing trial balance. This is debit amount and this is credit amount. Debit amount column total is, debit amount column total is 1 lakh. Debit amount column total is 1 lakh. And credit amount total is, let us say for example 1 lakh 10,000. 1 lakh 10,000. Observe carefully. Trial balance, debit side total is 1 lakh. Credit side total is 1 lakh 10,000. Now you people tell me, is this trial balance agree? No, the trial balance is not agreed. Why? Because debit is not equal to credit. Debit total 1 lakh, credit total 1 lakh 10. Trial balance does not agree. If debit total is 1 lakh, credit total 1 lakh, trial balance agree. If debit total 1 lakh 10, credit total also 1 lakh 10, then trial balance agree. But here debit is not equal to credit. Then it is said to be trial balance is not agreed. Means, what is the indication of this? What is the indication of this? That means there may be there may be some errors in the bookkeeping work. There may be some errors in the bookkeeping work. Bookkeeping work is nothing but journal, ledger. Yes or no? Yes, sir. Now what we do, we try to locate the errors. We try to locate the errors. Once errors are located and rectified, then automatically this trial balance agrees. For time being, what we do is we temporarily make this trial balance agree. I repeat, temporarily we make the trial balance agree. Do remember, temporarily we make this trial balance agree. How, sir? Identify which amount is more. Sir, 1 lakh 10,000 is more, sir. Write down the same amount on both sides. Which side is amount shorter? Debit side. Now write down that 10,000 short. Opposite to that, write down simply suspense account. Suspense account. Very, very important. The difference in the trial balance, we are transferring to a new account. We have created a new account that is called suspense account. Suspense account. Now it is said to be suspense account is showing debit balance. I repeat, suspense account is showing debit balance. Sir, what is the nature of suspense account? Suspense account nature is nothing. It is neither real account nor personal account nor nominal account. This account is created only for temporary purpose. It is not permanent account. This account is created temporarily to make the trial balance agree. To make the trial balance agree. Do remember. Once the errors are located, and rectified, automatically this suspense account gets closed. Automatically this suspense account gets closed. Is it clear? Yes. Now look at suspense account. After transferring the balance of all ledger accounts, including cash and bank balance, if the trial balance does not agree, the trial balance is tallied by transferring the difference of debit and credit side to an account known as suspense account. This is a temporary account. This is a temporary account open to proceed further and prepare the financial statements timely. Because still errors are not located. If they are not located, how can you rectify? Unless you rectify, it is not possible to prepare financial statements. If it is not possible to locate and rectify the errors, then first what we do is we transfer that balance to the suspense account temporarily. After preparation of financial statements, then again we start locating and rectifying the errors. Do remember. Next, if the errors are not rectified at the end of the financial year, the suspense account balance is shown on the balance sheet. If it is not rectified at the end of the financial year, we have tried to locate the errors still at the end of the financial year, but it is not possible to locate them. Now, the suspense account balance is shown in the balance sheet. Observe carefully, listen carefully. Trial balance debit is more than credit. Trial balance debit is more than credit. Then we create suspense account. Suspense account shows credit balance. because debit is more na, that extra amount we transfer to suspense account and that amount we place on the credit balance column. In that case, it is said to be suspense account is showing credit balance. Next, trial balance credit is more than debit. Trial balance credit is more than debit means credit total is more than debit. In that case, it is said to be suspense account is showing debit balance. Suspense account is showing debit balance. Why? Credit is more na, automatically the difference is placed on debit side. The difference is placed on debit side. In that case, suspense account is said to be having debit balance. At the end of the financial year, if suspense account is not closed, then what is the position? Then what is the position? Important. Now, by above discussion, you can say that suspense account may show debit balance or it may show credit balance. At the end of the financial year, if error is not located and rectified, then this suspense account is shown in the financial statements. Financial statements consist of two things: one, profit and loss account, and a balance sheet. Now, the suspense account balance, we take it to the balance sheet. Time being, do remember, suspense account balance is taken to the balance sheet. How, sir? Look at, if it is showing debit balance, then show it on the assets side of balance sheet. Assets side of balance sheet. If it is showing credit balance, then show it on the liabilities side of balance sheet. Simple. Over. This you can understand at the time of rectification of errors once again. Do remember. Suppose this is the balance sheet format. I will show you the balance sheet format. Just observe carefully. This is liabilities side. Left hand side is called liabilities side amount. Right hand side is called assets side amount. Assets amount. It has two sides: assets liabilities side and assets side. Okay. If suspense account is showing debit balance, then take it to the assets side. If suspense account is showing credit balance, then take it to the liabilities side. Either one side. Either one side. Do remember. This is regarding suspense account. There is so much of importance for this suspense account in the ledger chapter. Sorry, in the trial balance chapter plus rectification of errors chapter. Rectification of errors chapter also. Do remember. Okay. So pause the video and try to understand this concept once again. Try to understand this concept once again. This is relating to suspense account. Look at. Okay. If you want, you can write. No problem. Yes. This is regarding suspense account. Now look at the objectives of trial balance. We have prepared trial balance. Now we understood how to prepare trial balance. So we try to understand what is the objective behind preparation of trial balance. We understood the one of the main objective of preparing trial balance is to check the arithmetical accuracy. Here if you observe, Yes. Here look at total debit 44,000 and total credit 44,000. To check this arithmetical accuracy, we prepare the trial balance. Next, by utilizing this trial balance, we also prepare financial statements. These are the main objectives of preparing trial balance. Now, look at the preparation of the trial balance has following objectives. First one, it enables whether the posting and other accounting process have been carried out, recording and posting without committing arithmetical errors. Okay. In other words, the trial balance helps to establish the arithmetical accuracy. What is that? Arithmetical accuracy of the books of accounts. So how to check this arithmetical accuracy? The accounts showing debit balances total must equal to accounts showing credit balances. Next, financial statements are normally prepared based on agreed trial balance. If trial balance doesn't agree, then what we have to do? We have to locate the errors and we have to rectify them. Temporarily, we make this trial balance agree by transferring the difference to suspense account. Otherwise, the financial statements will not give a true and fair picture of the financial transactions. Unless trial balance agrees, then only we prepare financial statements. Otherwise, it is not possible to prepare financial statements. Even though you prepare the financial statements, it will not give you the true and fair picture of the financial position. The trial balance serves as a summary of what is contained in the ledger. Yes, ledger is a book which contains all the accounts. All the accounts summary is nothing but trial balance. In the trial balance, what we take ledger accounts one by one and its balance now. So trial balance serves as a summary of ledger. The ledger may have to be seen only when details are required in respect of an account. See, trial balance contains various accounts and its balance. If you want to see the details about the account, suppose here we have capital account balance 9,500. If you want more details about capital account, then we refer ledger, capital account in the ledger. Same time, sales returns account balance is 100. If you want more details about sales returns, then we refer sales returns account. In the same manner, sales account. Sales account total 30,500. If you want more details about sales, like to whom goods were sold, then refer sales account. Understood? Yes. These are the main objectives of trial balance. Next, look at limitations. Limitations of trial balance. Sir, what are the limitations of trial balance? If you observe carefully, if trial balance agrees that it is not 100% conclusive evidence that there are no errors in the bookkeeping process. It is a reasonable evidence, reasonable accuracy that there will not have any errors. But if trial balance does not agree, then 100% we are confident that there are some errors in the bookkeeping work, or even at the time of preparation of trial balance also we may commit some mistakes. Instead of taking, we have seen some problems now. We have seen some problems where debit balance is taken as credit balance and credit balance is taken as debit balance. These type of mistakes may happen during the preparation of trial balance also. Okay, now what are the limitations? We also understood that preparation of trial balance, while preparing the trial balance doesn't agree. Trial balance doesn't agree means what might be the reason? What might be the reason for disagreement of trial balance? Trial balance will not disclose all those things. Maybe one of the reason, we forgot to record the transaction in the journal at all. Will this trial balance discloses it? Or we forgot to post an entry from journal to ledger. Will this trial balance disclose that fact? No. We forgot to bring one account balance to trial balance. Will this trial balance notice that mistake? No. Trial balance will not identify where the mistake has been happened. Trial balance says that if it is agree, reasonable evidence. If it doesn't agree, that means there are some errors in the bookkeeping process. That only trial balance says. Trial balance will not say in this place mistake is happened, in that place mistake is happened, you have not recorded an entry in the journal at all. Trial balance will not disclose all these things. Understood, my dear students? Okay, these are the limitations. These are nothing but limitations. Okay, look at the limitations. Very, very important. Basic chapters: journal, ledger, trial balance, subsidiary books, cash book. These four chapters are very, very, very important for the next levels, next chapters. Look at, one should note that the agreement of trial balance is not conclusive proof of accuracy. Is not conclusive proof of accuracy. Do remember. Next step. In other words, in spite of agreement of trial balance, some errors may remain. Yes, trial balance agrees. Still, there may be some errors in the bookkeeping process. What are they? Look at. These may be following types. Look at first one. Transactions has not been entered at all in the journal. Trial balance will not disclose this fact. This transaction you forgot. Go and record. No, trial balance will not disclose all these things. But still, we may commit some mistake. We forgot recording some transactions in the journal at all. Next one. A wrong amount has been written in both columns of the journal. Means what? Suppose purchased goods. Purchases account debit 10,000 to A account. Means what? Credit purchase of goods from A. How much? 10,000. This is correct amount. Instead of writing 10,000, I may write by mistake 1 lakh. In both columns, not in one column, both columns. There is a mistake? Yes. But this mistake trial balance will not disclose. Why? Here if you observe, 1 lakh debit and 1 lakh credit. That's it. Trial balance agrees, but there is an error. Understood? That is the second point. Next, wrong account has been mentioned in the journal. Wrong account has been mentioned in the journal. Means, observe carefully. We have purchased a machine. For that machine, we have paid some expenses. So, actually, when you pay any expenses on purchase of machine, we have to debit to the machinery account. This we understood. But suppose if you debit those expenses to expenses account, debit 1000 to cash account 1000. Now you people tell me, actually here you have to debit what? Machinery account. Here you have to debit machinery account, but instead of debiting machinery account, which account you debited? Expenses account. Will trial balance disclose this fact? Hello mister, you have debited wrong account. Check it, go and check it. No, trial balance will not disclose all these things. Is it clear? Look at, a wrong account has been mentioned in the journal. Next, an entry has not at all been posted in the ledger. Suppose this is the entry: purchases account debit to A account. Purchase account debit to A account 1 lakh. This is recorded in the journal, but this is not posted into ledger. This is not posted into ledger. You people tell me, will trial balance disclose this fact? Hey mister, you forgot to post this transaction in the ledger. Go and check. No, trial balance will not disclose all these things. Next one, entry is posted twice in the ledger. Means the same entry, purchase account debit side we have written 2 times. A account debit side we have posted 2 times. Observe. Purchases account, A account. Posted twice means to A account 1 lakh. A account credit side we post by purchases 1 lakh. This is called one time posting. Purchases posted twice means second time also we posted like this to A account 1 lakh by purchases account 1 lakh. 2 times posted. Same entry posted 2 times in the ledger. Still trial balance agree. Observe. Why? One time debit, one time credit. Second time also debit, second time also credit. Trial balance agree. Trial balance will not disclose all these things. Suppose second time we posted into purchases account but not posted into A account. Now trial balance will not agree. Trial balance will not agree. Why? You have debited 1 lakh but you forgot to credit 1 lakh. Trial balance will not disclose this fact, but trial balance will not agree. Debit is not equal to credit. Trial balance will not disclose, hey, you forgot to post into A account credit side. No, but it says that credit side, debit side, there is some more amount, credit side, there is some less amount. Check it. Based on that, you identify and locate the errors. Trial balance says this. So these are the various limitations of trial balance. Hope you understood these objectives and limitations. Just go through the concept once again. In the previous video, we have discussed methods of preparation of trial balance. Plus, we have also seen illustration 1 and 2 from ICAI study material. After understanding the methods and preparation of trial balance, now we see some rules of preparing the trial balance. Sir, what are the rules of preparing trial balance? We understood that to prepare trial balance, we have three methods now: total method, balance method, total and balance method. Under a total method, we take debit side total and credit side total of that particular account. Under balance method, we take only balance of that particular account. Under total and balance method, we consider balance plus totals. Now, if you observe in the problem, in the problems, they give you only the account head plus its balance. They will not specify whether it is debit balance or credit balance. They simply give you balance of that particular account. In that case, you should identify which account shows which balance. For that purpose, you need to understand these rules and some examples of which account shows debit balance and which account shows credit balance with its nature. Now, let us discuss that concept in this video. Observe carefully. Under traditional approach, we have classified all the accounts into three categories now: personal accounts, real accounts, and nominal accounts. Yes or no, students? Personal accounts. When it comes to personal accounts, personal account may show debit balance, or personal account may show credit balance. Sir, how, sir? Observe carefully. Mr. A. Mr. A is person, comes under personal account. Suppose he purchased goods from us. His account we debit now. In that case, Mr. A account shows debit balance. Debit balance. Now, Mr. C. From C, we purchased goods. So C becomes creditor for us. When we purchase goods on credit from any person or any supplier, his account is credited. In that case, supplier account shows credit balance. At the same time, if you observe capital, capital account also shows credit balance. Why? Because whenever capital is contributed by the proprietor, what is the entry we record? Cash or bank account debit to capital account. So in that case, capital account is credited, so that capital account shows credit balance. That's why if you take any personal account, whether it may be natural person or artificial person or representative personal account, either it shows debit balance or credit balance. If we see the ledger book, then we can easily identify which account is showing which balance. But when it comes to problems, they give you only account head and its balance. They will not specify whether it is debit balance or credit balance. You should identify and you should prepare the trial balance. For that purpose only we are knowing all these things. Okay. So personal account, if he is a debtor, then his account shows debit balance. If he is a creditor, his account shows credit balance. Examples, credit balance examples, tell me. Creditor, capital. Example I am giving. Next, when it comes to real account, real accounts always shows which balance? Debit balance. Real accounts are nothing but assets. Real accounts are nothing but assets. Assets always shows which balance? Debit balance. For example, for example, plant and machinery, computers, motor vehicles, furniture and fixtures. Okay, computers and softwares, freehold property or leasehold properties, cash in hand. All these are assets. Shows debit balance. Hope you are following. Next one, come to nominal account. Come to nominal account. Nominal accounts are classified into two categories now again, expenses and losses. Expenses and losses, incomes and gains. Incomes and gains. Whenever we incur expense, we debit that expense account now. So expense account shows debit balance. Whenever we receive any income, that income account we are crediting now. So automatically that income account shows credit balance. For example, we purchased goods worth 10,000. It is expense. So whenever we purchase goods, purchase account is debit. So purchase account shows debit balance. Come to sales account. Whenever we sell goods, sales account is credit. It is income. So sales account shows credit balance. So in the examination problems, you have to identify what is the nature of this account first. Whether it is personal account, real account or nominal account. You need not to write, but you have to visualize. Personal account, if he is a debtor or receiver of any benefit from business, his account is debit. If he is the giver of any benefit to the business, his account is credit. Now come to real account. If the particular account is asset, na, that is real account. Real account shows always debit balance. Now come to nominal accounts. See one example. For example, one account, salaries and wages, or salaries simply. Salary is expense now. Salary is expense for us. Expense means debit balance. Bad debt. Bad debt is loss for us. Loss means debit balance. Incomes, gains. So identify the nature of account in the given problem, and based on that you classify whether it is debit balance, whether it shows debit balance or credit balance. Hope you understood. Now look at all expenses and losses accounts shows debit balance, and all incomes and gains account shows credit balance. That's it. If you have if you have the idea about this concept now, then you can classify which account shows debit balance and which account shows credit balance. The same concept we discuss here. Rules of preparing the trial balance. Look at, while preparing the trial balance, from the given list of ledger balances, in the examination problem they give you list of ledger balances, the following rules should be taken into account. First one, the balances of all assets, expenses, losses, drawing are placed in the debit column of the trial balance. Observe, debit column is nothing but this one. If you follow journal type, debit amount column. If you follow ledger type, left side, debit amount column. Next one, the balances of all liabilities, income, gains, capital are placed in the credit column. If you follow journal type, last column, that is credit column. If you follow ledger type, right hand side, amount column, credit column. Hope you are following. Next one. Here I have provided some list of accounts which shows debit balance or credit balance, and do remember the following list is not exhaustive. Okay, the following list is a inclusive one. So here you can add so many accounts. Practically we create some hundreds of accounts. So you should identify whether it is personal, real or nominal account. Look at here, to identification purpose I have given some accounts. First one, accounts showing debit balances. Generally the following accounts shows debit balance. Accounts showing credit balances. Generally the following accounts shows credit balance. Look at land and building. It is asset na, so real account. Furniture and fixtures, asset, real account. Plant and machinery, asset, real account. Motor vehicle, asset, real account. Investment asset, real account. Computers and software asset, real account. Opening inventory asset, real account. Cash in hand asset, real account. Cash at bank. Bank is artificial person. Bank is artificial person na. So bank account shows debit balance na. So personal account. Trade receivable, personal account. Purchases, expense na, nominal account. Sales return. Income reduces. Generally sales credit, sales returns debit, because sales are reducing, that's why sales returns shows debit balance. Okay, salaries and wages expense debit, rent and rates expense debit, bank charges expense debit, trade expenses expense na, nominal account debit, discount allowed financial charge na, nominal account debit, bad debts loss, nominal account debit, printing and stationery expense debit, insurance paid expense debit, advertisement expense debit. These are the list of accounts. Example purpose. Okay. Next, not exam purpose, example purpose. Okay. Now look at credit balances. Capital always shows credit balance. Why? Because proprietor is always giver of benefit to the business. Sales income credit nominal account. No, discount received income nominal account. Trade payables liability na, because they provide a credit to the business. Okay. So credit balance, personal account, bank overdraft liability credit, interest received income credit, it rent received income credit, bad debts recovered, bad debts loss debit, bad debts recovered gain credit, purchase returns, purchases account debit. But now purchase return means returns outward, we are returning goods to our suppliers, so purchase account balance gets reversed in the form of purchase returns, that's why purchase returns credit. So these are the example for identification purpose. Hope you are following. So just pause the video and revise the concept once again. Then after we discuss illustrations. Make it fast. Now we try to solve illustration problems. Illustration 1 and 2 already we have discussed from ICAI study material. These are just examples to understand the concept of trial balance. Now look at illustration 3. From the following ledger balances, do you remember they give you the account name and its balance only. With this information, we have to prepare trial balance. So here you should identify which account shows which balance. Understand? Now, while reading the problem itself, identify which account shows which balance, that is debit or credit. Look at, from the following ledger balances, prepare a trial balance of Anuradha Traders as on 31st March 2022. We already discussed trial balance is prepared as on a particular date only, and this trial balance is correct only on this particular date. Why, sir? Suppose on the next date, suppose this is 31st March 2022. On 1st April 2022, the trial balance may not be correct. Whatever the trial balance we prepared on 31st March 2022, it may not correct on 1st April 2022. Why, sir? On 1st April 2022, some transactions will happen in the business. We record them in the journal. We post them into ledger. Automatically, ledger accounts are balanced and these balances are taken to the trial balance. So, the trial balance accounts, the accounts and its balances contains in the trial balance may change. That's why the trial balance, whatever the trial balance we have prepared as on a particular date, it is correct only on that particular date. Next day, the trial balance will get changed. Hope you understood. Now, while reading the problem itself, identify which account this account is showing which balance, either debit or credit. Capital. Capital account always shows credit balance 1 lakh. Sales, it is income na, so credit balance. Purchases shows debit balance. Sales return shows debit balance, because sales credit, sales returns reverse debit. Discount allowed expense na, so debit. Like this you have to identify debit, expenses debit, trade receivables Debtors na debit balance, debtors account shows debit balance. Trade payables, creditors na creditors account shows credit balance. Investments, investments nothing but assets, assets account always shows debit balance. Cash at bank and in hand, debit balance. Interest received on investments, income na credit balance. Insurance paid, it is expense for us, debit balance. After identifying which account is showing debit balance and credit balance, now we start preparing our trial balance. Look at, first draw the format and put the heading. What is that? Trial balance of, write down, trial balance of Anuradha Traders, Anuradha Traders as on as on 31st March 2022. As on 31st March 31st March 2022. So here we write particulars, debit amount. Here particulars, credit amount or credit balance. Clear? That's it. Now we start writing debit balances on left side, credit balances on right side. Already we discussed we have two formats for the preparation of this trial balance: journal type format and ledger type format. Most cases we prepare ledger type format, okay, or journal type format also. If we prepare journal type format, it is the space, it takes some space. If you prepare ledger type format, it consumes less space. That is only the difference. Look at first one, capital. Write down the capital, credit side, that means right hand side. Capital 1 lakh. Next one, sales 1 lakh 66,000. Sales 1 lakh 66,000. Next one, purchases debit 1 lakh 50. Purchases debit 1 lakh 50,000. Next one, sales return debit 1,000. Sales returns debit 1,000. Next one, discount allowed debit 2,000. Discount allowed debit balance na 2,000. Next one, expenses 10,000. Expenses 10,000. Okay. Next, trade receivable debit 75,000. Trade receivable debit 75,000. Next, trade payable credit 25,000. Trade payable credit 25,000. Next one, investments debit 15,000. Investments debit 25,000. Oh, sorry, just a minute. 15,000. Sometimes you get a problem from this trial balance. If you get a problem from trial balance, generally you may get this problem for 4 marks or 5 marks. You will get full marks. Very, very important. Next one, cash at bank and in hand 37,000. Cash at bank and in hand 35,000. Sorry, 37,000. 37,000. Next one, interest received on investments interest received on investments. On investments. How much? 1500. Okay, next one, insurance paid expense now. Insurance paid expense 2500. That's it. Now total debit and credit. Total debit and credit. Automatically both debit total and credit total must be equal. 1,50,000 plus 1,000 plus 2,000 plus 10,000 plus 75,000 plus 15,000 plus 37,000 plus 2,500. It comes 2,92,500. Credit side, look at 1 lakh plus 1,66,000, 1 lakh plus 1,66,000 plus 25,000 plus 1,500, 2 lakh 92,500. If you get the difference in the balance, then check once again whether any mistake is committed while preparing the trial balance. Sometimes what we do is, instead of taking the balance on debit side, we may take it as credit, or instead of taking it on credit, we may take it on debit. These type of mistakes we may commit. So this is our illustration 3. Check the problem once again. Now we discuss illustration 4. In this question, you will get some important concept. What is that concept, sir? First, read the problem. After that, you can understand. Look at. And this type of problem you may get in the examination. There are most chances of getting this type of problem in the examination. Do remember. One of your clients, you are a chartered accountant, and one of your client, Mr. Singhania, has asked you to finalize his accounts for the year ended 31st March 2022. One of your clients, Mr. Singhania, has asked you to finalize his accounts for the year ended 31st March 2022. Okay. Till date, he himself has recorded the transactions in books of accounts. As a basis for the audit, Mr. Singhania furnished you with the following statement. Observe what is the meaning of these lines. Mr. Singhania himself recorded the transactions in journal. He himself posted the transactions in ledger also, and he balanced all the ledger accounts, and he also prepared the trial balance. He is providing a statement. Observe carefully the statement and identify your observations. Look at first. Singhania capital credit balance, it is correct only. Singhania drawings, that means he has withdrawn some amount. Drawings account generally shows debit balance, correct. Leasehold premises, we have taken premises on lease, it becomes asset for us. So asset shows which balance? Debit balance. Sales shows which balance? Credit balance. Due from customers means it is asset for us. Generally asset account shows which debit balance na, but here they have shown on the credit side. It is a mistake here. It's a mistake here. Yes sir. Yeah, okay. Purchases, which balance? Debit balance. Correct only? Yes sir. Purchase returns shows which balance? Actually purchase return shows credit balance, but by mistake he has shown on the debit side. So here one mistake. Next, loan from bank. Loan from bank is a liability, so that credit balance. Trade payable is a liability for us, so it is shown on the credit side, but by mistake he has shown on the debit side. Next, trade expenses, debit only, correct. Cash at bank, debit only, correct. Bills payable is a liability, it should be shown on the credit side. Here Mr. Singania committed one mistake. Salaries and wages, debit, correct. Inventories, this is 1 4 2021, whereas we are preparing we are preparing this trial balance on 31st March 2022. 31st March 2022. So the stock on 1 4 2021, the stock on 1 4 2021 is nothing but opening stock. This is called opening stock. Opening stock shows debit balance. Opening stock shows debit balance, but by mistake he has shown on credit side. So here also he has committed one mistake. Rent and rates, it is expense, shown correctly. Sales return. Sales return shows debit balance now, but he has shown credit side. How many mistakes you have identified? We have identified one. Just a minute. How many mistakes he has committed? 1, 2, 3, 4, 5, 6 mistakes he has committed. Even though he committed mistake in the bookkeeping work, but his trial balance is agreed. Look at 5454 5454, fancy number. Total debit 5454, total credit 5454. Now Mr. Singania is saying that my trial balance is agreed. My trial balance is agreed. 5454 debit total, 5454 credit total. Now what Mr. Singania will say, yes sir, my trial balance is agreed, so that I have recorded all the transactions properly. But after going through this statement, we have identified some mistakes. Na? That is what they give you in the next paragraph. Look at the closing inventory on 31st March 2022. This is nothing but closing inventory. Do remember, closing inventory generally closing inventory is not shown in the trial balance. I repeat, generally closing inventory is not shown in the trial balance. Do remember, if they give closing inventory in the trial balance, what you have to do is you have to completely ignore closing inventory from trial balance, then only you get correct answer. Okay, here they have given closing inventory 574 outside the trial balance. I repeat, it is given outside the trial balance. Mr. Singania claims that he has recorded every transaction correctly as the trial balance is tallied. Trial balance is tallied. Mr. Singania is saying that yes, everything is correct, sir, but he has committed some mistakes. No? We don't know whether the mistake he has committed in recording or posting work. Why? Because we don't have that data. By looking the trial balance itself, we are saying that he has committed some mistake. Check the accuracy of the above trial balance. Already we have checked the trial balance. Out of the trial balance prepared by Mr. Singania, we found some mistakes. Now what we have to do? We have to redraft the trial balance. We should redraft the trial balance. Okay, observe. Yes, that's it. That is the problem. This type of problem you get. Even though the trial balance is agreed, there may be some mistakes in the bookkeeping work, or there may be some mistakes at the time of preparation of trial balance itself. After going through this statement, first identify if any mistake is committed. After identifying mistake, we redraft the trial balance. We redraft the trial balance by correcting the mistakes. Hope you understood. Right. Now come to the answer. First, draw the trial balance format. Draw the trial balance format here. Illustration 4. Draw the trial balance format. First, put the heading trial balance of Mr. Singania. Put the heading trial balance of Mr. Singania. Trial balance of Mr. Singhania as on 31st March 2022. 31st March 2022. Okay, particulars or account name, account name, debit balance and credit balance. This type of format is journal type format. So statement. So one by one account we are writing. But in the above problem we have prepared ledger type format. Ledger type nothing but T-shape format. Left hand side and right hand side. But it is not an account. Do remember, trial balance is not an account. It is just a statement. It is just a statement. Do remember. Now look at, write down one by one account name. Singhania Capital correctly written. Write down Singhania Capital. Singhania's capital 1556. Next one, Singhania's drawings 564. Singhania's drawings 564. Okay. Next one, leasehold premises 750. Leasehold premises 750. Correct. Okay. If you know the problem, you can complete the problem quickly. Then you can move forward. Sales 2750. Sales 2750. Correct. Due from customer, mistake na, you correct it. Due from customers. Due from customers. How much? 530. 530. Next, purchases 1259. Correct. Purchases 1259. Correct. Next one, purchase return 264. Mistake na, correct it. Purchase return 264. Make a correction. Next one, loan from bank. Correct. 256. Loan from bank 256. Correct only. Next one, trade payable. We have committed mistake. Means Singhania committed mistake in trade payable. Make a correction. Trade payable 528. Trade payable 528. Next one, trade expenses correctly written. Trade expenses. Trade expenses 700. Correct. Next, cash at bank 226. Correct. Cash at bank 226. Correct. Next one, bills payable. Bills payable committed mistake. Make a correction. 100. Next, salaries and wages 600. Salaries and wages 600 correctly written. Next, inventories 264. Make a correction. Inventories on 1/4/2021. Opening stock now. Debit balance 264. Clear? Next one. Rent and rates 463. Correct. Rent and rates 463. Correct. Okay. Next one. Sales return 98. Make a correction. Sales return. Make a correction. 98. That's it. Everything we have written correctly. Now check the total of debit and credit. Check the total of debit and credit. Check it. First, total debit 564 plus 750 plus 530 plus 1259 plus 700 plus 226 plus 600 plus 264 plus 463 plus 98. 5454. Next, credit 1556 plus 2750 plus 264 plus 256 plus 528 plus 100. 5454. So debit side, debit balance is total 5454, credit balance is total 5454. Here you may ask a doubt, sir, before rectification also we got the same na? Yes, same 5454. That is the beauty of this problem. Before corrections, same total is same. After correction also total is same. But what Mr. Singhania did, he committed mistake by, so instead of writing debit balance, he has written in credit balance. Instead of writing credit balance, he has written in debit. Hope you understood this problem. And closing stock is not taken in trial balance. Some students, they may commit a mistake. Closing stock they will consider in the trial balance, but don't commit this mistake. If you write closing stock, then you commit a mistake. You committed a mistake. That's it. Okay. It is never shown in the trial balance, except in few cases that we discussed at the time of inventory chapter or final accounts chapter. This is our problem number 4. Observe carefully. Okay. And here we have written note points regarding the mistakes. Check them carefully. Okay. Right. Next we discuss illustration 5. Now look at illustration 5. Observe carefully. This problem also similar to illustration 4, but some extra accounts they have added. Observe carefully. The following trial balance as on 31st March 2022 was drawn from the books of fintech traders. Already they have prepared a trial balance. Whose business it is? Fintech traders. Observe. Yeah. Look at, even though here if you observe the trial balance total is 2,56,600 and 2,56,600. Trial balance is agreed na? Yes. Observe. Even though the debit and credit sides agree, the trial balance contains certain errors. They are saying trial balance contains certain errors. Check the accuracy of the trial balance. Now what we have to do? We have to go through the trial balance once and we identify the mistake and we rectify that. Means we redraft the trial balance. Observe carefully. One by one. So here if you want, so at the time of preparation of trial balance, you should have the concept that which account shows which balance. Here they are giving various accounts. You are in a position to identify this account is showing debit balance or credit balance. Then only you can prepare trial balance. Otherwise you will face little bit difficulty. Look at one by one. Building, debit, correct. Machinery, asset na, debit balance, correct. Return outward or purchase returns. Return outward or purchase return. Return outward or purchase return shows which balance? Credit balance. But they have shown on debit balance. Next, bad debt is loss. So debit, correct. Discount cash asset na, debit. Discount received is income. Income account shows credit balance. So here is a mistake. Next, bank overdraft. Bank overdraft is a liability. Here also it is a mistake. Next one, creditor. Creditor is also liability. Again it is a mistake. Next, purchases. Purchases debit balance, correct. Next, capital. Capital credit, correct. Next, fixers. Fixers is nothing but furniture and fixers. It is asset for us. So debit. It is debit. Next, sales, correct. Credit. Debtor. Debtor is debit balance na. So debit balance. Next, interest received, income, credit, correct only. Next, here they are giving some information regarding GST. GST chapter is not yet complete, but Time being, do remember. Time being, do remember that input CGST. If you see the word input, it is debit balance. Time being, do remember that if you see the word input, that is that shows debit balance. If you see the word output, that is credit balance. That is credit balance. Okay. Now observe input GST. That means CGST. CGST is nothing but Central Goods and Services Tax. Central Goods and Services Tax. So it should be shown on the debit. Next one, input SGST. SGST is nothing but State Goods and Service Tax. It is also debit. Next, input IGST. IGST is nothing but Integrated Goods and Service Tax. We discuss in the next chapter. Don't worry. So it is also debit. It is also debit. Next one, output CGST. I said output means credit. Output CGST, Central Goods and Service Tax, credit, mistake. Next, output SGST, credit, mistake. So these are the various mistakes we have identified. Now what we have to do is we have to redraft the trial balance. We have to redraft the trial balance. Look at everybody. Now take one by one. Write down trial balance of fintech traders. Trial balance of fintech traders as on 31st March 2022. As on 31st March 2022. Okay. Now account name. Here also we are preparing the trial balance in a journal type format. Debit balance, credit balance. Clear? Now next one. See one by one. Building correct only 60,000. Building 60,000 correct. Next, machinery 17,000. Machinery 17,000. Next, purchase return outward or purchase return 2,600 credit. Whatever the account head they have given, write down the same. Return outward 2,700. Next one, sorry, 2,600. Next one, bad debt is lost 2,800. Bad debts 2,800. Next, cash 400 correct. Cash 400 correct. Next, discount received 3,000 credit. Discount received 3,000 credit. Okay. Next one, bank overdraft 10,000 credit. Bank overdraft 10,000 credit. Clear? Next, creditor 50,000 credit. You people also try to solve this quickly. Creditors 50,000 credit. You need written practice, students. Don't forget that. Don't forget to write written practice. To have written practice. Okay. Purchases 1 lakh debit. Purchase 1 lakh debit. Correct only. Next, capital 73,600. Capital 73,600. Next, fixers debit balance 5,600. Fixers 5,600 debit. Okay. Next, sales correct 1 lakh 4,000 correct. Sales 1 lakh 4,000. Next one, debtors 60,000 correct. Debtors 60,000 debit. They committed mistake, we rectified it. Next, interest received credit correct. Interest received 2,600. Next, input CG interest received 2,600. Input CGST, I already said input means debit balance. Why it is? We discussed in the accounting for GST chapter. So, input CGST 3,000. Input CGST 3,000. Next, what we have? Input SGST. Next, we have input IGST. Next, we have output CGST. Next, we have output SGST. Okay. So, input all debit balances. Look at 3,000, 3,000, 4,800. Output credit balance 5,400 and 5,400. That's it. Observe. Now, total debit and credit. Now, total debit and credit. Take out your calculators and do it quickly. Don't simply copy paste, students. You people calculate on your own. You need calculator practice also, na? 5,600, 60,000, 3,000, 3,000, 6,000, 4,800, 10,800 total. It is 2,56,600. 256,600. Now credit, observe. 2,600 plus 3,000 plus 10,000 plus 50,000 plus 73,600 plus 104, which means 1,04,000 plus 2,600 plus 5,400, 5,400, 10,800. 256,600. That's it. This is our problem number 5. Observe carefully. And look at previously, what is the total? Same total, 256,600. 256,600. 256,600. Now also, what is the total? 2,56,600. Before correction, same total. After correction also, same total. Observe carefully. Okay, this is our problem number 5. Next we solve practice question 1. Practice question 1. Look at practice question 1. That means we have total only 5 illustrations. 5 illustrations. Out of them, first and second illustrations are just to understand the concept of trial balance. Remaining problem 3, 4, 5 already we have solved. Now we try to solve practice question 1. Practice question 1. Look at everybody. Now look at practical question 1. This is also similar to illustration 4 and 5, but observe carefully. Now they are giving account head, debit and credit. This is the trial balance. Now what they are asking, required, draw up a corrected trial balance. Corrected trial balance, nothing but we go through the trial balance and we observe whether any mistakes are there and we try to correct it. Debiting or crediting any residual errors to a suspense account. To a suspense account means what? Already we discussed about suspense account now. While preparing the trial balance, if the total of trial balance does not agree, even though everything is correct, then temporarily we make the trial balance agree. I repeat, temporarily we make the trial balance agree that the difference between debit and credit is transferred to a new account, suspense account. Okay. Now observe this problem carefully, very important. I already said this type of problems you get in the exam, like illustration 4, 5 and practical question 1. This type of problems you get in the examination. Now observe first account head, provision for doubtful debts. Time being, do remember all provision accounts shows credit balance. Regarding provision for doubtful debts, we discuss final accounts chapter. In the final accounts chapter. Meantime, do remember provision account shows credit balance, but here they committed a mistake. Next, bank overdraft already we discussed. This is also credit balance. Capital correctly written credit. Trade payables correctly written credit. Trade receivable debit correct. Discount received is income, credit na mistake. Discount allowed expense debit. So here they committed on one mistake. Drawings anyway debit correct. Office furniture asset debit. General expenses expense na expense account shows which balance, debit balance. Purchases correct, debit balance. Return inward or sales returns. What is the other name for this? Sales returns. Sales returns shows which balance, debit balance. Here they committed a mistake. Rent and rates debit only correct. Salaries correct. Sales correct. Debit na inventory debit. Provision for depreciation on furniture. I already said provision. The word, if you see the word provision, it is debited 364. Sorry, credit na credit. Make a correction. Now if you observe in illustration 4 and 5, illustration 4 and 5, the total debit and credit is correct before rectification and after rectification. But here if you observe, the total debit is 24,983. Here the total credit is 25,002 rupees. Observe this problem. Go through the problem once again. Go through the problem once again. In this problem, you may ask a doubt. What is that? Sir, here they have given inventory. Here they have given inventory. Whether it is opening, whether it is opening inventory or closing inventory. They did not mention anything regarding this inventory, so that we assume it is opening inventory. Sir, can I assume it as closing inventory? No. If it is closing inventory, they will give you clear instruction. That's why we assume it is opening inventory. Opening inventory shows debit balance. If it is closing, if suppose if they have given this as closing inventory, then we ignore this from the trial balance, because closing inventory is always shown as an outside trial balance item. It is not shown generally in the inside the trial balance. Do remember. Now draw the format of trial balance. Draw the format. Yeah. Here we have practice question 1. Trial balance of who is the owner here? Yeah, owner name is not given. Owner name is not given. Here in this problem, one small line is missed. So look at that line here. An inexperienced bookkeeper. An inexperienced bookkeeper has drawn up a trial balance for the year ended 30th June 2022. Everything is correct, but this line is missing here. So an inexperienced bookkeeper has drawn up a trial balance for the year ended 30th June 2022. Now what we have to do? We will draw a corrected trial balance. So take the date 30th June 2022. Trial balance of so and so business as on 30th June 2022. Okay, here we write account head or account name, debit balance, credit balance. Okay, now start writing one by one. Provision for doubtful debts 200 credit. Provision for doubtful debts 200 credit. Next one, bank overdraft 1654. Bank overdraft 1654 credit. Next one, capital 4951. So here they have given odd amounts. So be careful while writing the amounts. 4591. Next, trade payable 1637 correct. Trade payable 1637. Next one, trade receivable 2983 correct. Trade receivable 2983 correct. Next one, discount received 252. Discount received. Discount received 253 credit. 252, not 253, 252. Okay, 252 over. Next one, discount allowed 733 debit. Discount allowed 733. Clear? Next one, drawings 1200 correct. Drawings 1200 correct. Next one, office furniture 2155 correct. 2155 office furniture. Office furniture 2155 correct. Next one, general expenses 829. General expenses 829. Next one, purchases 1093. 10923 purchases correct. Here there is no mistake. Next one, return inward 330 or sales return. Returns inward 330. Next one, rent and rates 314. Rent and rates 314. Next one, salaries 2520 correct. Salaries 2520 correct. Next one, sales 16882. Sales 16882 credit now. Next one, inventory 2418. Inventory 2418 debit correct. Next one, provision for depreciation on furniture 364 credit now. Provision is credit 364. Provision for depreciation on furniture. On furniture. Time being, do remember, provision account shows credit balance. What is this provision? Why it is showing credit balance? All these things we discuss in the final accounts chapter. Next step. That's it. Whatever the items they have given, all the items are taken to the trial balance on appropriate side. Now, simply total the trial balance and identify the difference, and that difference is taken to the suspense account. They said in the problem clearly, what any difference you identify in the trial balance, then that amount is transferred to the suspense account. Already we discussed about suspense account now total it. Total debit, first total debit 2983 plus 733 plus 1200 plus 2155 plus 829 plus 10,923 plus 330 plus 314 plus 2520 plus 2418. So total is 24,405 debit. Now total credit 200, 1654, 4591, 1637 plus 252 plus 16882 plus 364. Total 25,580. Observe. Total debit 24,405. Total credit 25,580. Which side is more? Credit is more. Write down the same here. 25,580 credit more. Minus by how much it is more? 24,405. So the difference is 1175 short debit. So credit is excess, debit is short. By how much? 1175. This we write as suspense. Because it is suspense now. Because it is suspense. Why this difference is? Why this difference is? That is suspense. We don't know why this difference is. This is very, very important. The whole problem lies in this balance. So after that we write 25,580. Very, very important. That's it. This is our problem. You may ask, sir, then how to deal with this suspense account balance? We try to rectify. First, we try to locate the error, and that error gets rectified slowly. Once the errors are located and rectified, automatically this suspense account balance gets closed. And this concept we discuss in rectification of errors. In rectification of errors chapter. Okay. So look at this problem. This is problem practice question 1. Observe carefully. Okay. Next we discuss true or false statements. Hello students, how are you all? I hope you are doing well. In the previous lectures, we have discussed and completed the chapter of trial balance. Now we start a new chapter, that is subsidiary books. Subsidiary books. Observe carefully. In the first chapter we have discussed, that is basics of accounting. Second chapter, journal entries. Third chapter, ledgers. Fourth chapter, trial balance. Now we discuss the chapter of subsidiary books. Sir, what is this concept of subsidiary books? It is not a new concept, students. It is not a new concept. Sir, what are you talking, sir? Yes, observe carefully. In any business organization, we have different transactions. The business will enter into transactions. Depends on the size of the business organization. I repeat, depends on the size of the business organization. The transactions may be more or less. The transactions may be few, or the transactions may be moderate, and the transactions may be more. Large number of transactions. Large number of transactions. Observe carefully. Here we are talking in terms of numbers, number of transactions. See, if you take a small business near to your house, let us for example take one grocery store. How many transactions he enter into in a day? Means purchase of goods. He will purchase goods now from various suppliers and he will sell. Each sale is considered as a separate transaction. Each purchase is considered as a separate transaction. Apart from these, he collect cash from debtors, means to whom he earlier sold goods on credit, and he may pay some amounts to the suppliers, and he incurs some expenses, and also he enter into the transactions with bank. Like this, there are so many transactions he will enter in a day. depends on the size of business organization. The number of transactions may be, for some organizations the number of transactions may be less, some organizations the number of transactions may be comparatively more in the previous case, okay, compared to previous case. And in case of large organization, in case of big size organization, the number of transactions are very more large number of transactions. If you take for example Dmart will sell goods to various customers in a day. If you observe some hundreds of transactions, some hundred, see, each sale is considered as a transaction. So Dmart will enter into so many sale transactions. At the same time, they will purchase goods from different suppliers and they will pay so many payments. When the it is a, if it is small business, the number of transactions are very few or limited, then it is better to maintain only one journal to record the transactions. Only one journal to record the transaction. But when the business organization is it's a large scale business organization and the number of transactions are huge, in that case, if we record all the transactions in one journal, then it becomes very overburden on the bookkeeper, because we are maintaining only one journal can be handled by only one person at a time. I repeat, we are maintaining one journal and we are recording all the transactions mean purchase of goods, purchase of assets, sale of goods, sale of assets, cash receipts, cash payments, and various other transactions. All transactions we are recording in one book, that is journal. And this journal can be handled by only one person. In a day, if we enter into some thousand transactions, think from a bookkeeper point of view, is it possible to record all these 1000 transactions in this single book by this single bookkeeper? In that case, it becomes very very difficult to handle this journal book. That's why what we do is, in case of a large scale business or medium scale business where the number of transactions are comparatively more, then instead of maintaining one single journal, we maintain multiple journals. I repeat, multiple journals. Multiple journals. And these multiple journals are called subsidiary books. Subsidiary books. Understood? Instead of maintaining one book, we maintain some different books, 2 books, 3 books, 4 books, or 5 books, or even 10 books also. And each book is kept for a specific transaction. I repeat, each book is kept for a specific transaction. Okay, I will give you one example. In our CA foundation level, we have how many papers? 4 papers, sir. 4 papers. How many subjects we have? Accounts, law, mathematics, statistics, reasoning, economics. So 5 papers we have now. 5 papers. Sorry, 5 subjects. Okay, 4 papers, 5 subjects. Yes or no, students? 4 papers, 5 subjects. Sorry, 6 subjects. 4 papers, 6 subjects we have. Now, generally, what you people will do is, you people maintain one notebook for each paper or for each subject. For each subject, one notebook for each subject you people maintain now. Some people they will maintain one book for all, that is all in one book. All in one book. That all in one book is nothing but journal, one single journal. Here what we do is, we identify a specific nature of transaction and we maintain a separate book to record those specific transactions. For example, in a business you take, most of the transactions are relating to purchase of goods. Mine is a trading business and most of the transactions are related to purchase of goods. and sale of goods, cash receipts and payments, cash receipts and payments, and sometimes we return the goods, purchase returns, and customers may return the goods, sales returns. Most of the transactions are like this. Observe, frequent transactions. Purchases are very frequent. Sale transactions are very frequent transactions. Yes or no, students? Yes. Now what we do is, I will maintain one separate book for recording purchase of goods, one book for recording sale of goods, one book for recording purchase returns, one book for recording sales returns, one book for recording cash receipts and cash payments. Like this, instead of maintaining one single journal, what we do is we maintain various journals. Various journals. So one journal is divided into sub journals. One journal is divided into sub journals. These sub journals are called subsidiary books. This sub journal is called subsidiary books. Clear? So what happens here? Earlier we maintained only one book na. This is handled by only one person. Now we are maintaining multiple journals na. Multiple journals. So multiple journals can be handled by multiple persons. Multiple journals can be handled by multiple persons. One person can handle purchase book, another person can handle sales book, another person can handle purchase returns book. So one person can handle purchase and purchase return, another person can handle purchase sales and sales return, another person can handle cash book, cash receipts and payments. He will record cash receipts and payments. Like this we can assign one specific task to one person, so that the account bookkeeping work gets completed fast. Bookkeeping work gets completed fast. Hope you are following. So that we can complete our accounting work fast, because accounting depends on bookkeeping. Accounting starts where bookkeeping ends. So this is the practical system of accounting. Practically every business will follow this system only. Instead of maintaining one single journal, the businesses will maintain various sub journals. This is the concept of subsidiary books. In the second unit, journal entries chapter, what we understand, whatever the transaction happened, all those transactions are recorded in one single journal. But in this chapter, what we do is, we learn how to maintain various subsidiary books or various sub journals. So to put it simple, this chapter is simply an extension to journal entries chapter. This chapter is just an extension to journal entries chapter. Is it clear, students? Now observe. Now look at the concept of subsidiary books. Look at everybody. Subdivision of journal. In business, most transactions generally relate to receipts and payments of cash. This is one type of transaction. Sale of goods and their purchases. Most of the transactions are like this only. It is convenient to keep a separate register, separate book or separate journal for each such class of transactions. For example, one for receipts and payments of cash, one for purchase of goods, and one for sale of goods. Already we discussed this. A register of this type is called book of original or prime entry. Journal book is called book of prime entry. In the same manner, subsidiary books are also called book of prime entry or books of original entry. Why? Because whenever the transaction is happening, we are recording those transactions in the subsidiary books. Subsidiary books nothing but, instead of maintaining one single journal, we are maintaining different journals for different purposes. As we are maintaining each one notebook for one subject, now for accounts subject one notebook. In that notebook, whatever you write, it is relating to accounts only. Second notebook for law subject. In that notebook, whatever you write, that is relating to law only. Another book, mathematics. So whenever accounts class happens, you open that accounts book and you make a record it. Whenever law class happened, you open law book and you make a record on law book. I hope you are following. Here also same. Sir, how many books we maintain? That we discuss. How many books we maintain? We can maintain as many number of books as possible to minimize our accounting work. Okay, now look at. But standard we maintain 8 subsidiary books. Standardly we maintain 8 subsidiary books. 8 subsidiary books. If you want to maintain more than 8 subsidiary books, you can. Or if you want to maintain less than 8 subsidiary books, you can. But standard, we have 8 different subsidiary books. What are they? We discuss. Okay. Now look at. These books of original or prime entry are also called subsidiary books. Subsidiary books. Why it is called subsidiary books? Since ledger accounts are prepared on their basis without further processing of ledger posting. Observe carefully. In the journal chapter, we recorded the transaction in the form of debit and credit. From journal, what we did, we have posted into ledger. Here also same. The transaction, whenever the transaction happened, that first we record in the subsidiary books. From the subsidiary books, we post into ledger. Here we are not deviating the concept of double entry system. Do remember. As per double entry system, we have two aspects. Now, each transaction has two aspects. One is debit, another one is credit. In the journal chapter, we recorded the same debit aspect, credit aspect. In the subsidiary books also, we follow the same system. That's why subsidiary maintaining subsidiary books means it is not violation of double entry system. That's why most of the businesses are following this subsidiary books concept. Next, the transactions recorded in such books will not require journal entries. Once the transaction, suppose I have purchased goods. Suppose if this transaction is recorded in the purchase book, again you need not to record a journal entry, separate journal entry you need not to record. Okay, to minimize the accounting work, only we are maintaining subsidiary books. Wait for a few minutes, then you can understand the real concept of subsidiary books. Okay, students, next concept. Practical system of bookkeeping. Why it is called practical system of bookkeeping? Because we are following this manner only practical also. Okay, most practical system. Because if you follow this system now, we can minimize our bookkeeping work and we can maintain various books now, so that various people can handle this book. Specialization. Uh, each person will become specialized. Because I am handovering purchase book and purchase return book to you. So what you will do, you will record all the purchase transactions in the purchase book, returns transactions in the returns book, so that you will get ready made information. Na? Next, the system by which transactions of a class are first recorded in a specified book, nothing but subsidiary book, specially meant for it, and based on which ledger accounts are then prepared, is known as the practical system of bookkeeping, or even English system. It should be noted that under this system there is no departure from the rules of the double entry system. Why? Whenever transaction is happened, we are recording in the subsidiary books and we are posting there from subsidiary books to ledger. That's why there is no departure from double entry system. Okay, now look at different types of subsidiary books. First one, cash book. I am maintaining a book. In this book, I will record only cash transaction. Whenever I pay cash or whenever I receive cash, I will record this transaction in the cash book. Receipts and payments of cash, including receipts into and payments out of bank, will be recorded in the cash book. And this cash book we discuss as a separate chapter. After subsidiary books, we discuss the next chapter, cash book. There we will discuss this chapter, this concept, cash book. Next one, purchases book. Whenever we purchase goods, we record all those purchases in the purchase book. Look at, but here if you observe, business will purchase goods At the same time, assets. At the same time, assets. Goods may be purchased on credit at the same time for cash. Assets also can be purchased for cash on credit. Hope you are following. Now, in this purchase book, what we record? Credit purchase of goods. Recorded in purchase book. Only goods purchased on credit are recorded in the purchase book. No other transaction is recorded. Very, very important. In the accounts notebook, you record only information relating to accounts now. Yes, in the purchase book also we record only goods purchased on credit. Other transactions are not recorded. Then what about cash purchase of goods and cash purchase of asset? Recorded in cash book, because these are cash transactions. And what about purchase of asset on credit? This is recorded in the journal proper or general journal. Journal proper or general journal. Do remember. Next one. Observe purchase book. Credit purchases of goods dealt in or of the materials and stores required in the factory. If my business is a trading business, then I will deal with the finished goods. If my business is a manufacturing business, what I have to do first? First, I have to purchase raw materials, and these raw materials are converted into finished goods. In that case, purchase of raw material also recorded in the purchases book. That is the meaning of that. Next, purchase returns book. Purchase returns book. And whatever the goods we have purchased on credit, I repeat, whatever the goods we have purchased on credit, if we return those goods to the suppliers, then we record it in the purchase returns book. What about goods purchased on cash, for cash? Suppose I have purchased goods for cash and I am returning those goods. Yes, if you return those goods, you get your money back now. You get your cash back. That means it is a cash transaction. So that it is recorded in the cash book. So here the important concept is understanding the book nature. Which type of transaction is recorded in this book? See, suppose in a problem they have given 10 transactions. In a problem they have given 10 transactions. Now they have asked like this: record these transactions in the subsidiary books. Record these transactions in the subsidiary books. Now first you have to analyze the nature of transaction, whether it is purchase or sale or purchase return or sales return or cash transaction. What is the nature of transaction? Purchase also, is it purchase of asset or purchase of goods? If it is purchase of goods on credit, then only I will record this transaction in the purchase book. If it is sale of goods on credit, then I will record the transaction in sales book. This is how we have to analyze. Okay. Again, anyway, we discuss about each book separately and we solve some problems also. Don't worry. Next, look at sales book. Like purchases, business will sell. Like purchases, business will sell goods and assets. If asset becomes old or outdated, then the business will sell asset now. Goods may be sold either for cash or on credit. At the same time, assets also can be sold either for cash or on credit. Is it clear? Now, in the sales book, we record goods sold on credit. Goods sold on credit are recorded in sales book. Now what about cash sale of goods and cash sale of asset recorded in cash book, because it is the nature of cash transaction na. By selling goods for cash we receive cash, by selling goods on by selling assets for cash we receive cash, so it is a cash transaction. What about sale of asset on credit? It is recorded in journal proper. It is recorded in journal proper. So analyzing the transaction is very very important, whether it is credit sale of goods or cash sale of goods or cash sale of asset or credit sale of asset. Based on that we record the transaction in a separate book. Now we are discussing about sales book. Tell me which transaction we record? Credit sale of goods. Apart from this, no other transaction is recorded in this book. Hope you understood. Next, suppose after completion of your CA Inter, now the next step is articleship. What you have to do? You have joined in a firm, medium sized firm. The first and foremost thing you will do is vouching. Nothing but they will give you some vouchers, some documents, source documents. Now what you have to do? You have to record these transactions in the computer. Journalizing, nothing but journalizing. Now first we receive the voucher and we see that whether this is credit purchase of goods or credit purchase of sales, sorry, credit sales or cash purchase or cash sales. What is the type of transaction it is? Based on that we record this transaction in the computerized environment softwares. That I will show you. I already said I will show you Tally software. By using Tally software, how we record the transactions in the computer, that I will show you. Wait for some time. Next one, sales returns book. Earlier we sold goods on credit na. Now if any customer returned those goods, we record this transaction in sales returns book. Goods returned by the customer to whom goods were sold on credit previously. Suppose we sold goods for cash. Now customer is returning those goods. Yes, we take back goods and we give cash to him. So it's a cash transaction na. It is recorded in the cash book. Next, bills receivable book and bills payable book. These two topics are pending. Why? Because these two topics we discuss in the chapter of bills of exchange and promissory note. There we discuss in detail about bills receivable and bills payable. Okay. Next one, journal proper. Now we discussed about 7 books: cash book, purchase book, purchase return book, sales return book, bills receivable, bills payable. 7 books now. If any transaction is not recorded in the above 7 books, I repeat, if any transaction is not recorded in the above 7 books, that transaction we record in journal proper. The transactions which are not covered in the above books. For example, sale of asset on credit, sale of asset on credit. It is not recorded in cash book, sales book, purchase returns book, sales returns book, bills receivable book, bills payable book. In which book we record? Journal proper or general journal or general journal. At the same time, purchase of asset on credit, it is not covered anywhere else, so that we record this in the journal proper. Like this we have so many transactions which can be recorded in the journal proper. We discuss in detail about journal proper later. So this is the basic introduction to subsidiary books chapter. This is the basic introduction to subsidiary books chapter. Now what you do is pause the video and go through the concept which we have discussed till now. Then after we start our discussion with the purchases book. Do remember students, from this chapter you may get a question for 4 to 5 marks. In the previous attempt, January 2025, we got sales book, preparation of sales book, sales returns book, preparation of sales returns book. So in that case it is easy to get 4 to 5 marks. So that's why be careful. This chapter is very very important, important and easy chapter. Okay, make it fast. Now we discuss purchase book. Observe carefully. Here look at note point. In all the above cases, the word journal may be used for the word book. Means here cash book, in the place of cash book we may write cash journal, purchase returns journal, sales returns journal. At the same time, bills receivable journal, now bills payable journal, general journal, general journal. Like this also we can write. Now look at purchases book. Purchases book. Already we discussed in this book which type of transaction is recorded. Goods purchased on credit. See, different businesses will deal with different types of goods. Suppose my business is a second hand car dealer. Now, second hand cars which I purchase, they become goods for me. Suppose my friend business is a furniture dealer. Now, whatever the furniture he purchased for resale purpose, they will be considered as goods. Okay, if these goods were purchased on credit, then only we record this transaction in the purchases book. Otherwise, don't record any transaction. Look at purpose to record the credit purchase of goods dealt in or materials used in the business. It is also called purchases journal. This book is also called purchases journal. Next one. This book does not record goods purchased for cash and purchases of items other than goods or materials. We have already discussed this. What is that? Goods purchased for cash. At the same time, goods asset purchased for cash, asset purchased on credit, they will not be recorded in the purchases book. Next, to record, see in the journal entries chapter, we discussed about source document. I repeat, source document. Without source document, it is not possible to record any transaction in the books of accounts. Without a source document, it is not possible to record any transaction in the books of accounts. So, to record this purchase transaction in the purchases book, what is the source document we have? Means inward invoice or purchase invoice. Inward invoice or purchase invoice. Whenever we purchase goods, we receive one invoice bill, na? Purchase bill we receive. Based on that document, we record the entry in the purchases book. Look at entries in the purchases book are recorded based on purchase invoice received from the suppliers with the cost of goods. Now, what is the format of purchase book? Normally, what is the format of journal? Date, particulars, ledger folio column, debit amount, credit amount. Yes or no? But here the purchase book format is different. What is that? Date. Same. Date column. In the date column, we write the date of transaction. Particulars. Normally, in the purchase book, sorry, in the journal chapter, particulars column, what we have recorded? What we have recorded? We have recorded that, suppose, goods purchased on credit. Goods purchased on credit. How we recorded the transaction? Purchases account debit. Purchases account debit to creditor account or supplier account. This is how we recorded the entry in the journal. But when it comes to subsidiary books, now recording is different. We will not record the transaction like this. Like this. Why? Because our book is what? Purchase book. In the purchase book, you need not to write separately purchase account debit. In the purchase book, you need not to write separately purchase account debit. Then what we write, sir? Simply, we write the creditor name or supplier name from whom we purchased goods. That's it. After writing supplier name, we write the details of goods also. Details or description of goods. Details or description of goods purchased. Once we discuss illustration 1, then you can understand. I repeat, normally when we purchase goods on credit, this transaction is recorded in the journal purchases account debit to supplier or creditor account. But the same transaction, how we record in the purchases book, tell me. In the purchases book, separately we will not write purchases account. So purchases account completely eliminated. Then what we write now? We write the creditor or supplier name along with the details or description of goods purchased. which item you have purchased, what is the quantity you have purchased, and what is the rate per unit. All these details we show in the purchases book. Very, very important. Okay, now look at third column, inward invoice number. Third column, inward invoice number. Whatever the invoice we receive from supplier, that invoice number we write here. Next, details. We write description of goods now. 2 3 items we purchase, and 2 3 items we write, and individual amounts we write in the inner column. And sometimes the supplier allows trade discount now, that trade discount also we deduct, and after deducting trade discount, remaining net amount is written in the amount column, outer column. So recording in the subsidiary books is completely different from recording the transactions in the journal. So that is the difference you identify between journal chapter and subsidiary books chapter. Look at explanation of the format. The date of transaction. First column we write the date of transaction. Second column we write the supplier name along with the details of items or articles purchased. Third column, invoice number is entered in this column for future reference. Whatever the bill we receive, invoice we receive, that invoice number we write. Next, the amount in respect of each article is entered. After totaling the various amounts, including a single purchase, the amount of packing or other charges is added and the amount for trade discount is deducted. Next one, the net amount is entered in this column, fifth column. The net amount is entered in the fifth column. This column shows the total amount of goods purchased on credit. The total of this amount column shows total goods purchased. Once we try to solve now illustration 1. After solving illustration 1, then all your doubts gets clarified. Why? Because you have in your mind that how this book is recorded, and what is the difference between recording transaction in journal entries chapter and recording the same transaction in subsidiary books chapter. We are unable to understand, sir. Don't worry, students. Look at illustration 1. Observe illustration 1. Now we discuss illustration 1. If you observe that, automatically you can understand the difference between recording the transactions in journal entries and recording the same in the subsidiary books. Now just pause the video and go through this small content once again. Then after we start discussing illustration 1. Make it fast. I hope you understood illustration 1 and illustration 2, students. Illustration 1 and illustration 2. Illustration 1, we understood how the transaction of purchase of goods on credit is recorded in the purchases book. Observe. Now you come to know that the difference between recording transaction in journal and recording the same transaction in the subsidiary book, how it is different. Okay, in illustration 2, what we understood is we recorded the transaction in purchase book as well as we posted them into various ledger accounts. And we also understood how the accounts are, how we post from subsidiary books to ledger. Okay, and in illustration 2, what we understood, whenever our supplier charges freight in addition to the purchase price, then it is better to maintain one freight column in the purchase book itself. One freight column in the purchase book itself, and the total of freight account is posted to the debit of freight account. The total of freight column. The total of freight column is posted to the debit of freight account. Observe carefully. Now, once you understand illustration 1 and illustration 2, then come to the concept of here posting from the purchases book. Posting from the purchases book. Already we understood in illustration 2 how to we post, but theoretically we discuss. Individual amounts. Individual amounts are posted from purchases book to the supplier's account credit side now, like by purchases. Simply by purchases. Look at individual amounts are posted to the credit of supplier's accounts by writing by purchase account in the particulars column. Now, after completion of individual postings, now total of subsidiary book. Which book we maintained? Purchases book. Which book we maintained? Purchases book. So purchases book is totaled periodically, and posting of periodic total. Posting of periodic total, simply the total periodic total of purchase book is posted to the debit side of purchase account by writing two sundries as per purchase book in the particulars column. This also we understood. The total of purchase book column indicates that total goods purchased on credit for a particular period of time. Yes or no? Yes, sir. Now, next important points while recording in the purchase book. Already these points also we understood while solving problem number 2, illustration number 2. Observe trade discount. How do we consider trade discount? Tell me, while preparing the purchase book. Trade discount is deducted from purchase cost, list price of the goods in the details column. Now, after deducting trade discount, the remaining amount is written on the in the amount column. That is regarding to trade discount. Next, freight paid on the purchase of goods. What we did? We have added one separate column for freight, and the total of freight charged by supplier is posted to the debit of freight account. That is regarding freight paid on the purchase of goods. Next, packing and forwarding expenses. See, sometimes our supplier may charge additional amount for packing and forwarding expenses. For this also, if supplier charges this as a tradition, then we add packing and forwarding expenses column to the purchase book, like freight column, and the total of packing and forwarding expenses are posted to the packing and forwarding expenses account debit side. These are the very important points while you are preparing purchases book. Now come to the next book, that is purchase returns or returns outward book. Purchase returns or returns outward book. Purchase book purpose. What is the purpose of purchase book? Tell me. To record the credit purchase of goods. Now purchase returns or returns outward account purpose. Simple. To record the goods returned to the suppliers which were purchased on credit earlier. Earlier we purchased goods on credit. Now we are returning them. So we are recording this in a separate book. That book is nothing but purchase returns book. Observe purpose. To record the returns of goods or materials to the supplier purchased on credit previously. However, if the returns are not frequent, if we return frequently goods to the suppliers, then it is better to maintain a separate purchase book. If the returns are not frequent, then unnecessarily why should we maintain a separate book? In that case, it is better to record this transaction in the journal proper. It is better to record this transaction in the journal proper. If any particular transaction is not frequent, then no need to maintain a separate book. It is better to to record this transaction in the journal proper. Okay, they may be recorded in the journal proper. Fine. Source document, very important, students. Entries in the purchase returns book are recorded based on debit notes. Based on debit notes. I will explain debit note. What is debit note? Now wait. Debit note issued to the suppliers. Now you people tell me, whenever we purchase goods, I repeat, whenever we purchase goods, supplier issues a document. What is that document? Purchase invoice. From supplier point of view, it is sales invoice. From purchaser point of view, it is purchase invoice or inward invoice. Now what we are doing? We are returning goods to the suppliers. I repeat, we are returning goods to the suppliers. When we are returning goods to the suppliers, then we prepare a document. When we are returning goods to the suppliers, then we prepare a document. That a document contains the details of supplier information and buyer information, our information, plus the date of returning goods, plus which how much quantity you are returning, which article you are returning, what is the rate previously charged, any tax charged or any discount allowed earlier, what is the reason for return, what is the reason for return. All these details we have to mention in a document, and that document is called debit note. That document is called debit note. Sir, why it is called debit note? I will give you one example. Look at, when we purchase goods, what is the entry we record? When we purchase goods, what is the entry we record? Purchase of goods. Tell me, purchases account debit, purchase account debit, purchase account debit, let us say 1 lakh to ABC limited account 1 lakh. This is the entry for credit purchase. Now we are returning some 5,000 worth of goods. Purchase returns. Purchase returns rupees 5,000. Then what is the entry we record? You people tell me normally what is the entry we record? Supplier account debit, ABC limited account debit. How much worth of goods returned? 5,000 to purchase returns account. Purchase returns account 5,000. Yes or no? So whenever we are returning goods to the suppliers, his account is debited in our account. His account is debited in our account. When a supplier account is debited in our account means you need not to pay this amount to the supplier. Tell me, earlier how much amount is credit? 1 lakh. Now how much amount is debit? 5,000. What is the net amount here? 95,000. Now we have to pay only 95,000 to the suppliers. To indicate this fact, we are issuing a debit note. So indirectly we are mentioning that, hello Mr. Supplier, your account is debited in my books, so that I need not to pay this much of amount 5,000. Remaining 95,000 I have to pay. So this document is named as debit note. Whenever we return goods to the customers, we take reference of debit note and we consider this debit note as a source document, and we record the transaction in the purchase returns book. I hope you understood this document. Debit note, very very important. Next one, debit note. Look at concept. A debit note is a document prepared by the purchaser. Who will prepare a debit note? Tell me. Purchaser, to inform the supplier that his account has been debited with the amount mentioned and for the reason stated therein. Why we are returning goods? The return may be due to defective, we received defective goods or damaged goods or undesired goods, means we have not at all ordered those goods but received. In that case we return them. Okay, next, it contains the date of return, name of supplier to whom the goods have been returned, details of the goods returned, reason for returning, all those things, all the details we mentioned in the debit note. Okay, each debit note is serially numbered. That number we record in the debit note. So sorry, purchase returns book. This is regarding purchase returns book. Now look at the format of purchase returns book. Purchase return book format is similar to purchase account, with the exception that date column, in the purchase book what we record? Date of purchase. Here what we record? Date of return. Particulars column, in the purchase book what we record? Supplier name and goods purchased from him, from them. Here what we record? Supplier name to whom we are returning goods plus the details of the goods returned. The details of the goods returned. There we write inward invoice number as for reference. Here we write debit note number as a reference. Details column, amount column, same. Now total of purchase book amount column indicates total goods purchased on credit from various suppliers. Here total of purchase return book column, amount column, shows total goods returned to various suppliers, or total amount of goods returned to various suppliers. This is the purchase return book format, or returns outward book format, and its explanation. Now posting from purchase returns book to purchase various ledger accounts we try to understand by solving some problems. Now, pause the video and read this content till now whatever we discussed. Just revise once again. Then after we discuss some problems on purchase returns book. Make it fast, students. This chapter is very very important and very very easy chapter. Okay, make it fast. In the previous videos, we have discussed illustration 4 and illustration 5. Illustration 5 is on the concept of preparation of purchase returns book, whereas illustration 4 is on the concept of preparation of ledger accounts from returns outward book. These two problems we have solved. Is it clear, students? Now, come to the next book, that is sales book. Before understanding what is sales book, look at posting from purchase returns book. Already we understood this concept by solving illustration 4, but theoretically we discuss now. Individual postings, what we did individual posting. In the purchase returns book, whose names we have written, supplier names. So purchase book, from purchase book we posted to supplier's account credit side now. Now from purchase returns book we post to the debit side of supplier's account. Okay, individual postings. It is debited to the supplier's account in the ledger. Now periodic posting of purchase book is posted to the debit side of purchase account. Now periodic total of purchase returns book is posted on the credit side of purchase returns account. That is a periodic total. Already we understood this concept by solving illustration 4. Now come to the next book, that is sales book. Already we understood which transactions we record in the sales book. Business may purchase goods as well as, business may sell goods as well as assets. Goods are sold either for credit, either on credit or on for cash. Assets are sold for a cash or on credit basis. Now, in the sales book, which transactions we record? Means very simple. Goods sold on credit will be recorded in the sales book. I repeat, goods sold on credit will be recorded in the sales book. No other transaction is recorded in sales book. Hope you understood. Now look at, what is the purpose of maintaining sales book? Tell me. When the sales are frequent, then we record all these goods sold on credit in the sales book. The sales book is a register specially kept to record credit sales of goods dealt by the firm. Goods sold for cash and sale of items other than goods or materials are not recorded in this book. At the same time, which source document we use to record the transaction in the sales book? Means we use outward invoice or sales invoice as source document to record the sales transaction in the sales book. Look at source document. Entries in the sales book are recorded based on sales invoices issued to the customers. We issue sales invoice to the customers. That is the source document for us to record the transaction in sales book. Now observe carefully the format of sales book. The format of sales book is similar to format of purchase book, with the exception that in the purchase book we maintain inward invoice number, whereas in the sales book we maintain outward invoice number. Now look at the first column, date. Here we record the date of transaction, that means on which date we sold goods on credit. In the particulars column, in the purchase book particulars column we have written supplier names, but here we write customer names along with the various articles sold to them, quantities and price. Outward invoice number and details column we write the inner column calculations. We also consider the trade discount. Trade discount is deducted from the list price of goods and the net amount is written in the outer column. Net amount is written in the outer column, amount column. And the total of this amount column shows, total of amount column shows goods sold to the customers for a particular period of time. During a particular period of time, total how much goods sold on credit to the customers. This indicates amount column. This is the format of sales book. Look at first column, date of transaction. Second column, customer name, articles sold and their quantities are recorded. Third column, outward invoice number is entered. Fourth column, the amount in respect of each article is entered, and also we consider trade discount. The net amount is entered in the amount column. Outer column, last column. The total in the amount column shows the total credit sales made in a period. That's it. This is our sales book. Now observe posting the sales book. Posting the sales book. From sales book to which account we post? When we are maintaining sales book, so that we also maintain sales account in the ledger. In the sales book, whose names we enter? Customer names. I repeat, in the sales book, whose names we enter? Customer names. So in the ledger, we open customer accounts. I repeat, in the ledger, we open customer accounts. Now from this sales book, individual postings, individual amounts are posted to the debit side of customer account. Individual amounts are posted to the debit side of customer account, because whenever we sell goods, customer account is debited. Now observe, what is a journal entry for sale of goods? Customer or debtor account debit to sales account. Now how do we post this? First we open debtor account. Let us say for example it is 1 lakh. This is the normal entry which we record in journal. Now we open customer account in the ledger as well as sales account in the ledger. Clear? Now customer account is debited. On the debit side we write to sales 1 lakh. Sales account is credit. On the credit side we write by customer or debtor 1 lakh. That's it. In the same manner we post in the ledger from sales book. Customer account debit side, as usual we post to sales 1 lakh, whereas in the sales account credit side, sales book is periodically totaled, and that total we bring it to the sales account by writing by sundries as per sales book. Here we write the total amount of sales book. That's it. This is posting of sales book. Hope you understood this sales book. Now just go through the concept once again. Now we try to solve a problem on sales book. Make it fast. In the previous video, we understood illustration 3, preparation of sales book. Now from this sales book, we also understood how to post into ledger accounts. Next, we also solved practical question 1 and 2. This is also based on sales book and its posting to ledger accounts. Now come to the next book, that is sales returns book. That is sales returns book or returns inward book. It is similar to sales book only. In the sales book, particulars column we write customer name along with the items or articles sold. But here we write the customer names along with the goods returned by them. In the sales book, the source document is outward invoice number, whereas for recording the transaction of sales returns book, the source document is credit note. If you remember, at the time of discussion of purchase returns book, we discussed about debit note. Debit note is used as a source document for the preparation of purchase returns book. Yes or no, students? Yes, sir. Now look at sales returns book or returns inward book. What is the purpose? Here we record the transaction of sales returns made by the customers to whom we sold goods previously on credit. Apart from this transaction, no other transaction is recorded in the sales returns book. And If sales returns are not frequent, then you need not to maintain sales returns book separately. It is better to record these transactions in the journal proper. Hope you understood. To record the returns of goods or materials by the customers that were sold on credit previously. However, if the returns are not frequent, they may be recorded in the journal proper. Source document is credit note. See, whenever we sold goods to the customers, we issue outward invoice contains details of supplier and buyer and the items which we sold, description of the items, quantity sold, price, taxes charged, and what is the total amount payable, date of transaction. All these details contains in the outward invoice. Now, customer is returning goods to the supplier. I repeat, customer is returning goods to the supplier. When customer is returning goods, he will prepare debit note. He will prepare a debit note. Now, customer returned goods. From customer point of view, it is purchase returns. Observe carefully. A limited and B limited. A limited seller sold goods to B limited previously, buyer. Now B is returning goods to seller. From A point of view, it is sales returns. From A point of view, it is sales returns. From B point of view, it is purchase returns. Yes or no? He will record this transaction in the purchase returns book. Purchase returns book. B will record this transaction in the sales returns book. When B is returning goods to A, he will prepare debit note, contains various details of goods returned by B, and this debit note is used by B to record to prepare purchase returns book. Now B returning goods along with the debit note. A will receive those goods na? Yes. Now A should acknowledge B. A should acknowledge B that he received goods along with the debit note. Now what A will do? A will prepare in return a separated document showing that the details of A and B, the date of receipt of goods plus description of the goods received back plus quantity, amount, and all the details provided in a document. And this document is sent by A to B. I repeat, B sent debit note to A. A is sending credit note to B. Credit note to B. This credit note contains all the details of goods returned by B limited. Okay, and A limited utilize this credit note for preparation of sales returns book. For preparation of sales returns book. Sir, why it is called credit note? First, understand why it is called debit note. Here we understood that whenever we purchase goods, purchase account debit, supplier account credit. When we return goods, supplier account debit, purchase returns account credit. At the same time, when we sell goods, what is the entry we record? Debtor account debit. When we sell goods, what is the entry we record? Debtor account debit, let us say 10,000 to sales account 10,000. Now debtor is returning goods. Then what is the entry we record? Sales returns account debit. Let us say he is returning 1,000 worth of goods to debtor account. How much? 1,000. Now you people tell me, in our books, in A books, debtor account is credited now. Debtor account is credited, means debtor need not to pay, our customer need not to pay 1,000 rupees. Earlier he has to pay 10,000. Now he returned goods 1,000. What is the amount payable by debtor? 9,000. Now here indirectly we are saying to the buyer, debtor, Hello, Mr. Buyer, don't worry. In my books, your account is credited. In my books, your account is credited. For indication of this, I am sending credit note to you. That's it. Over. In the buyer books, supplier account is debited na, to indicate that buyer prepared debit note. Seller prepares credit note. Very important point. Buyer prepares credit debit note. Seller prepares credit note. Seller, buyer. Seller received debit note. Seller received debit note. Who sent? Buyer. Prepared debit note. Buyer prepares debit note and it is sent to the seller first. Now seller received debit note na, very good. Now in return seller prepares credit note. Seller prepares credit note and it is sent to the buyer. Received credit note. If you observe, each person is having two notes. Seller, he has debit note plus credit note. Buyer, he has debit note and credit note. These are two documents. These are two documents but conveys same information. These are the two documents but conveys same information. Buyer utilizes debit note for preparation of purchase returns book. Seller utilizes credit note for preparation of sales returns book. Very important concept. So many students they get confusion here, but you will not get this type of knowledge regarding debit note and credit note. Be careful. Okay, so this is the concept of debit note and credit note. Hope you understood. Look at credit note. A credit note is a document prepared by the seller of goods to inform the customer that his account is credited with the amount mentioned and for the reasons stated therein. It contains the date of return, name of the customer, details of goods and reasons for returning the goods. Each credit note is serially numbered. That's it. Fine. Now look at the format of sales returns book. Date, particulars, credit note number. In the sales book we have written outward invoice number. Here we write credit note number, details, amount. In the date column we write date of receipt of return. Date of receipt of return. Particulars column we write customer or debtor name along with goods received from him. Here we write credit note number prepared by us. Here we write details, and if we allowed earlier any trade discount, now we deduct the same, and finally the net amount is written in the outer column. This is the format of sales return book. Now observe posting the sales returns book. From sales returns book, how do we post into various accounts? If you observe, what is the entry for sales return? Tell me. Sales returns account debit to debtor account means in the ledger we open sales returns account. In the ledger we open sales returns account and debtor account. Okay, sales returns account is debited na, so debit side to debtor 1000, debtor account credit side by sales returns 1000. This is how we post. In the same manner, from sales returns book, how do we post? Simple. First, go to debtor account, individual posting, go to debtor account, credit side, give postings by sales returns. Now, total the sales returns book, because sales returns book is a subsidiary book. Subsidiary books are periodically totaled. Na? Sales returns book total, and that total take it to the debit side of sales returns account as two sundries as per sales returns account. I repeat, two sundries as per sales returns account. over. This is how we post from sales returns book to sales returns account plus individual postings in customers accounts. Observe individual amounts. The individual amounts are posted to the credit side of customers account. Periodic total, the total amount is posted to the debit side of the sales returns account or sales account. This is our sales returns book. In January 2025 exam, they have asked a question from sales returns book. Is it clear, students? Now, concentrate on this topic, pause the video and revise the concept once again. The next concept we discuss. Is it clear? In the previous video, we understood how to prepare sales returns account. Now, in this video, we discuss about journal proper. Before that, look at, we have 8 standard types of subsidiary books. Cash book to record cash transactions. This we discuss as a next chapter. Purchase book, we understood how to prepare purchase book. Purchase returns book also understood. Sales book, sales returns book, bills receivable book and bills payable book we try to understand in bills of exchange chapter. Now next book is journal proper. If any transaction is not recorded in the above 7 subsidiary books, then we record that transaction in the journal proper. We discuss that concept now. Journal proper. Look at, if a separate book is not maintained for any transaction, then it is recorded in the journal proper. See, what are the various transactions recorded? Look at miscellaneous transactions first. Credit purchase of items other than goods dealt in or materials required for the production of goods. Example, credit purchase of furniture, machinery will be journalized. To put it simple, purchase of assets on credit. Purchase of assets on credit. Yes or no? If the asset is purchased for cash, then it is recorded in the cash book. If it is purchased on credit, then we record it in the journal proper. Okay, next, an allowance to be given to the customers or charge to be made to them after the issue of the invoice. Nothing but discount transactions. Discount transactions. So any discount given or allowance given to the customers is recorded in the journal proper. Next one, receipt or issue of promissory note if separate bills book have not been maintained. See, sometimes we drop bills, sometimes we accept bills. If there is no bills receivable book or bills payable book is maintained to record these transactions, then the same is recorded in the journal proper. At the same time, if the purchase returns and sales returns are not frequent, then also you need not to maintain purchase returns book and sales returns book. The same transactions are recorded in the journal proper. Next one, if an amount becomes irrecoverable, say because of the customer becoming insolvent, nothing but what? Bad debts. Nothing but bad debts. If bad debt is happened, if any amount is not recovered from the customer due to insolvency, then this transaction also recorded in the journal proper. Next, effects of accidents such as loss of property by fire. In the journal entries chapter, if you remember, goods lost by fire or theft. For that, what is the entry we have written? Goods lost by fire or theft. Account debit to purchases account. This is the entry we record for goods lost by fire or theft. Now you people tell me, if it is happened, in which book you record this? Nothing but journal proper. Okay, next one, transfer of net profit to capital account. We discussed the concept of net profit in the ledger chapter or trial balance chapter. See, net result of nominal account. Nominal accounts nothing but expenses, losses, incomes and gains. The net result of nominal account is nothing but what? Profit. or loss. Who will enjoy the profit? Owner, proprietor in case of sole proprietorship, partners in case of partnership, okay, shareholders in case of company. And who will suffer loss? Who will bear this loss? Proprietor in case of sole proprietorship, partners in case of partnership, shareholders need not to bear any loss of the business. Why? Because in the next years, if the business gets profit, automatically this loss gets set off. Okay. Now this profit or loss is added to the capital given to the proprietor. Now, how do we give to the proprietor? We will not hand over the profit in the form of cash to the proprietor. Simply we transfer this profit to the capital account by writing a journal entry. By writing a journal entry. So transfer of profit to capital. This will happen by writing a journal entry. This we discuss at the time of preparation of financial statements. Okay. This transaction also recorded in journal proper. Next one, adjusting entries. Adjusting entries. If you observe the accounting cycle concept, if you observe the accounting cycle concept, first one, journal, recording transactions in journal. Next one, posting them to ledger. Next one, preparation of unadjusted trial balance. And next step is what? Passing adjusting entries. At the time of preparation of financial statements, we have to adjust some account balances, and this adjustment is through journal proper. This concept you can understand only at the time of final accounts preparation or preparation of financial statements chapter. So till that time, please wait. So what are the examples for adjusting entries? Outstanding expenses means at the end of the financial year we incurred expenses but we have not paid in the form of cash. This becomes liability. So we have to adjust outstanding expense. Prepaid expenses means expenses relating to the next financial year but paid in the current financial year. To ascertain the true profit or loss, we have to consider only current year expenses and losses and current year incomes and gains. Next year expenses and losses and next year incomes and gains we should not consider in the current financial year. For that purpose only we have to adjust all these things. Okay. Interest on capital, depreciation, all these things we try to understand at the time of preparation of financial statements. Okay. Next entries. Entries on dishonor of bill means we received a bill from customer. On the due date he failed to pay the bill amount. Now it is said to be the bill becomes dishonor. If it is honored, that means we receive cash. We record this transaction in the cash book. But the same bill was dishonored now. It is recorded in the journal proper. Bills of exchange concept we discuss after completion of accounting for GST. Then you can understand all the relevant content relating to bills of exchange. Next one, rectification entry. During the process of bookkeeping means recording transactions in journal, posting them into ledger and preparation of trial balance. During this process, if any mistake is happened, we have to correct it. Already we have recorded the transaction. We should not overwrite the entries. We should not write off the entry. We should pass a new journal entry to rectify those errors. So, for the purpose of rectifying the errors, we are recording some entries now. Those entries are called rectification entries. This we discuss in the chapter rectification entries, sorry, rectification of errors. So, rectification entries also recorded in the journal proper. Next one, transfer entries. At the end of the financial year, an account balance is transferred to another account. This is possible for only few accounts. What are those transfer entries? That also we discuss at the time of preparation of financial statements. Next, closing entries. We understood in the chapter ledger at the time of balancing. All nominal accounts are totaled and those totals are closed or transferred to the profit and loss account. How it is possible? By writing closing entries. At the end of the financial year, all the nominal account balances must be closed. How a nominal account balance is closed by transferring to other account. I will give you one example here. Let us take for example salary account or salaries account. Whenever we pay salary, salary account is debit. Why? Because it is expense to cash. Let us say 1 lakh. Now, how to close this account? We paid salary to the employees, so that salary account debit. Will you ask the same salary back? Then salary account credits are no, not possible. Once expense or loss, income or gain account is created now, it will never be closed unless we close it. I repeat, expense, loss, incomes and gains accounts we open, it will never close unless we close them. That's why the account balance, now salary account is showing how much balance, 1 lakh. This account balance we transfer to other account. This account balance we transfer to other account. Let us say profit and loss account. By profit and loss account. Now salary account gets closed. Look at, this is possible only by writing closing entry. Here the closing entry is nothing but profit and loss account debit. Salary account is showing debit balance now. Now we have to close. Profit and loss account debit to salaries account. This entry is nothing but closing entry. Why did you write this entry? To close salary account. So these entries are called closing entries. Next one, opening entries. Once the financial year is completed, so many all nominal accounts are closed. Remaining accounts are personal accounts and real accounts. These are carried to the next financial year. Next financial year, these are carried through writing opening entry. Opening entry. This concept also we try to understand at the time of preparation of financial statements. Meantime, just observe this. That's it. Opening entry. Current year, whatever the ledger account balance is not closed, we carry them to the next financial year in the form of opening entry. Clear, students? So this is the concept of journal proper. Don't expect any question from this chapter. We may expect true or false statement from this chapter, from this content, journal proper. And we need not to separately practice any problem. Already in the journal entries chapter, we have practiced enough problems. The same concept applicable for journal proper also. Clear, students? Now we discuss the next concept. So go through the concept once again. Okay. Now in this video, we discuss about advantages of subsidiary books. Sir, advantages. Yes, instead of maintaining one journal, we have divided the journal into various sub journals now. Because of doing this, what are the advantages to us? Means the first and foremost advantage is division of work. Why, sir? Now instead of see, if you have only one journal, this can be handled by only one bookkeeper. But now we have divided various journals now. So the work can be allotted. The work can be divided. Observe carefully. Now what I can do is, so purchase book. So here bookkeeper 1. Bookkeeper 1. Okay. Now what I am doing is, I am allotting to the bookkeeper 1 purchase book, purchase returns book and creditors ledger, maintaining creditors account. Maintaining creditors account. Observe what I can do here. I can appoint one bookkeeper and I am allotting work to him. What is that? Purchase book you have to maintain, purchase returns book also you have to maintain, and from purchase book and purchase returns book, post the entries or post the transactions to creditors account. So this work can I can uh, Division to divide to bookkeeper 1. Next, bookkeeper 2. Bookkeeper 2. What I am doing? I am allotting him. You maintain sales book. Second, sales returns book. Third, even bills receivable book. Here also bills payable book, because all these are similar nature. Next one, maintaining customer accounts. Maintaining customer accounts. Observe carefully. So I can divide this work to the another bookkeeper. Why? Because I am maintaining separate books now. Now next one, cashier. I will appoint one person as my cashier and I will allot maintaining cash book to him. Mr. Cashier, you maintain cash book. And another person, bookkeeper 3, you maintain journal proper. You maintain journal proper. Like this, what we can do? We can divide the work. So division of work is possible when we maintain sub journals. And by dividing this work, what happens? Bookkeeper 1, bookkeeper 1 will become expertise. Bookkeeper 1 will become expertise in the maintaining of purchase book, purchase returns book, and customer creditors accounts and bills payable book also. So we get ready information. We get ready information. Bookkeeper 2 will get specialized in the work of maintaining sales book, sales returns, bills receivable, and maintaining customer accounts. We get ready-made information. Cashier, he will maintain only cash book now. So we can see that misappropriation of cash cannot be done. Okay. Bookkeeper 3, he will see the remaining transactions journal proper. So that what happens? Each person is doing his work so that we can complete our accounting work fast. Sorry, bookkeeping work fast. And the same people is posting into ledger accounts also. And in any case, suppose if any error is happened in the purchase book or purchase returns book or creditors account, bookkeeper 1 can easily identify it. Why? Because he has done this work na. So the errors also can be identified easily. Once we identify the errors, we can easily rectify them. These are the advantages of subsidiary journals or subdivision of journals. Look at division of work. Next, specialization and efficiency. If a particular person is doing the same task frequently now, so he become expertise or specialized in that work, and the efficiency also improved, because the same work he is doing consistently for so many for so much of time, since so much of time, so that he become efficient in that work. He become specialized in doing that work. Assigning the same task to a person over time helps them gain expertise, leading to efficient handling of accounting work. Next one, saving of time. One person, to see, let us visualize only one big bookkeeper. He should maintain journal and he should maintain ledger. See, it takes so much of time. But now we are dividing the journal and we are allotting these journals to different people so that we can save so much of time in the bookkeeping work. Using multiple books allows various accounting processes to be carried out simultaneously, resulting in faster completion of work. Next, availability of information. Now the information is also readily available. Why? Because whenever purchase transaction is happened, bookkeeper 1 will immediately record it in the purchase book and they post into creditors account. The information is readily available. A separate book is maintained for each type of transaction, making it easy to find all related information in one place. In the purchase book, we have all supplier names now, who supplied on credit. In the sales book, we have all debtors names to whom we sold goods on credit. So all information is available in one place. Next, facility in checking. If any mistake is happened, we can easily check. Why? Because all transactions we are not mixing in one book now. That's why it is easy for us to locate the error and rectify it. Having separate books makes it easier to identify errors when the trial balance does not match. Additionally, using various subsidiary books helps prevent errors and fraud also, right? So these are the various advantages of subsidiary books. This is very important question. If you get any theory question from this chapter na, there may be so many chances of getting this question as in the examination. So be careful. So this is our subsidiary books chapter, students. We meet again in the new chapter, that is cash book. Till then, bye bye everybody. In the previous video, we understood what is purchase book and which transactions are recorded in the purchase book and how it is prepared. We repeat. So in the purchase book, we record only credit purchase of goods. Cash purchases and purchase of other items other than materials are not recorded in the purchases book. Is it clear, students? Now look at, we try to solve illustration 1. Observe carefully. The rough book of Messrs. Narain and Co. contains the following. So while solving the problems of subsidiary books, try to make a difference between normal journal entry. In the first chapter, we understood how to record the journal entries in the book journal. So here we have to differentiate between recording transactions in normal manner and recording the same in subsidiary book. Hope you are following. Next. The rough book of Messrs. Narain and Co. contains the following. They have given some transactions. Go to the end. Make out the purchase book of Messrs. Narain and Co. They are asking us to prepare purchase book. The moment we prepare purchase book, immediately you should keep in your mind that we record only credit purchase of goods. In this, only credit purchase of goods. No other transaction is recorded in the purchase book. So out of the given transaction or from the given transaction, you identified whether the given transaction is credit purchase of goods or cash purchase of goods or purchase of items other than goods. Hope you are following. Look at 2022 February 1st. Purchased from Brown and Co. on credit. Purchased from Brown and Co. on credit. Yes. So it is a credit transaction. First of all, it is a credit transaction. Check whether you have purchased goods or other items on credit. Sir, how can we know that, sir? By looking the problem, you can understand. By looking the problem, you can understand. Look at 5 gross pencil at 100 per gross. 5 gross pencils at 100 per gross. 1 gross register at 240 per dozen. 1 gross register at 240 per dozen. This is the language used in the stationery business. Generally, this dozens, gross, registers, pencils. So by looking this problem or by looking the first transaction, we can come to know that Mrs. Narain and Co. business is stationery business. Okay, less trade discount at 10%. This is the information they have given. Now, how do we write in the purchase book? First of all, if this is the normal transaction, instead of maintaining subsidiary books, we are maintaining only one journal. Then how do you record this transaction? How do you record this transaction? Very simple. Purchases account debit. How we write? Purchases account debit. Purchases account debit to Brown and Co account, from whom we purchased Brown and Co. This is how we record the entry. And what about amount? Amount we calculate. How? Look at 5 gross pencils at 100 per gross means 500. 5 gross pencils. See, 1 gross is equal to 12 dozens. I repeat, 1 gross is equal to 12 dozens. 1 gross is equal to 12 dozens. Do remember. So 5 gross pencils at 100 per gross. And second one gross register at 240 per dozen. Here they are giving the quantity is expressed in gross, 12 dozens, 1 gross, but amount is given 240 per dozen. Now what we do, we convert 1 gross into dozens. Okay, look at 12 dozens into 240, how much? 2880. 2880 plus 500 minus 10% rate discount na deduct. So total we get 3042 after deducting trade discount. After deducting trade discount, we get 3042. The same we write like this: 3042, 3042. This is how we write. Yes, sir. The same information now how we present. The same information now how we present in the purchases book. That is the question. Now, in the purchases book, we will not record the transaction like this. In the purchase book, we will not record the transaction like this. Already we understood. So what is the purchase book format? Tell me. Purchase book format is date, particulars, inward invoice number, details and amount. So already we understood the format now. In the date column, we write the date of transaction. In the particulars column, we write the name of supplier. In the inward invoice number column, we write the inward invoice number, details. We write the description of the goods. In the particulars column, what we write? Name of supplier plus what items we have purchased one by one. And in the details column, we write the inner column amount. Finally, the outer net amount will be written in outer column. This is how we record purchases book. Now look at first. Draw the format here. Here inward invoice number is not given. That's why we are not drawing inward invoice number. Otherwise, we draw inward invoice number also. You people just pause the video and draw the format. Make it fast. We are in whose books? Mrs. Narain. Write on Mrs. Narain and Co. Which book we are maintaining? Purchases book. So this is the heading we have to write. Now, this transaction is happened on 2022. 2022. February 1st. First we write name of supplier Brown and Co. Name of supplier Brown and Co. Below that we write one by one item. Whatever the items they have given, you write the same. That's it. 5 gross pencils at 100 per dozen. 5 gross pencils at 100 per gross. 100 per gross. Inner column, write down the amount. 500. Next one. 1 gross register at 240 per dozen. 240 per dozen. How much? 2880. Now total it. How much we get? 3380. 3380. Out of this amount, deduct trade discount. Trade discount is at 10% now. So 3380 into 10%, 338. Deduct. How much we get? 3042. That's it. This is how we record in the purchases book. Now try to make a difference between recording same information in subsidiary books and in the journal. If you can identify, if you can notice this difference now, then you can understand the concept easily. Next transaction, look at second date, purchased for cash. Purchased for cash means it is a cash transaction. Whatever you purchase for cash, we will not record in the purchases book, so that this transaction is recorded in the cash book. We already understood different types of subsidiary books now. So it is a cash transaction, so that it is recorded in cash book. Do remember, from the stationery marked 10 gross exercise books at 300 per dozen. Even though we purchased stationery items, but we will not record this transaction in purchase book. Why? Because it is a cash transaction. So after completion of the problem, we make a note of it. This is not recorded. Now come to February 3rd date. Purchased computer. What we have purchased? Purchased computer. Actually, what is our business? Stationery business. Computer is not a part of stationery. Na? Computer is asset for us. Means we purchased what other than goods. So it is nothing but purchase of asset. Computer for office use from Messrs Office Goods Co. For Messrs Office Goods Co. Computer is asset. Sorry, computer is goods. But for Narain and Co. Computer is asset. For Narain and Co. Computer is asset. On credit for 30,000. This transaction is recorded in the journal proper. We have discussed different types of subsidiary books. So this transaction is recorded in journal proper, because it is purchase of asset. Purchase of asset, not for cash. If it is for cash, then we record it in the cash book. But this is purchase of asset. Simply we record it in the journal proper. How do we record? Tell me. Third date. Simple now. Computer account debit. Computer account debit 30,000 to Messrs Office Goods Co. Over. That's it. This is how we record that entry in the journal proper. Over. Next. So that the transaction happened on February 3rd, also not recorded in the purchases book. Okay. See, sometimes we may get a problem from subsidiary books for 4 marks or 5 marks. If you get a problem from subsidiary books, now you can easily score. Already I said, in the true or false statements, try to get at least 10 marks. If you get any problem from subsidiary books or from trial balance, either for 4 marks or 5 marks, you can score full marks, 4 or 5. Let us take for example, we got a question from subsidiary books for 5 marks. So 10 marks already you are getting from true or false statements, plus 5 marks from subsidiary book problem. So 15 marks already you got. Like this you plan. Okay. Next, fourth rate, purchased on credit from the paper co. 5 reams of white paper at per 100 per ream. 10 reams of ruled paper at 150 per ream. See, generally you use white papers and ruled papers now for writing your exams or making notes, the same papers. In stationary language, they measure the quantity in reams. Okay. Less trade discount at 10%. Now you people tell me, will you write this transaction in the purchase book or not? Yes, we write. First of all, it is purchase of goods. Second, it is on credit basis. They did not mention. Yes, they have mentioned na credit basis. That's it. Write down. February 5th. Sorry, February 4th. The paper and co. The paper and co. What we have purchased? Tell me. 5 reams of white paper, 5 reams of white paper at 100 per ream. How much then? 500. Next one, 10 reams of ruled paper at 150 per ream. 10 reams of ruled paper at 150 per ream. How much? 1500. 1500. So total 2000 less trade discount at 10%. Trade discount at 10%, na? Yes. So 500, 1500, 10% means 200. How much? 1800. This is how we write. Next one, fifth date. Fifth date, observe. Purchased 1 dozen gel pens at 15 each from Messrs. Verma Brothers on credit. Yes, it is also purchase of goods on credit. So simply write down Messrs. Verma Brothers. Fifth date. Mrs. Verma Brothers, write down 1 dozen gel pens. Write down 1 dozen gel pens. 1 dozen gel pens at 15 each. At 15 each. How much? 1 dozen means 12 items. So 12 into 15. It comes 180. It comes 180. Now what we do is simply total this book. Total. Total it. 180 plus 1800 plus 3042. Total is 5022. That's it. After writing the transactions, simply total the purchases book. Over. Over. So opposite to that, write down total 5042. Clear? Now look at the note points. Note point. Goods purchased for cash and the purchase of computer are not recorded in purchase book. Compulsorily you should write this note point. Compulsorily you should write this note point. Do remember. Okay. Make a note of it. Now look at, we discuss problem number 2, that is illustration 2. This problem is very important because here we get one small concept. Observe carefully. Enter the following transactions in purchase book. What they are asking? Enter the following transactions in purchase book and post them into ledger. Post them into ledger. In the illustration 1, in illustration 1, just we have prepared purchase book. That's it. We did not post it into purchase account. But here what they are asking, we record the transactions in purchase book. From purchase book, we post them into ledger. If you observe, normally after recording transactions in journal, how do we post? Suppose first transaction, purchases account debit 3042 to Brown and Co account 3042. How do we post it? Tell me. We go to purchase account debit side, we write to Brown and Co 3042, and we go to Brown and Co account credit side. On the credit side, we write by purchases 3042. This is how we post into purchases account and Brown account. In the same manner, after recording transactions in purchase book, from purchase book, we post them into ledger. Already we discussed this chapter, this concept now. So that, move on. Look at 2022, April 4th. April 4th. Purchased from Ajay Enterprises. We have purchased from Ajay Enterprises, Delhi, 100 dozen Rexona Hawaii chappal at 120 per dozen, 200 dozen Palki leather chappal at 300 per dozen. By looking this information, we can clearly assume that his business is footwear business. Which business? Footwear business. Okay. Less trade discount at 10%. Till here, till here, already we discussed this type of information they have given in illustration 1 also. But if you observe, additionally what they are giving, freight charged rupees 150. Who is charging freight? Supplier, Ajay Enterprises. Okay. Is it one time charge? Yes, one time charge. Check the same information whether given in the next transactions also. Next transactions, observe, purchased from Balaji Traders Delhi. Okay. Yeah. Look at the end, freight charged 200. Look at the next transaction also, freight charged 100. What did you observe from this information? See, whenever supplier is supplying goods, they are charging some freight in addition to purchase price. I repeat, in addition to purchase price, they are also charging freight. In this type of problems, what we do is we maintain one more column for freight charge. Already we have purchase book format now, date, particulars, inward invoice, details, amount. To the same format, we also maintain a separate column called freight column. Freight column. Why? In this freight column, we record freight charged by the supplier, because in every transaction he is charging freight. Now what we have to do? Total purchase price we have to divide into total purchase price or cost of purchases. Total cost of purchase, what we have to divide into freight and cost of goods, cost or cost price of goods. Yes, for this purpose what we do is we maintain an additional column to record freight. This is the important problem in this problem. Sorry, this is the important concept in this problem. Understood? That's why we change the format. How the format is changed? Look at the format for this problem. See, date column common, particulars column common, details column common. Here we have different items. Now what we are doing, gross amount column we are maintaining, and trade discount column also we are maintaining. From gross amount, if we deduct trade discount, then we get net price. After that we add freight, then we calculate total amount payable to the supplier, because supplier is charging in each transaction freight separately. In addition to cost of purchase, we have to pay freight also. That's why here we are adding freight. Do remember, these many columns we maintain now. Try to draw this purchase book format. Make it fast. Look at how do we record these transactions in purchase book now. Observe carefully. First one, April 4th, we purchased goods from Ajay Enterprises, Delhi. So, April 4th, Ajay Enterprises. Ajay Enterprises. What we have purchased, tell me? 100 dozen Rexona Hawaii chappal at 120 per dozen. 100 dozen Rexona Hawaii chappal at 120 per dozen. At 120 per dozen. So how much it is? 100 dozens into 120 per dozen comes to 12,000 na? Comes to 12,000. Next one, 200 dozen Palki leather chappal at 300 per dozen. 200 200 dozen Palki leather chappal, Palki leather chappal at 300 per dozen. So total comes around 200 into 300, 60,000. 60,000. After that, we deduct. After that, we deduct trade discount. Observe carefully. Trade discount at 10%. Trade discount at 10%. Now tell me that gross amount here total 72,000. 12,000 plus 60 total 72,000. And what is the trade discount? Tell me. 7,200. Trade discount is 7,200. What is the net amount we get? 72,000 minus 7,200. We get 64,800. 64,800 we get. And what is the freight charged by him, by supplier? 150. And what is the total amount payable to the supplier? 64,800 towards cost of purchase of goods, 150 freight. Total amount payable 64,980. Sorry, 950 na? 64,800 plus 150. 64,950. 64,950 we have to pay to Ajay Enterprises. This is our problem. Means first transaction. Now look at the next transaction. 15th rate, purchased from Balaji Traders Delhi 50 dozen max shoes at 400 per dozen, 100 pair sports shoes at 140 per pair, less trade discount 10%. Write down the items given in the problem. Okay, it is also credit now. They did not mention anywhere cash, so that we assume it is a credit transaction. So Balaji Traders, April 15th. Balaji Traders. What we have purchased? Tell me. 50 dozen max shoes at 400 per dozen. 50 dozen max shoes at 400 per dozen. Total comes 20,000 na? 20,000. Next one, 100 pair sports shoes at 140 per pair. 100 pair sports shoes at 140 per pair. 140 per pair. It comes to 100 into 140, 14,000. Understood? Yeah. Less trade discount. Trade discount at 10%. Tell me the total amount now. 34,000 total. Now trade discount 10% means 3,400 minus 34,000 minus 3,400 comes to 30,600. How much freight charged? 200. Total 30,800. This is our second transaction. Observe carefully. This is our second transaction. Over. Next, third one, observe. 28th, purchased from Tripti Enterprises, Tripti Industries, Bahadurgarh. Okay, Tripti Industries. 40 pair leather shoes at 400 per pair, 100 dozen rosy Hawaii chappal at 180 per dozen, and trade discount 10%. This is also credit transaction, credit purchase of goods. So write, record it. Tripti Industries. Write down. April 28th. Tripti Industries, what we have purchased? 50 pair leather shoes at 400 per pair. 50 pair leather shoes at 400 per pair comes to 20,000. Clear? Next one, 100 dozen rosy Hawaii chappal at 180 per dozen. 100 dozen rosy Hawaii chappal at 180 per dozen. 180 per dozen. Total comes to 18,000. Total comes to 18,000 less trade discount. Trade discount at 10%. Now tell me, total comes 38,000. Total comes 38,000. Trade discount 3,800. Trade discount 3,800. Now how much? 38,000 minus 3,800 comes to 34,200. 34,200. How much freight charged? 100. Total 34,300. Total 34,300. So till now we have completed recording the transactions in purchase book. Recording the transactions in purchase book. Observe carefully. Now we have to post them into various ledger accounts. So here the important task is how many ledger accounts involved in this purchase book, or how many ledger accounts till now we created. In the normal uh, journal book, it is easy to identify how many accounts we have to draw. How? Purchase account, Brown and Co account, computer account, Messrs Office Goods Co account. Like this we calculate number of accounts to be drawn. Now you people tell me, by looking this purchase book, tell me how many accounts we draw now. How many accounts we draw now? First observe which book you are maintaining. Purchase book. First, draw purchase account. Second, who are the suppliers? Ajay Enterprises. Who are the suppliers? Ajay Enterprises. Second account. Next, Balaji Traders. Third account. Tripti Industries. Fourth account. Okay. Now, additionally, we added one more column now, freight account. So, freight account, fifth account. This is how we identify how many accounts to be drawn. You people just pause the video and draw these 5 accounts. Okay, you can draw 5 accounts in one page, one full page. That is enough, because here we will not balance. Here we will not balance accounts. Okay, so why we will not balance, that I will explain once completion of postings. Okay, now pause the video and try to try to draw all the accounts. Make it fast. Here look at a small mistake, that is we purchased only 40 pair. Na? We purchased only 40 pair. So it comes to, yeah, just observe a small mistake here. 40 pair means 16,000. 40 pair means 16,000. Total comes 34,000. Just a minute. So total 40 pairs, 16,000 comes 34,000. 3,400. 34,000 minus 3,400. 30,600. 100 rupees freight charged. Total 30,700. Okay. Now total it. Total. Tell me 72,000 plus 34,000 plus total each column plus 34,000. Total 1 lakh 40. 1 lakh 40. Here 7,200 plus 3,400 plus 3,400. Total 14,000. Difference amount calculate 1 lakh 40 minus 14,000, you can calculate 1 lakh 26,000. Tell me what's the total freight charged? 150 plus 200 plus 100. Total 450. 126 plus 450. 126 450. These are the totals. Now look at, first we post into purchase account. Into purchase account. Tell me in the purchase account how much amount we take. Very simple. What is the value of purchases? What is the value of purchase? 1 lakh 26,000. What is the value of purchase? Tell me. 1 lakh 26,000. Observe carefully. Not 1 lakh 26,450. 1 lakh 26,450 is the amount payable to suppliers. But what is cost of purchase? 1 lakh 26,000. Freight separate. Understood? Now this amount we post into purchase account. Observe. Ledgers. First one, purchase account. Write down April 30th, month ending date. Write down month ending date. Generally, at the end of every month, we total the subsidiary books. Okay, month ending date. In the purchase account, normally, just visualize in the ledger chapter, purchase account debit side, what we write? We write supplier names if we purchase on credit. We write cash account if we purchase on cash. Okay, but here you need not to write supplier names once again. Why? Already all supplier names we have written in the purchase book. Already all supplier names we have written in the purchase book. Now what we do is here to total total as per purchase book. Simply we write total as per purchase book. How much? 1,26,000. That's it. Over. If you get any doubt, on April 30th, we totaled purchase book. We go to purchase book and we check the totals. And how we arrive this 1,26,000 means we purchased the goods from Ajay Enterprises, Balaji Traders and Tripti Industries. Yes, that's it. Next come to freight account. How much total freight charged? How much total freight charged? 450. This 450 we should write in freight account. Okay, freight is expense na debit. I repeat, freight is expense debit. Write down April 30th to total as per purchase book. Total as per purchase book. How much? 450. Over. The bifurcation of 450 you can see in the purchase book. Bifurcation of 450 you can see in the purchase book. Okay, next one. Ajay Enterprises. Now come to Ajay Enterprises account. First one, Ajay Enterprises. Generally in the Ajay Enterprises, what we write? Supplier account credit side, we write buy purchases. Now here also we write buy purchases. But look at the date of transaction. Very, very important observation. When you are posting into purchase account and freight account, the date is taken at the date of totaling the purchase account. I repeat, date of totaling the purchase account. But when you are posting individual postings, Ajay Enterprises, we take the date of transaction. Which date we have purchased goods? Tell me. April 4th. This date we take while we are posting into Ajay Enterprises. Observe carefully. April 4th. Simply by purchase account. Understood? How much? How much? Means 64,800 towards purchases. I repeat, 64,800 towards purchase, 64,800 towards purchase. On the same date, we write by freight. This is very important problem conceptually. To 64,800 towards purchase and freight is how much? 150. Now total payable how much? 64,950. The same total here you can find. Clear everybody? Yes. So one day I will show you the same information. How do we enter in, or how do we get in Tally? So Tally software, I will try to give full information. How transactions are recorded, how ledger accounts are automatically prepared, how trial balance is automatically prepared, how ledger accounts are automatically posted, okay, and balanced, and how trial balance is prepared, how these subsidiary books are maintained in the Tally. All these things I will explain on one day. Okay. Next one. In the same manner, post the transactions in Balaji Traders also. From Balaji Traders, we purchased on April 15th. Go to Balaji Traders account. April 15th, by purchase account. How much? Total 30,600. 30,600. On the same date, by freight. Freight how much? 200. These two we have posted from which book? Purchase book. If you want, you can write in the bracket purchase book. We have taken this freight from purchase book. Now, in the same manner, Tripti Enterprises also, industries also. Write down April. This is not Triparty, this is Tripti. Okay. Yeah. Write down how much? 30,600. 100. Okay. Date of transaction April 28th. April 28th, by purchases 30,600, by freight 100, total 30,700. Now here you may get it out, sir, is trial balance agree? Yes. From these accounts, from the given accounts, I am talking about from the given accounts, if you prepare trial balance, your trial balance agrees. How, sir? Look at, observe carefully. Illustration 2. Tell me total how many accounts we have? Purchases account. Next one, freight account. Next, Ajay Enterprises. Ajay Enterprises. Next one, Balaji Traders. Next one, Tripti Industries. Okay. Now tell me, each account is showing debit balance or credit balance. Purchase account showing which balance? Purchase account showing debit balance. How much? 1,26,000. Freight account is showing 450 credit balance. Sorry, debit balance. Freight also. Ajay Enterprises. Ajay Enterprises total 64,950. 64,950. Balaji Traders total 34,000. Sorry, 30,800. 30,800. Tripti Industries total 30,700. Now simply total 1,26,450. Supplier accounts credit balance na 64,950 plus 30,800 plus 30,700. 1,26,450. Understood? Why I have explained this problem with this much of slow? Why? Because you should understand how the transactions are recorded in purchase book, and how the transaction recorded transactions are posted into ledger accounts, and how we check whether trial balance agrees or not. This is our trial balance. Hope you understood. Make it fast. Yeah, this is purchase book. After that, ledger accounts. Okay, now we discuss next concept. Now let us discuss illustration number 3. This problem is based on sales book. Now we understood how to prepare sales book. We quickly revise it. In the sales book, only we record credit sale of goods, goods sold for cash, sale of items other than goods are not entered in the sales book. Okay, and we also understood how sales book is prepared, the format of sales book. The sales book format is similar to purchase book. In the purchase book, we write supplier name and items purchased in and invoice number. But in sales book, we write customer name along with goods sold plus outward invoice number. That is only the basic difference. Remaining all are similar. Okay. Now read one by one transaction. Identify whether it is credit sale of goods or not. If it is credit sale of goods, we record it in the sales book, otherwise we ignore by writing a note point. Okay, now look at one by one. The following are some of the transactions of Messrs. Kishore and Sons of the year 2022 as per their waste book. So that means they are maintaining these transactions in a separate book, waste book, only transactions. Make out their sales book. Now what we have to do? Just we have to prepare a sales book. While reading the problem, be careful whether the requirement is only preparation of sales book or purchase book or sales returns book, whatever it may be, and posting also. In the illustration 1, the requirement is only preparation of purchase book. The requirement is only preparation of purchase book. But, excuse me, but in illustration 2, the requirement is posting plus the recording plus posting. Now, here the requirement is only preparation of sales book, but we try to understand how these transactions are posted into various ledger accounts. Clear? Now, first one. A. Sold to Messrs. Gupta and Verma on credit 30 shirts at 800 per shirt, 20 trousers at 1000 per trouser, less trade discount 10%. Now you people tell me, will you write this transaction in sales book? Yes sir, we write. Why? Because it is a credit transaction. What we are selling, shirts, trousers, that means their business is a menswear. Yes or no, students? Or clothing business or ready-made garment business, whatever it may be. Now in this problem, if you observe, separately we are not charging freight from customer, but in illustration 2, our suppliers charged freight from us, so that we maintained freight column separately. Suppose if we charge freight to the customers, then we also maintain freight column in the sales book. Hope you are following. Right. Now look at sales book. Write down the first transaction. Here they have given only year, not date. So that's why write down, they have given numbers now. We also follow the numbers. First one, Messrs. Gupta and Verma. Messrs. Gupta and Verma. What we have sold, tell me? 30 shirts at 800 per shirt. 800 per shirt. Total becomes 800 into 30, 24,000. Okay, write down details column. Next one, 20 trousers at 1000 per trouser. 20 trousers at 1000 per trouser. total 20,000, gross total 44,000, less trade discount is there, deduct at 10%. Trade discount is at 10%. How much? 4,400. What is the net amount? 44,000 minus 4,400. That comes 39,600. That's it. This is the first transaction. Next one, look at next one. Second one. Sold furniture to Messrs. Sehgal and Co. on credit 8,000. Here what we sold? Furniture. Our business is not selling furniture. Na? Our business is selling garments. Okay, so this transaction is not recorded in sales book. Yeah, this transaction is recorded in journal. How? Mr. Sehgal and Co account debit to furniture account. I repeat, Mr. Sehgal and Co account debit to furniture account 8,000. This is recorded in journal proper. But in sales book, it is not recorded. We just write a note point and leave it. Next one, see. Sold 50 shirts. Yes, we have sold shirts, so it is goods. To Messrs. Jain and Sons at 800 per shirt. Yes, this transaction is recorded in the sales book. Write down. Messrs. Jain and Sons. Jain and Sons. What we have sold? 50 shirts at 800 per shirt. 50 shirts at 800 per shirt. How much? No trade discount, na? So directly write down the amount. So 800 into 50 comes 40,000. Understood? Next one. D point. Sold 13 shirts to cheap stores at 750 each for cash. What we have sold? We sold goods, but we sold these goods for cash. That's why this transaction is not recorded in sales book. In which book it is recorded? It is recorded in cash book. It is recorded in cash book because it is a cash transaction. No? Next one. E point. Sold on credit to Messrs. Mathur and Jain. On credit. They are giving on credit. 100 shirts at 750 per shirt. 10 overcoats at 5,000 per overcoat and a trade discount also there. Yes, this transaction can be recorded in sales book. Write down E point. Messrs. Mathur and Jain what we have sold 100 shirts at 750 per shirt. 750 per shirt. Next one 10 overcoats at 5,000 per overcoat. 10 overcoats at 5,000 per overcoat. Here it comes 7,500. Here it is 50,000. Total 57,500. This is 75,000. No? My mistake. 100 shares into 750 comes 75,000. 10 overcoats into 5,000 each, 50,000 plus 75,000, 1,25,000. Less trade discount is there, na? Deduct. Trade discount 10% comes 12,500 minus 10%, 12,500, remaining amount 1,12,500. This is our sales book. Now total it. Total 1,12,500 plus 40,000 plus 39,600. Total comes 192 100. Is it clear? Now what is the note point here? goods sold for cash and furniture sold are not entered in the sales book. Why? Goods sold for cash is entered in cash book, furniture is entered in the journal proper. That's it. This is our sales book. Now what we do is we try to post them into ledger accounts also. Sir, how, sir? Simple. First, identify how many accounts we open. Identify how many accounts we should open. First one, which book you are preparing? Sales book. So that you have to create sales account in the ledger. Next one, Messrs Gupta and Verma. Next, Messrs Jain and Sons. Next, Messrs Madhur and Jain. So total 4 accounts you have to open. 4 accounts you have to open. Observe carefully. Illustration 3, posting. Illustration 3, postings. Observe. Just a minute. Yeah. Okay. First one, sales account. So in the sales account, what we do? Take the total of sales book. What is the total of sales book? 1,92,100. What we do, what we write is by. We write the date, but date is not given. So by total or sundries also you can write. Total or sundries as per which book? Sales book. What is the total? 1,92,100. This is how we post into sales book. What is the next account we have? Next account, Messrs Gupta and Verma. Messrs Gupta and Verma account is simple. Next account, Messrs Jain and Sons. Next account, Messrs Mathur and Jain. Okay, now observe carefully. Messrs Gupta, all these are debtors. Whenever we sold goods on credit, debtor account is debit. So that posting also is on debit side. Posting is also is on debit side. Simply we write the date of transaction. Here date of transaction is not given. So that simply write down to sales account. What is the total? 39,600. 39,600. Messrs Jain and Sons, same. First we write date of transaction to sales account. What is the total amount of sales? 40,000. Next, Messrs Mathur and Jain to sales account 1,12,500. That's it. Now observe carefully. Here total credit is 1,92,100 total credit, and debit, observe, 39,600 plus 40,000 plus 1,12,500. So debit total is equal to credit total. So ledger also, trial balance also agreed. Credit total 192,100. Debit total. Understood? So this also you have to check whether all debit is equal to credit or not. I hope you understood this problem. Posting also I have explained. Okay. Next look at. Next we discuss next concept. Fine. Observe carefully. This illustration is on the purchase returns book. From the following transactions, prepare the purchase returns book of Alpha and Co, a saree dealer. So what is the nature of business? Saree dealer. Okay. Only if we return. So what is the nature of purchase returns book? Tell me which transactions we record in purchase returns book. Tell me. Only goods purchased on credit, which were purchased earlier on credit, only we record this transaction in the purchase return book. Suppose we purchased goods for cash and we returned them. Will you record this transaction in this purchase returns book? No. Why? Because when you purchase goods for cash, if you return them, most probably you may get cash. That means you are receiving cash now. So it is recorded in the cash book. That is the reason only we record the goods which were purchased earlier on credit. Now we are returning them and identify this type of transaction. Identify this type of transaction and record it in the purchase returns book. Hope you are following. Look at date of transaction they have given and debit note number they have given. We understood what is debit note here. Whenever we return goods to the suppliers, we prepare a document. That a document is nothing but debit note. Okay, this debit note contains the details of supplier and the details of our details, plus what are the goods we are returning, its quantity, price, and reason for returning, date of return. All these details contains in the debit note, and this debit note is consecutively numbered. Fine. Now first one, 4/1/2022, debit note number 1, returned to Goyal Mills, Surat, 5 polyester sarees at 1000. 5 polyester sarees at 1000. Fine. First, draw the format of purchase return book. You people draw the format of purchase, pause the video and draw the purchase return book. Okay. Now look at. Write on the first transaction. 4/1/2022. 4/1/22. Okay. Goyal Mills. Goyal Mills, Surat. What we are returning? 5 polyester sarees at 1000 rupees. 5 polyester sarees at rupees 1000. Clear? So total how much? 5000. Debit note number 101. Debit note number 101. 5000. Okay, next one. 9/1/2022, Garg Mills, Kota. Garg Mills, Kota place. Kota is a place, Garg Mills is a supplier name. Accepted the return of goods. We returned which were purchased for cash. So earlier we purchased these goods for cash. Now we are returning 5 Kota sarees at 400. As this is a cash transaction, we should not record this in the purchase returns book. Simple. Next one. 16/1/2022, debit note number 102. Returned to Mittal Mills, Bangalore. Mittal Mills, Bangalore. 5 silk sarees at 2600. Write down. 16/01/2022, Mittal Mills, Bangalore. What we have written? 5 silk sarees. 5 silk sarees at rupees 2600 each. So total comes 5 into 2600, 13,000. 5 into 2600, 13,000. Just a minute. Debit note number 102. After writing, next one, 30/1/2022. Returned one computer being defective at 35,000 to B and Co. See, if you observe what we are returning, computer we are returning. Our business is what? Saree dealer. At the beginning only they mentioned. But we are returning computer. Computer is asset. So it is not recorded in the purchase returns book. It is recorded in the journal proper. Hope you understood. That's it. No other transactions. Now total it. 18,000 total. That's it. This is our purchase returns book. Now, if you want to post these entries in the ledger accounts, then first we open purchase returns book account. Which book you are maintaining? Purchase returns book. So open purchase returns account in the ledger. Next, Goyal Mills Surat. Next, Mittal Mills Bangalore. These three accounts we open in the ledger. Already purchase returns account we open. Goyal Mills we are returning means already we purchased now. When you purchase goods, in that case Goyal Mills account is already opened in the ledger. Mittal Mills already opened in the ledger. Simply we post it now. But here we don't have those accounts earlier. Now we record. We prepare them. That's it. This is our problem number 5. Illustration 5. Make it sure that this is very simple problem. In the previous attempt, they have given sales returns book. Sales returns book. In January 2025 attempt, they have given sales returns book. Here purchase returns book. Is it? So if you get any problem from subsidiary books now, it becomes very easy. You can score easily 4 to 5 marks. Hope you are following. Yes, we discuss the next concept. Now we discuss illustration number 4. This problem is on the concept of purchase returns book, but if you observe this problem, they have already given purchase returns book or returns outward book. Now what we have to do? We have to simply post into various ledger accounts. That is the problem here. Already purchase returns account is prepared. Sorry, purchase returns book is prepared. Now, from this purchase returns book, we simply post them into ledger. That concept we learn in this illustration. Look at post the following into the ledger. Now, first observe the book. Observe the returns outward book. November 20, Rajendra Prakash and Sons. We returned 136-inch Usha ceiling fan, 200. Trade discount 10%, 20. So, what is the amount? 180. Next, November 30, Modern Electric Company. We returned goods to Modern Electric Company worth 100. What is total returns outward book? 280. Now, identify how many accounts we open. Identify how many accounts we open. First account, returns outward account or purchase returns account. Generally, we use returns outward account. Next, Rajendra Prakash and Sons. Rajendra Prakash and Sons, second account. Next, Modern Electric Company account, third account. These three accounts we open now. I repeat, these three accounts we open now. Hope you are following. Right. Now, pause the video, open these three accounts. Open these three accounts. Okay. Now, observe carefully. First one, go to returns outward account. First, go to returns outward account. What is the total of returns outward account? Tell me. Total of return outward account is 280. On which date we total? Here the last transaction date is November 30. We also take the total November 30. Okay. So, purchases account is debit now. I repeat, purchases account debit, whereas purchase returns account credit. I repeat, purchases account debit, purchase returns account credit. So, go to purchase returns account credit side or returns outward account credit side. Write down the date 2022, sorry, 2022, November 30. November 30. What we write? Simple. Credit side we are writing now. So, write with the word BY by sundries as per returns outward book 280. Over. That's it. By sundries as per returns outward book. Generally, if you observe returns outward account, credit side what we have to write? Supplier names to whom we returned goods. But already supplier names are there in the, just a minute. there in the purchase returns book na. That's why separately we are not writing supplier name. So that total amount we are writing 280. That is as per returns outward book. Now next come to Rajendra Prakash and Sons. On which date we returned goods to them? November 20. Now normally visualize the journal entry. What is the entry for purchase returns? Supplier account debit or creditor account debit to purchase returns account. Creditor account debit to purchase returns account. So we post into creditor account debit side now. We post into creditor account debit side. Now Rajendra Prakash account debit side 2022 November 20 to returns outward account or simply to returns outward. How much? 180. Over. Posting completed. Next, November 30, we returned goods to Modern Electric Company. Normally, what is the journal entry we record if you don't maintain any subsidiary books? Modern Electric Company account debit to returns outward account. Posting. Modern Electric Company account is debited na. On the debit side, simply we write 2022 November 30 to returns outward account. To returns outward account, how much? 100. That's it. Over. Posting is completed. Posting is completed. Rajendra Prakash and Sons, debit side. Modern Electric Company account debit. Debit side. Returns outward account credit side. Now check arithmetical accuracy. Means total debit whether it is equal to credit or not. See, total debit 180 plus 100. 280 is total debit. Returns outward account credit 280. This is our illustration 4. Observe carefully. Okay, next. Now we discuss problem practice question 1 and 2. Practice question 1 and 2. Sir, what is this practice question 1 and 2? Practice question 1 is preparation of sales book. Preparation of sales book. Practice question 2, practical question 2 is posting the sales book entries into ledger. Here I have combined practical question 1 and 2. Means in this problem we learn how to prepare sales book plus how we post from sales book to various ledger accounts. Already we understood how we post transactions from sales book to various ledger accounts in illustration 3. Now observe practical question 1 and 2. Enter the following transactions in sales book. Immediately you have to recollect the concept that which transactions we record in the sales book. Of Messrs. Pranath Engineers Limited, Delhi. So date is given 2022 January 2nd. Observe, sold to Messrs. Ajanta Electricals, Delhi, 5 pieces of ovens at 6,000 each, less trade discount 10%. Tell me, is this transaction recorded in the sales book or not? Yes, it is recorded because it is credit sale of goods. So here they are selling what? Ovens. Means they are dealing with some electronic items. Yes or no? Now, next one. Eighth one. Sold to Messrs. Electronics Plaza, 10 pieces of tablets at 8,000 each, less trade discount 5%. This is also recorded in the sales book. 15th date. Sold to Messrs. Haryana Traders, 5 pieces of juices at 3,500 each, less trade discount 10%. This is also recorded in the sales book. Means all the transactions given in the problem are recorded in the sales book. Now immediately draw the format of sales book. If you observe here, it is the format suggested by ICAI. What is that? Date, particulars, gross amount, trade discount, net price. You can follow this format or else you can follow our regular format also. What is the regular format? Tell me. Date, particulars, outward invoice number, outward invoice number, details, amount. You can follow this format also, no problem at all. You get full marks. Either you follow this format or you can follow this format for the preparation of sales book. Hope you understood. Next one. Now look at the first transaction 2022. Write down 2022 January 2nd. Messrs Ajanta Electricals. 2022 I am writing here. January 2nd. Messrs Ajanta Electricals. What we have sold? 5 pieces of ovens at 6,000 each. Write down 5 pieces of ovens at rupees 6,000 each. Out of that, what we deduct? Trade discount we deduct. When you are following this format, writing amounts is very important. Look at trade discount at 10%. At 10%. Write down the gross amount here. How much total? 30,000. 5 pieces of ovens at 6,000 each. 5 into 6,000, 30,000. Trade discount 10% means 3,000. Then what is the net price? 27,000. This is how we write. If you write the same information in this format, then how we write? First we write the amount in outer column. First we write the amount in outer column. How much? 30,000 less. We deduct trade discount at 10%. 3,000. Outer column 27,000. This is how we write. That is only the difference. Presentation only difference. Remaining everything same. Next, January 8th, we sold to Messrs Electronics Plaza. Write down January 8th, Messrs Electronic Plaza. What we have sold? We sold 10 pieces of tablets at 8,000 each. Write down 10 pieces of 10 pieces of tablets at 8,000 each, less trade discount. Less trade discount at 10%. Sorry, 5%. Trade discount is at 5%. Okay, 10 pieces into 8,000 means 80,000. Trade discount 5%. So 80,000 into 5%, it comes around 4,000. Remaining 76,000. Understood this? Next one. January 15th, we sold to Messrs Haryana Traders. January 15th, Messrs Haryana Traders. What we have sold them? 5 pieces of juicers at 3,500 each. 5 pieces of juicers at 3,500 each, less trade discount. Trade discount is at 10%. This time trade discount is 10%. Total 5 pieces into 3,500 each. It comes 17,500. Trade discount 10%, 1750. Minus 10%, we get 15,750. This is our sales book. Total of sales book 15,750 plus 76,000 plus 27,000, 1 lakh 18,750. This is our sales book. First complete till here. Next we post into ledgers. Tell me how many ledger accounts we open first. We are maintaining sales book, so that we open sales account first. After that, Mrs. Ajanta Electronics, Electricals, Mrs. Electronic Plaza, next Haryana Traders. Total we open 4 ledger accounts. Total we open 4 ledger accounts. Observe, Mrs. Ajanta Electronics, Electricals, Electronics Plaza, Haryana Traders, and sales account. Clear? Now first come to sales account. What is the total of sales account here? What is the total of sales account? Yeah. Now how do we post? Tell me. First go to sales account. We recorded the transactions till January 15th. Now we total this sales book at the end of January 31st. Okay, first write down 2022 January 31st. What we write? Buy sundries. Because when you sell goods, what is the entry we record? Debtor account debit to sales. Sales account credited. Na? Normally in the sales account credit side, what we write? Customer names or debtor names. Already debtor names we have in the sales book. The same you need not to write in the sales account. Buy sundries as per sales book. By sundries as per sales book. What is the total of sales book? 1,18,750. 1,18,750. Observe. 1,18,750. Over. Sales account posting completed. Now come to Ajanta Electricals. We sold goods to Ajanta Electricals on January 2nd. Na? So write down the date here. 2022 January 2nd to sales account. What's the total amount? 27,000. That's it. In the brackets, if you want, you can write from sales book. From sales book. Clear? So remaining 2 accounts also we write the same. Date of transaction will change. January 8th. January 8th. 2022. January 8th to sales account. What's the total amount of Electronic Plaza? 76,000. From sales book. Over. Next account. Next we sold on January 15th to Haryana Traders. 2022. January 15th to sales account bracket low from sales book. From sales book, how much? Total 15,750. Now check debit equal to credit or not. Here total is 1,18,750 credit. Here 15,750 debit. Here 76,000 debit. Here 27,000 debit. Debit is equal to credit. After posting, don't forget to check debit whether it is equal to credit or not. This is our problem practical question 1. Observe carefully. This is sales book and this is postings. Hope you understood all the problems. See, till now what we did, we have prepared purchase book. Illustration 1. Illustration 2, we have prepared purchase book along with postings from purchase book. Third problem, sales book. We also understood how to post recorded entries to various ledger accounts. Illustration 4, we understood how to post from purchase returns book. Illustration 5, how to prepare purchase returns book or returns outward book. And practical question 1 and 2, sales book and its posting. Yes or no, students? Yes, sir. Fine. Now we discuss the next concept. Look at. Hello, students. How are you all? I hope you are doing well. In the previous lectures, we have completed subsidiary books chapter. There we have learned how instead of maintaining one single journal, how we maintain various sub journals to minimize the accounting work or bookkeeping work. And we have also seen different types of subsidiary books plus the advantages of maintaining subsidiary books. There we have missed one book, that is cash book. Now about cash book we learn in this chapter. We already understood that cash book is a subsidiary book which is meant to record cash receipts and cash payments. Okay, now observe carefully. In the business organization, we have two different types of transactions. One is cash transaction, another one is credit transaction. Credit transaction. In the subsidiary books chapter, we have seen that credit purchases, recorded in purchase book, credit sales recorded in sales book, other credit transactions, other credit transactions are recorded in journal proper. Journal proper. This we have discussed in the previous classes. Credit sales, sales book. Credit purchase, purchase book. Is it clear? Yes, sir. So cash transaction means what? Cash transaction nothing but cash receipt, cash payment. Cash receipt and cash payment. Business will receive cash in various forms. Here, cash includes bank also. Whenever we talk about cash transaction, it also includes bank transactions. Okay, so businesses will receive various receipts in cash or checks, and various payments. The business will make various payments through cash or through bank. Now, it is very beneficial to the business organizations to record all these cash receipts and cash payments in a separate book, that is cash book. That is cash book. Observe carefully. Most of the transactions in the business may be cash receipts and cash payments. At the same time, credit purchase of goods, credit sale of goods. Most of the transactions are these type of transactions. That's why what we are doing, we are maintaining one special book for one special transaction. One special book for one special transaction. Yes or no, students? In the previous classes, we understood about various books. Now, in this chapter, we understand exclusively about cash book. Here you can understand the importance of cash book. Why? Because in the previous chapter we understood about a purchase book, purchase returns book, sales book and sales returns book. Why we are learning cash book as a separate chapter? So that much of importance we have for cash book chapter. Do remember, students. Now, this cash book we can again divide into three types of cash book. Types of cash book we can divide into three types of students based on the need of the business. Okay, first one, simple cash book. First one, simple cash book. Next one, two column cash book. Two column cash book. Next one, three column cash book. We discuss about one by one. We discuss about one by one. Now you can understand why we are studying cash book as a separate chapter. Because based on the nature of business, type of business, or volume of the business transactions, we maintain cash book in these three formats: simple cash book, two column cash book, and three column cash book. Apart from these cash books, some business organizations they may also maintain petty cash book. These three are main cash books. These three are main cash books. Observe carefully. Simple cash book, two column cash book, and three column cash book. Sir, what is this simple two column and three column? Now, this chapter petty cash book. In the whole chapter of cash book, we talk about these four cash books: simple, two column, three column, and petty cash book. Hope you understood. This is the basic introduction to the chapter cash book. Do remember, keep in one thing in your mind. In the entire chapter of cash book deals with cash receipts, cash payments. That's it. We learn how to record cash receipts and cash payments in the cash book. That's it. And don't forget that we are learning rule based accounting. What? Rule based accounting we are learning. Here we are not changing any rules. We have learnt already in the journal chapter that debit credit rules. Debit what asset comes in, credit what asset goes out. That's it. Real account rule. Personal account: debit the receiver, credit the giver. Nominal account: debit all expenses and losses, credit all incomes and gains. That's it. Any faculty teaches this, or our ancestors or next generations, whoever teach the same subject, the same rule. There is no need to change the rule. Is it clear? Yes. Now look at material. We have given learning objectives for every chapter. Just go through that. Either before reading the chapter or at least after completion of the chapter, try to read these learning objective points. Right. Now look at cash book. First concept, cash book. Cash transactions. Cash transactions in a firm are generally large in number, receipt or payment. Therefore, it is convenient to maintain a separate cash book. A cash book is a book of prime entry in which cash and bank transactions are recorded chronologically. As we understood already, subsidiary journals or subsidiary books are nothing but books of original entry. Why? Whenever a transaction is happened, we are first recording in the subsidiary book now. That's why these books are called books of prime entry or original entry. Right? Kinds of cash book. First one simple cash book, second one two column cash book, next one three column cash book. Apart from that, the business organizations will maintain petty cash book also. Now first we discuss one by one. Once you understand how to prepare simple cash book, two column cash book, three column cash book, and petty cash book and its nature, then this chapter gets completed. Hope you are following. Now look at the first concept, simple cash book. Nothing but simple cash book looks like a cash account format. Observe. First look at format of simple cash book, then we come to content. Look at how many columns total: 1, 2, 3, 4. 1, 2, 3, 4. Total 8 columns we have. If you observe this format looks like a T-shaped format. Left hand side we write receipts, right hand side we write payments. If you observe purchase book, sales book, purchase returns book, and sales returns book, to write amount we have only one column. And the purchase book format, sales book format, purchase returns book format, sales returns book format, these formats are looks like journal format. But whereas cash book format is ledger format. Cash book format is ledger format. Why, sir? Because in the cash book we should write receipts, at the same time payments now. That's why we have to divide the page into two sides: left hand side, right hand side. Left hand side is called receipt side or debit side, right hand side is called payments side. Okay, now look at in this simple cash book which transactions we record. Like in the purchase book we record only credit purchase of goods. In the sales book we record only credit sales of goods. In the same manner, in the simple cash book or entire cash book we record only cash receipts and cash payments. Now, in the simple cash book, only the cash receipts and payments are recorded in this book. Clear? Non-cash transactions are not recorded. Non-cash transactions are not at all recorded. For example, rent due but not yet paid for January has not been recorded in the cash book. Rent due, we have to pay rent, but it is not yet paid. We have not paid. Will you record this transaction in the cash book? No, it is not paid. We write only when we pay rent actually, or only when we receive rent actually, or only when we pay actual cash, or only when we receive actual cash. Then only we record the cash transactions in the simple cash book. Observe carefully the format. By looking this format, you can understand that in the date column, what we write? Date of transaction. Receipts column, what we write? Cash receipt. How we received cash. LF column. Here you may ask, sir, in the ledger account generally we maintain JF column now. Yes, but this is not ledger account. This is cash book, subsidiary book. Then why we are maintaining LF column, sir? If you remember in the journal format, there we maintain LF column now. Yes, cash book is also a subsidiary book, journal. Why we are maintaining ledger folio? Why? Because if you observe, in the purchase book, after recording the transaction, what we do? We post from purchase book to various accounts. Here also same. After recording the cash transactions in the cash book, from cash book we post individual amounts to various ledger accounts, and this ledger folio is nothing but reference of ledger account, the folio of ledger account in the ledger book. I repeat, the folio or page number of ledger account in the ledger book. For reference purpose, we are maintaining ledger folio. And amount column, we write the amount received. Credit side, the date of making payment we write. Next, payment side, why we are making payment, like are we making payment for purchases or rent? Here we write the nature of payment. LF column, same, ledger reference number, amount of payment made. This is the simple cash book format. Next, observe, it looks like an account with one column on each side to record the amount. Yes or no? If you observe, amount column, each side one amount column, debit side receipt, credit side payment. Cash receipts are recorded on the left hand side and cash payments are recorded on the right hand side. Now, after recording cash transactions in the cash book, next step is what? Posting from cash book to various ledger accounts. If you remember, we have prepared purchase book. In the ledger, what we did, we have opened a purchase account and supplier accounts. Purchase book total is posted to the debit side of purchases account. Individual postings are posted to the credit side of supplier account. Credit side of supplier account. In the same manner, once we record the transactions in the simple cash book, in the ledger, you need not to maintain separate cash account. I repeat, when cash book is maintained, cash book is maintained, we need not maintain cash account in the ledger. Very, very important statement. Purchase book is maintained, purchase account is opened in the ledger. Sales book is maintained, sales account is opened in the ledger. Purchase returns book is maintained, purchase returns account is maintained in the ledger. But cash book is maintained. When cash book is maintained, you need not to maintain cash account in the ledger. Why? Because in the cash book itself, we can know the balance of cash. Why? Because left hand side we have receipts, right hand side we have payments. Now balance this account, we can identify cash in hand. Cash in hand. Understood this concept? That's why. But remaining postings, na, except cash account, remaining accounts are posted individually. Like receipts are posted into receipts account, payments are posted into payments account. Fine. Now look at balancing of simple cash book. You need not to prepare cash account separately now. Yes. Then how this cash book is balanced? Cash book is balanced similar to cash account. Cash book is balanced just like cash account. That's it. How cash account is balanced? Total debit, total credit. Difference is nothing but balance of the account. We have balanced cash account now. Same manner. Okay. Look at the cash book is balanced like any other account. The total of receipts column is always greater than the total of payments column. Why? The receipts are always greater than payments. If you don't have receipt, how can you make payment? That's why receipts are more than payment always. Next, the difference is written on the credit side as buy balance C by D. We know very well the balancing of account format. After that, the totals are then entered in the two column opposite to one another. See, if we prepare account now, suppose the total is 1 lakh. Yes, credit side also 1 lakh. Both are opposite to one another. On the debit side, the balance is written as 2 balance B by D to show the cash balance in hand on the beginning of the next period. Means we write like this: 2 balance brought down, by balance carried down. Already we understood this technique in the ledger chapter. The same balancing procedure. Here you may ask a question. What? Why can't a cash book have a credit balance? Just now I have given answer. Why? Receipts are always more than payments. If you want to make payment, first of all you should have money na. Without money, how can you make payment? That's why, okay, you may ask, sir, we may borrow na. Yes, if you borrow, that also becomes receipt. Even you borrow money or even additional capital is introduced, that is also receipt first. So first record it, then after you make payment. That's why the cash book never show credit balance. It shows only debit balance. Credit balance means credit side what you are writing? Payments. Payments never be more than receipts. That is the reason cash book never shows credit balance. Okay. With this brief introduction about simple cash book, now let us solve first illustration 1. If you can solve illustration 1, then you can understand this cash book preparation. Okay. Meantime, you do one thing, just go through the concept once again. Go through the concept once again. Okay. Now let us start illustration 1. I hope you understood illustration 1, students. After solving illustration 1, now you got an idea about how to prepare the cash book and how cash book is prepared and it is balanced, and why cash book always shows debit balance, and all these questions you got answers now. Fine. Now look at, by looking the above cash book, we can observe some things. So what are the observations from simple cash book? Look at, when the cash book is maintained, cash account is not opened in the ledger. We understood that. The cash book is balanced just like any other account. Yes. But if you observe purchase book, sales book, purchase returns book, sales returns book, will you balance these books or will you totaled? Just totaled. But whereas cash book is balanced. It does not record non-cash transactions, checks received or given, and discounts allowed and received. As this is a simple cash book, only we record cash receipts and cash payments. Non-cash transactions, bank transactions never be recorded in the simple cash book. Next, cash book will not have a credit balance. All these points already we understood by looking at a simple cash book. Now look at, we discuss about double column cash book. Sir, what is the necessity of double column cash book? Observe carefully. I will give you one transaction. I will give you one transaction. You people tell me the journal entry. Okay. Amount received from A, rupees 5,000, and allowed discount rupees 100. Now For this transaction, you people tell me journal entry. Okay, tell me. First, tell me the journal entry. Can you tell me the journal entry? Yes, sir. Tell me. We received cash na, so cash account to debit 5,000, discount allowed account to debit 100, to A account 5,100. This is the journal entry we record. Yes, sir. Now, now we are visualize that we are maintaining subsidiary books. We are maintaining subsidiary books. Now, you people tell me this entry contains two things. This entry contains two things. One, cash transaction. Another one, non-cash transaction. Did you observe? Did you observe? This entry contains cash transaction. Sir, what is cash transaction? Cash account to debit to A. It is cash transaction. Then what is non-cash transaction? Discount allowed account to debit to A account. It is non-cash transaction. Now, discount allowed is not cash transaction. It is non-cash. So cash transaction we should record in cash book, and non-cash transaction means discount. Discount allowed is non-cash transaction. It is recorded in the journal proper. Yes or no? Means whenever we receive amount, generally to whom we allow discount? Debtors. Whenever we receive amount from debtors, suppose if we allow some discount, in that case we should record entries in two places. One, cash transaction is recorded in cash book. At the same time, discount allowed transaction, that means discount allowed entry, we should record in journal proper. Journal proper. It is inconvenient to a bookkeeper because cashier is maintaining cash book, journal proper is maintained by somebody. Now you people tell me, it is some inconvenience to the bookkeeper. That's why what we do now, anyway we are maintaining simple cash book now. Anyway we are maintaining simple cash book. Now why don't we allow one more additional column on the receipts side and payment side, or left hand side and right hand side, to record this discount. At the same time, whenever we make payment to any creditor, creditor may allow some discount to us. In that case, what is the entry we record? Creditor account debit, creditor account debit to cash account to discount received account. Anyway, this entry also contains two transactions. One, cash transaction, that means cash payment. Another one is discount received. Cash paid is recorded in cash book, discount received is recorded in the journal proper. Observe carefully. And these are possible when we pay amount to the creditors and receive discount, and when we receive amount from debtors and when we allow discount to them. So instead of recording cash transaction in the cash book and this discount transaction in the journal proper, now what we do is to minimize the accounting risk. Sometimes we may forget, after recording the transaction in the cash book, sometimes we may forget to record the discount transaction. That's why to minimize this risk, what we do is the simple cash book is extended. I repeat, the simple cash book is extended. This is simple cash book now. Now it is extended means already we are maintaining one amount column for recording cash. Now what we do is to the same uh, format, we draw one more column. We draw one more column for recording discount. Discount allowed is expense debit side, discount received is gain credit side. Look at date, receipt, LF, cash, date, payment, LF, cash. It looks like simple cash book. What we are doing, we are just adding one more column for recording discount allowed and discount received. Now this became two column cash book. What is the meaning of two column cash book? Nothing but we are maintaining two amount columns. We are maintaining two amount columns for recording transaction. Discount allowed column, cash column. Discount received column, cash column. This became two column cash book with cash and discount. Suppose in our business there are no credit transactions, there are no credit purchase, there are no credit sales. In that case, you need not to maintain discount columns now. Yes or no? Yes. And one more thing, observe. I will give you one more transaction and you people tell me the entry. Purchased furniture, purchased furniture, rupees 1 lakh, paid cash rupees 50,000 and issued check for the remaining amount. Check for the remaining amount. Now you people tell me what is the entry you record. Write down first. You people write down the entry first. So furniture purchase na it is asset for us. So furniture account debit. Furniture account debit 1 lakh. 2. We are paying cash now to cash account 50,000. At the same time we are issuing check now to bank account 50,000. To bank account 50,000. This is the entry we record. If you observe, this transaction contains two different transactions. One is cash, second one is bank. Cash transaction anyway we record in cash book. Then what about a bank transaction? Because we paid 50,000 out of bank na, where do you record this bank transaction? Will you maintain bank book? Will you maintain bank book? In that case, it becomes difficult because maintaining cash book, maintaining bank book, it becomes little bit extra work for the cashier now. That's why. And two separate books you have to maintain. Whenever cash paid, we record in cash book. Whenever paid through bank, we record in bank book. It becomes little bit difficulty again. That's why what we are doing to the same simple cash book, why don't we add one extra column for recording bank transactions? The idea is good. Observe carefully. See, date, receipts, LF, cash. Till here it is simple cash book. Now what we are doing, we are adding one extra column for recording bank transactions. And date, payment, LF, cash, bank transactions. Understood everybody? Yes sir. Means two column cash book is maintained either by drawing cash and discount or cash and bank. Very very important true or false statement. Two column cash book is maintained in cash and bank column, discount column. No. Two column cash book is maintained either cash and discount and cash and bank. Understood students? Look at now. It is a cash book with two columns on each side to record the amount. Two columns on each side to record the amount. Two columns may be maintained cash and discount, cash and bank. Either one. Either one. First we discuss cash and discount column. Then we discuss cash and bank. Okay. Now this is the format. Now how do we record the transactions in this two column cash book? Tell me. Discount allowed is recorded on the debit side. Cash received in the cash column. Discount allowed, discount received on the credit side. Cash paid on the credit side. Observe carefully. Remaining everything is same. Now how do we start this two column cash book. Suppose if your business is for the first time, you are starting business, your business is a new business, then automatically we introduce capital na. Our two column cash book starts with the capital, like that we write like two capital, two capital. Suppose if your business is existing business, this two column cash book starts with opening balance. Opening balance. So opening balance, how do we write? Two balance brought down. Two balance brought down. If your business is a new business, we start this two column cash book with the two capital. If your business is an existing business, then we start a two column cash book with the opening balance. These are the important points. Look at. And all receipts and discount allowed. All receipts are recorded in the cash column, receipt side. Discount allowed column. All payments and discount received. Payments are recorded on the credit side, discount received also credit side. Now, how do we balance? Because cash book is balanced like a ledger account now. Now, how do we balance this? This is the important point in this problem. Observe, here we have two columns. Discount to cash. Cash columns are balanced just like simple cash book. Cash columns are balanced just like simple cash book. Whereas discount allowed, discount received, observe carefully. This is discount allowed column and this is discount received column. These two columns are different columns. Debit side, receipt side cash, payment side cash, same columns cash. Whereas receipts side discount allowed, payments side discount received, these two are two different columns. When we have two different columns on different sides, then it is not possible to balance these two columns. Instead of balancing these two columns, now we just total it. I repeat, instead of balancing these two columns, we simply total, total. That's it. Cash columns balance. Discount allowed column total. Discount received column total. Sir, what next? Simply go to discount allowed account. Simply go to discount allowed account. Write down on the debit side two sundries as per two column cash book. Two column cash book. That's it. That's it. Simple. And go to discount received account. Go to discount received account credit side. Buy sundries as per two column cash book or simply cash book. Over. That's it. So the total of discount allowed column is debited to the discount allowed account. Total of discount received column is credited to the discount received account. Any doubt here? This is how we balance two column cash book. Observe the balancing procedure. Cash column, discount allowed column, discount received column. Okay. Now we try to solve illustration 2. Then after we come to cash book with cash and bank columns. Cash book with cash and bank columns. Hope you are following, students. Yes. Now look at illustration 2. In the previous class, we have discussed illustration 2. I hope you understood this illustration. So here we have prepared cash book with two columns, one for discount column, another one for cash column. Don't forget, while balancing two column cash book, cash columns are balanced like cash account, and discount allowed column and discount received columns are totaled, and those totals are posted to discount allowed account debit side and discount received account credit side. After understanding this concept, now we discuss two column cash book, second alternative, that is cash book with cash and bank columns. Cash book with cash and bank columns. If you observe, nowadays every businessman opening bank account now. So when we deal with the bank, it is necessary to record all the transactions entered with the bank in a separate account, that is bank account. But Here already we are maintaining cash book now. Already we are maintaining cash book. So in the cash book, what we do is we maintain one extra column to record the bank transactions. So that it became two column cash book with cash and bank columns. Here all cash transactions are recorded in cash column and bank transactions are recorded in bank column. Observe carefully. Suppose we opened two column cash book with cash and bank. We started business for the first time. So with that, in that case, we introduce capital now. Now, how we write capital? What is a journal entry for introduction of capital? Cash account debit to capital account. This is how we write to capital. Okay. Next, suppose the cash book is started with opening balance. That means already our business is existing business. Now we are opening cash book. Cash book starts with opening balance. Cash column always debit balance. Cash column always debit balance. Already we understood this concept. Why cash column shows debit balance only. When it comes to bank, sometimes it shows debit balance, sometimes it may show credit balance by balance brought down. When cash book bank column is showing credit balance means it is overdraft. It is overdraft. In the problem, they clearly specify that whether it is overdraft balance or favorable balance. Based on that, we show the opening balance. Look at cash in hand. If they have given cash in hand, it is shown on the debit side as two balance brought down. If it is cash at bank, it is shown on the debit side two balance brought down. Cash column opening balance, bank column opening balance. If it is overdraft balance, if it is overdraft balance, then it is shown on the credit side by balance brought down. Do remember, bank column shows either debit balance or credit balance. I repeat, bank column shows either debit balance or credit balance, whereas cash column shows only debit balance. Hope you understood. Next one, all receipts. All receipts. All receipts are written on the receipts side as follows. Cash column if cash is received, bank column if any amount received through bank. Next, all payments. If we pay in the form in cash, then write down in the cash column, credit side. If payments are made through bank, then we write on the credit side, bank column. So before recording transaction in the two column cash book, check whether it is a cash transaction or whether it is a bank transaction. If it is cash transaction, record in the cash column. If it is bank transaction, record in the bank column. That's it. Simple. Next step. Direct deposits by customers. Sometimes our customers will directly deposit amount into bank. I repeat, sometimes our customers will directly deposit into our account. In that case, it is a bank transaction because amount is directly deposited into bank now. It's a bank transaction. In that case, what is a journal entry we record? Simple. Bank account debit, bank account debit, debtor account credit. Here, if you want, you can write down bank account debit to debtor account. Bank account debit to debtor account. Simple? Yes, sir. Next, bank charges. Bank, see, we are dealing with bank. Bank is providing so many services to its customers. For the services rendered by the bank, bank will charge some amount in the form of charges. If suppose if you have any bank account, then you can observe that for every 3 months or once in a 3 months, they will charge SMS charges. They will deduct amount towards SMS charges. Annually, they will deduct amount towards ATM card issue charges or ATM charges, SMS charges, minimum balance charges, check clearance charges. So many different charges are charged by the bank. All these are when it comes to business now, To a business, for a business people, bank will provide so many services. For the services rendered by the bank, they will charge some amount. This becomes income for bank. When it comes to customer point of view, the same charges are expenses. So we are the customers. So from our point of view, it is expense for the bank expense. So in that case, what is the entry we record? Bank charges account debit to bank account. Simple. Bank charges account debit to bank account. That's it. So these are written on the credit side of bank column because it is payment, na? Right. Next one. Now we discuss this concept later. Wait for some time. Now look at bank overdraft. Bank overdraft. Already we discussed. Generally, Mr. A has bank account with SBI Bank. Bank account with SBI Bank and deposited rupees 1 lakh in bank. Deposited rupees 1 lakh in bank. Now you people tell me how much amount? How much amount can be withdrawn by Mr. A? How much amount can be withdrawn by Mr. A? Is it equal to 1 lakh or less than 1 lakh or more than 1 lakh? The answer is he can withdraw up to 1 lakh. He can withdraw up to 1 lakh. Hashtag question. Hashtag question. How much amount can be withdrawn by Mr. A? Up to 1 lakh. Yes or no? Yes, sir. Suppose if Mr. A entered into an agreement with the bank. Hello, Mr. Banker. I am doing business. I have opened current account with you. At present, I have 1 lakh rupee in the bank. I have deposited 1 lakh rupee, but I have issued a check to my supplier worth of rupees 2 lakhs. How much amount I have in the bank? 1 lakh. But for how much amount I have issued a check to the supplier? 2 lakhs. Now tell me, if supplier deposits check into bank, the check guarantee bonds. It will get bonds. Guarantee. Yes or no? Yes. Now, Mr. A. If Mr. A credit history is good or CIBIL score is good, the bank may allow Mr. A facility called overdraft. A facility called overdraft means even though you have less amount in the bank or even though you don't have any amount in the bank, you can withdraw up to certain limit. This 1 lakh is your money, you can withdraw at any time. If you want to withdraw physically during bank hours, otherwise ATM. Okay, but if you want to withdraw more than 1 lakh, then you should have a facility called overdraft in the bank. So the bank should give overdraft facility. In that case, you can withdraw up to the limit granted by the bank. This facility is called overdraft. On overdraft, on overdraft facility given by the bank will charge interest. It is not at free of cost. Bank charges interest. Bank charges interest. Do remember. Periodically bank charges interest. Clear? This is the concept of overdraft. If it is overdraft, already we have discussed, this is shown on the credit side. And bank will charge interest. It is not free credit. That is the concept of bank overdraft. Look at, a bank may sometimes allow its customers to withdraw more money than it has deposited, called an overdraft. In this case, the total on credit side of the bank column will be higher than the debit side. Because if you observe the bank column, You have overdraft means you don't have much money in the bank, or even you have some zero balance in the bank, but you have overdraft facility, you are making payments. In that case your payment side becomes more. In that case your payment side becomes more than debit side, receipt side. In that case it is said to be your bank account is showing credit balance, means overdraft. Next one, the difference is recorded on the debit side as to balance C by D, because credit side is more now. To balance the account on the debit side we should write to balance C by D. The totals are written on both sides. Fine. The balance is carried to the credit side as by balance brought down like this. Okay, next one. However, in usual cases, debits into bank will exceed the withdrawal or payments out of the bank. Generally, bank account also generally shows debit balance. In a rare cases, it will show credit balance. Okay. Then the bank columns are balanced just like the cash columns. Okay, fine. Now look at balancing of the cash book. Simple. How many columns we have? Two columns. Cash column, bank column. Now debit side cash, credit side cash. Balance. Debit side bank column, credit side bank column. Balance. Because these two columns are same. When it comes to cash and discount, when it comes to cash and discount, discount allowed, discount received, not balanced. Just totaled. Cash, cash, balance. Here cash and bank. Yes, we can balance it. These are balanced just like any other account. Hope you understood this concept. Next one, come to cash book, a subsidiary book and a principal book. Already we discussed this concept now. Already we discussed this concept at the time of discussing illustration 1. Cash book is a subsidiary book as well as principal book. Why? Whenever a cash transaction is happens, straight away we are recording in the cash book. And you need not to post the cash, you need not to prepare again cash account. Purchase book, purchase account. Sales book, sales account. Purchase book, purchase account. Sales book, sales account. Okay, already this concept also we have discussed. But cash book, when you are maintaining cash book, you need not to maintain cash account. Is it clear? That is the important point here. Okay, next. Now observe cash transaction. Sometimes they may ask this question for 4 marks also. Okay, be careful. Cash transactions are straight away recorded in the cash book, and based on such a record, ledger accounts are prepared. Therefore, the cash book is a subsidiary book. But the cash book itself serves as a cash account. Cash book itself serves as a cash account and the bank account. If you are maintaining cash and bank columns, cash account, bank account. You need not to prepare them in the ledger separately. The balances are entered in the trial balance directly. That's why in the concept of trial balance, sometimes we used the word including cash and bank balance. Sometimes we used the word including cash and bank balance. Yes or no, students? Yes. The cash book therefore is part of ledger also. Hence it has also be treated as principal book. Because ledger book, what is the other name for ledger book? Principal book. The cash book is thus both a subsidiary book and a principal book. So this is regarding cash and bank columns. So here we have kept out some other points pending. This we discussed at the time of 3-column cash book. Hope you understood 2-column cash book well. If you can understand 2-column cash book well, then it is easy to understand 3-column cash book. Because if you get any problem from cash book chapter, that is nothing but 3-column problem. Clear, students? Yes, sir. Now look at the next concept, 3-column cash book. Now our next concept is 3-column cash book. Our next concept is 3-column cash book. You may ask, sir, why we need these many cash books? Simple cash book, 2-column cash book, 3-column cash book. Why? Because I will explain. Observe carefully. Let us say this is business 1. Business 1. In the business 1, no bank transaction. no bank transactions, no credit transactions. Now you people tell me, is it necessary to prepare a two column cash book and a three column cash book? No need. Why? Here in this business there are no bank transaction, that means no need to maintain any bank column. No credit transaction means no credit purchase or sale. No credit purchase or sale. In that case we need not to give any discount, at the same time we need not to receive any discount. If discount allowed and discount received are frequent, I repeat, if discount received and discount allowed are frequent, then we should compulsorily maintain discount columns. But here I don't have any credit transactions, credit purchase, credit sale, so that there is no concept of discount. In this case, simple cash book is suitable. For this business one, simple cash book is prepared. Simple cash book is prepared. Observe carefully. They need not to maintain two column cash book. Now look at business 2. Now business 2, we talk about business 2. Business 2, observe, there are no bank transactions. There are no bank transactions. But they have credit transaction. They have credit transaction. Means they have credit transactions. Means what? Credit purchase of goods and credit sale of goods. When we have credit purchase of goods and credit sale of goods, compulsorily at the time of making payment to suppliers or at the time of receiving amount from debtors, we allow some discount to them. When discount allowed or discount received are frequent, actually this discount allowed and discount received are non-cash transactions, we should record them in the journal proper. But this discount allowed and discount received comes along with cash receipt or cash payment. Yes or no? That's why instead of writing this discount allowed and discount received separately in the journal proper, we are maintaining one column in the cash book itself. Now to this type of business, they will maintain two column cash book. They can maintain two column cash book with cash and discount. Understood everybody? Yes sir. They can maintain two column cash book with cash and discount. It depends on whether we maintain simple cash book or two column cash book or three column cash book. That depends on nature of your business. That depends on the nature of transactions you are entering. Yes or no? Now business 3. Business 3 has no credit transactions. No credit transactions, but have bank transactions. Have bank transactions. Or business 3 has credit transaction, but the count of the credit transactions are very few, very limited credit transaction. In that case you need not to maintain any discount column separately. In that case you can write discount allowed, discount received separately in the journal proper. But they have bank transactions. Now when we have bank transactions nowadays, if you observe, for 1 rupee, 2 rupee, 5 rupees, 10 rupees also we are doing phone pay or google pays or something, UPI payment, to put it simple. UPI payment is nothing but what? The amount is transferred from your account to other account. Yes or no, students? Yes, sir. So nowadays every business will have bank transactions now. In this case, this business will maintain two-column cash book, two-column cash book with the cash and a bank. That's it. Okay. Now business four. Business four has credit transactions. The count of the credit transactions are also very large. Very huge number of transactions are credit transactions. At the same time, has bank account, bank transactions. In this case, what they have to do? In this case, they will maintain three-column cash book. They will maintain three-column cash book. Means what? Cash, bank, and discount. In this case, this three-column cash book is nothing but extension to the three-column cash book is nothing but extension to the two-column cash book. Three-column cash book is nothing but extension to the two-column cash book. Hope you understood. Now, based on the nature of business, now you can decide which cash book we maintain. Which cash book we maintain. Observe carefully. Business one, no bank transaction, no credit. In that case, they can follow simple cash book. Business 2, no bank transaction, but they have credit transaction, huge number of credit transaction. In that case, we receive discount and we allow discount. In that case, they can maintain two-column cash book with cash and discount. Business 3, no credit transaction, or we have credit transaction, but the count is very limit. In that case, and we have bank transactions. In that case, we maintain two-column cash book with cash and bank. Now business 4, it has credit transaction and bank transaction. The count also, the number of transactions are also very huge, large number of transactions. In that case, they will maintain three-column cash book. So two-column cash book is nothing but extension to the simple cash book. Three-column cash book is nothing but extension to the two-column cash book. Now we are going to learn how this three-column cash book is prepared. Okay. Now look at. First, observe the three-column cash book format. Date, receipt, ledger folio, cash. Date, payment, ledger folio, cash. Till here it is simple cash book. And we are adding one more column, discount allowed, discount received. It is two column cash book. And we are adding one more column, bank, bank. Now it became three column cash book. Why it is called three column cash book? Why? Because we are maintaining three amount columns. We are maintaining three amount columns to record the amount. The student may get a doubt. Sir, if we have more than one account, nowadays every individual is having more than two accounts. When it comes to business will have so many number of accounts. In that case, what they do? Under bank column, they prepare sub columns. I repeat, under bank column, they prepare sub columns and they give bank name SBI Bank. Under bank column, one bank column, they give sub columns SBI Bank, HDFC Bank, like that they maintain. But it is practically impossible. It is practically impossible to remember. Nowadays, every transaction we are entering into computer. In the computer, there is no concept of this three column cash book. Then how we enter, sir? That we discuss later. I will show you. I already said I will show you Tally software. There I will show all these transactions. Subsidiary books I will show. Trial balance I will show how a transaction is entered into. That means journalized into a computer. Cash book also we try to observe in the Tally. One day I will discuss. Once we complete these basic chapters now, then I will discuss. Okay, right. That's it. Now, how do we enter? Discount allowed is entered in discount allowed column. Cash transactions are entered in cash column. Bank transactions are entered in bank column. Discount received is entered in discount received column. Any payment through cash by cash in cash column. Any payment by check in bank column. That's it. Okay. When we introduce capital, as usual, for that you can refer 4.2 cash book with cash and bank columns. Okay. Discount columns, as usual, we understood that discount column we receive discount allowed, discount received we enter discount received. Now balancing also same. How do we balance? We know that discount columns are not balanced, they are just totaled. I repeat, discount columns are not balanced, just they are totaled. Cash columns are balanced, bank columns also balanced. Cash column balance, bank column balance. This is the concept of balancing of three column cash book. Now we have to discuss some important concepts comes in this cash book chapter. Look at first one, contra entry. What is the concept of contra entry? Here I have given, this will be discussed in the classroom. I will write in the notes now. You people also try to maintain the notes. Look at, we discuss contra entry here. What is the meaning of contra entry first? To understand what is contra entry, now we should discuss one transaction first. Look at cash deposited in bank rupees 1 lakh. Cash deposited in bank rupees 1 lakh. Now tell me, what is the journal entry we record? Bank account debit 1 lakh to cash account 1 lakh. This is the entry of cash deposit into bank. Now if you are maintaining cash book with cash and bank columns, then how do you record this entry in the cash book? Tell me, how do you record this entry in the cash book? If you know the answer, then you can simply follow it. This is cash and this is bank. Okay. Now tell me, bank account debit side. Normally this entry, how do we post in ledger? Bank account debit side, cash account credit side. Bank account debit side, cash account credit side. Yes sir, no students? Yes sir. Now the same entry, how do we record in cash book? Now come to bank account. See, if you observe, bank account and cash account, both we are maintaining in the cash book. Means separately you need not to prepare cash account and bank account. Cash column nothing but cash account, bank column nothing but bank account. So here bank account debit side posting, cash account credit side posting, both will be completed in the cash book itself. And this entry or this transaction you need not to post separately in the ledger. That's why this type of entry is called contra entry. So posting is completed in the cash book itself. You need not to post anywhere else. That's why this entry is called contra entries. Look at how do we post. First bank account debit now. First bank account debit now. Bank account debit side to cash. Which column? Bank column I will write 1 lakh. So bank account posting completed. I repeat, bank account posting completed. Second posting pending now. Which account credit? Cash account. In cash account credit side by bank. Over. Observe carefully. Bank account debit 1 lakh, cash account credit 1 lakh. Now this transaction you need not to post anywhere else now. The same transaction you need not to post anywhere else. To indicate it in the LF column, here generally we maintain LF column. In the LF column, we write the word C. We write the word C. C means contra entry. Now this entry or this recording, this transaction, you need not to post anywhere else to indicate that. Generally, whatever we record in the cash book, the same is posted into concerned ledger account again in the ledger, but except cash accountant, bank account. Now this transaction you need not to post anywhere else. Why? Because recording and posting both are completed in the cash book itself. So this type of entries are called contra entry. One more entry is there, one more transaction is there, that is cash deposited from bank. Cash deposited from bank for office use, because we may withdraw cash for office use at the same time for personal use. If the cash is withdrawn for personal use, then we record the entry drawings account debit to bank account. Okay. Now tell me what is the entry we record. Cash account debit 10,000 for example to bank account 10,000. This is the entry we record. Now how do we post this into cash book? Post it. Now first cash account debit na, cash account debit side to bank. This is not separately posted na, so write down the word C. Now cash account posting complete. Now come to bank account. By cash contra entry bank column 10,000. Over. That's it. These two are called contra entries. When you are preparing two column cash book with the cash and bank columns or three column cash book, regarding these two transactions, you have to be very careful, because two times we have to write this transaction or record this transaction. And this is the concept of contra entry. So make a note of it. Okay. Now come to the next concept, that is dishonor of deposited checks. Dishonor of deposited checks. Observe carefully. I will give you one transaction here to understand this concept. Dishonor of deposited checks or checks deposited. First, tell me, when you deposit checks, on depositing check, on depositing check, what is the entry we record? What is the entry we record? Tell me, students. Quick. Bank account to debit. Bank account debit to debtor account. Suppose we have received a check from debtor. In that case, what is the entry we record? Bank account debit to debtor account. Let us say, for example, 1 lakh. Let us say, for example, 1 lakh. Hope you are following. Yes, sir. Now, if check is collected by bank, then okay. But if the check deposit, the above deposited check, the above deposited check is dishonored. Tell me what we do now. The above deposited check is dishonored. Now tell me what we do. Yeah, just a minute. Assume we have also allowed some discount to him. Discount allowed account debit 1000. Now to debtor account 1 lakh 1000. Yes. Now tell me, This is the journal entry we have recorded at the time of deposit of check received from a customer. Suppose the check received from customer is dishonored. The check received from customer is dishonored. Then what we do? What we do? Tell me. Yes. Understood? Now look at. Simple. Whatever the entry we have written earlier, the same is what we do. The same is reversed. The same is reversed. That's it. That is the answer. Look at debtor account debit 1,01,000 to bank account 1 lakh to discount allowed account 1,000. That's it. That's it. This is the entry we record. Understood? But how do we write this in the 3-column cash book? How do we write this in the 3-column cash book? That is the question mark. Tell me. How do we write? How do we write the same in the 3-column cash book? Tell me. Yes, this is cash, bank. This is discount allowed, cash, bank. Discount received, cash, bank. Okay, this is 3-column cash book. How do we write? Tell me. Simple. First entry, bank account debit 1 lakh, discount allowed account debit 1,000 to debtor account. Fine. It is posted like this. What about the next entry? Debtor account credit, bank account credit na? Yes sir, bank account credit 1 lakh sir. And discount allowed account credit 1,000. But here we should not write 1,000 rupees. It is very blunder mistake. Don't write 1,000 rupees. Don't write 1,000 rupees on the credit side. Why? Because here discount allowed is reversed. Discount allowed is reversed. But 3-column cash book on the credit side, whatever we have, that is what? That is discount received. Now look at by debtor 1,000 rupees in the bank column. What about discount allowed? 1,000. Sorry, 1 lakh in the bank column. What about 1,000 rupees? This entry na we record in the journal proper. This is very important. I repeat. First, we deposited a check received from debtor. Then we record it on the debit side of 3-column cash book. Now, if the same check is dishonored, then whatever the entry we have written earlier, that is reversed. But this entry, when you are posting in 3-column cash book, you have to be very careful. Why? Only the amount is posted in bank column. Only the amount is posted in bank column, but discount allowed, earlier we have allowed discount na, that is reversed now. This reversal entry is recorded in journal proper. This 1,000 rupees discount allowed we reversed is recorded in journal proper. This is very important. Clear? So this is the concept of check, dishonor of deposited check. Hope you understood. Yes. Now we discuss next concept. Look at. In the previous lecture, we have started our discussion of 3-column cash book. We understood what is the purpose of maintaining 3-column cash book. Here I have given some examples. Next, while preparing 3-column cash book, so what is the care we have to take while recording some transactions? Out of them, first one is contra entry. The same points are also applicable when you prepare 2-column cash book with cash and bank columns. Don't forget, the same points are applicable for 2-column cash book when you maintain cash and bank column plus 3-column cash book also. We have discussed contra entry. When we deposit amount into bank and when we withdraw amount from bank, then these two transactions comes under contra entry. Why it is called contra entry? Because the recording and posting of the entry is completed in the cash book. These type of entries are called contra entries. After that, we discussed dishonor of deposited checks. When we deposit check, we record the entry bank account debit discount. If you allowed any discount, then discount allowed account debit to debtor account. If the deposited check is dishonored, then the entry will become reverse. What is the reversal entry? Debtor account debit to bank account to discount allowed account credit. Here, first entry, first deposit entry we record on the debit side of or receipt side of 3 column cash book. Whereas reversal entry, only bank column. On the credit side, bank column we write 1 lakh, but discount allowed is not recorded in the 3 column cash book. Why? Because here discount allowed is credited. Discount allowed is credit. Credit side we have discount received column. Discount allowed column we have on the debit side only. That's why this discount allowed reversal is recorded in the journal proper. Hope you are following. Right. Now look at the next concept, that is dishonor of issued checks. When we issue check, then if that check is dishonored, then what is the accounting treatment, and at the same time how it is recorded in the 3 column cash book. Look at dishonor of issued check. Dishonor of issued check. Tell me, when we issue check, then what is the entry we record? Suppose creditor account debit, creditor account debit, let us say for example 10,000 to bank account, let us say it is 9,500 and we received discount. This is the entry we record on issue of check. On issue of check. This is the entry we record. Now, when the issued check is dishonored, when the issued check is dishonored, then what is the entry we record? Simple. The above recorded entry becomes reverse. The above recorded entry becomes reverse. How? Bank account debit 9,500, discount received account debit 500 to creditor account 10,000. This is the entry we record. Yes. Now how do we post in the 3 column cash book? Simple. In the 3 column cash book, the first entry is recorded in the usual manner. Means how? This is discount allowed, cash, bank. Discount received, cash, bank. Okay. 3 column cash book. Tell me first entry posting. Bank account, discount received account credit. On the credit side, we write by creditor. How much discount received? 500. How much worth of check issued? 9,500. That's it. Now what about the second entry? When the issued check is dishonored, we have reversed the entry now. So bank account debit. So bank account debit side to creditor. Bank account debit side to creditor. How much? 9,500. Because bank account earlier we credited with 9,500. Now we are debiting with 9,500. Then what about discount received? Earlier discount received is credited with 500. Now it is not possible to debit in the 3 column cash book. Why? Because in the 3 column cash book, debit side we have discount allowed column. Debit side we have discount allowed column. Yes or no? It is discount allowed column. So that this discount received is recorded in the journal proper. This is recorded in the journal proper. Same entry. Discount received account debit 500 to creditor account 500. That's it. Here creditor account is credited with 9500 and discount received account debit to creditor account 500. 10,000 completed. Yes. This is the concept of when the issued check is dishonored. Write down. Okay. Now look at the next concept. Endorsement of checks received. Endorsement of checks received means, look at endorsement of checks received. Endorsement of checks received. Endorsement is nothing but transferring or giving check to others. We have something and that we are giving to somebody. Okay. Now look at, I will give you one transaction. Received check from, received check from Mr. A, rupees 1000. Received check from Mr. A, rupees 1000. Okay. And it is, and it is, okay, I will write like this. 1/4/2023. On 1/4/2023, received check from Mr. A, rupees 1000. Okay. Now 3/4/2023, check received from Mr. A is endorsed to Mr. B. This is happened. Tell me. On 1/4/2023, we received check from Mr. A, 1000 rupees. But this check actually we have to deposit in the bank. I repeat, this check actually we have to deposit in the bank. But we have not deposited check on 1/4/2023. That means we have check in our hand. We have check in our hand. Okay. On 3rd April 2023, what we did, whatever the check we have that was received from Mr. A, that is endorsed to Mr. B. Why we are giving this check to Mr. B? Means we have to pay some amount to Mr. B. Instead of paying cash or our own check, what we are doing, we are giving check received from Mr. A, so that our liability gets cleared. Okay. Now in this type of, in this situation, how we record the entry? First, observe carefully. On 1/4/2023, how do we record the entry? Means we received a check. Here there is an important concept. Here we received a check, but it is not deposited into bank now. Suppose if we deposit this check into bank, then what is the entry we record? Bank account debit 1000 to Mr. A account 1000. Understood? This is the entry we record, but the check is not deposited into bank. The check is not deposited into bank. In that case, what we do is we simply debit cash account. We simply debit cash account because the check received from Mr. A is not deposited into bank. Na? If we debit bank account, what happens? We are debiting bank account, but in the bank there is no entry called 1000 rupees. Na? Why? Because you have not deposited check. Okay. Or we may also debit one more account, that is checks in hand. Checks in hand. Generally we follow this one, But in our ICAI material, in our ICAI suggested that you follow this one. When you receive check from a customer or from anybody, if it is deposited into bank on the same date, then we simply debit bank account. If this was not deposited in bank on the same date, then first we treat it as receipt of cash, and on the day of deposit of check into bank, then we treat it as deposit of cash into bank. That concept we discussed. Next concept only. Checks received on one date and deposited in the bank on other date. That we discussed. Okay. Next. Or you may debit checks in hand also. Fine. Next, look at on 3/4/23. What is the entry we record? Here we are endorsing check to Mr. B. Who is the receiver? Mr. B is the receiver. Mr. B is the receiver. So Mr. B account debit 1000 to earlier which account you debited? Cash account. Now cash account credit. Cash or checks in hand. Checks in hand 1000. That's it. This is the accounting treatment for endorsement of check. Okay, here there is one note point. What is the note point? If check is endorsed, check is endorsed on the same date, same date of receipt, means here we received check on 1/4/2023. Suppose we endorsed check on the same date to somebody B, Mr. B. In that case, what is the entry we record? On the same date of receipt, then the following entry is recorded. Then the following entry is recorded. Observe carefully. 1/4/2023. We received check from A 1000. On the same date, we have endorsed check to Mr. B. In that case, what is the entry we record? Look at Mr. B account to debit 1000 to Mr. A account 1000. That's it. Instead of writing two entries, here we write only one entry. Sorry, here then one, why you have written two entries, sir? Because the check received on one date and endorsed on some other date. But here check is received on one date and endorsed on some other date. Hope you are following. Sorry, here check is received and endorsed on same date. Received and endorsed on same date. Hope you are following. So this is the concept of endorsement of check. Okay, check the problem one, check the concept once again. I hope this concept is clear to you. Yes, these points are these points you can apply at the time of preparing 3-column cash book, our illustration number 3. There you can apply these points. Next, look at important concept of entire cash book is checks received on one date and deposited in the bank on other date. What is the concept here? Observe carefully. Checks received on one date and deposited into bank on some other date. Here some students get confusion. So if you have clarity over the concept, then you don't need to confuse anything. You don't get any confusions. Okay, now look at, we have received check. Now immediately we have to see that whether it is deposited into bank, whether it is deposited into bank on the same date, same date of receipt, or it is deposited, it is deposited on other date, it is deposited on other date. See, take for example, we received check on 1 4 2023. We received check from a customer. We received check from a customer on 1 4 2023. Suppose if the check is deposited into bank on same date 1 4 2023, then what is the journal entry we record? What is the journal entry we record? Simple, bank account to debit to debtor account, bank account debit to debtor account, because we received check from customer and it is deposited into bank on same date, so that we debit simply bank account. But if this check is deposited on some other date means apart from 1st April, let us say, okay, here we take, some people they may say, sir, 1st April bank holiday na sir, okay fine, 3rd April, here also 3rd April. Now here let us assume we are depositing check on 5 4 2023, means other than 3rd April 2023 now. Yes, so here what we write, here what we do means, on the date of, on the day of receipt, next on the day of deposit, we have to record two entries in that case, on the day of receipt and on the day of deposit. Why sir? Why? Because 3rd April you have received check, but it is deposited into bank on 5th April. Here we need to record transactions on chronological order. Then what is the entry we record on 3rd April 2023 and 5th April 2023? Okay, first here I see a generally what we do is, we have not deposited check into bank on 3rd April now. So what we do is simply we write checks in hand account debit, checks in hand account debit. Observe carefully, because it is not deposited into bank now, the check is in our hand. So checks in hand account debit to debtor account. This is the entry we record. On the day of deposit, what we do? We are depositing into bank now. So bank account debit to, earlier we debited checks in hand, now we credit checks in hand account. Now if you combine this entry, then what you get? Bank account debit to debtor account. You get the same meaning now. You get the same meaning. Observe carefully. Then why we are recording two entries? Why? Because on 3rd April, if we deposit check into bank, then only we debit bank account. Unless it is not possible to debit bank account now. That's why which account we debit? Checks in hand. Checks in hand account debit to debtor account. On the day of deposit, what we do? Bank account debit to checks in hand account. Sometimes the cashier may not deposit the checks received on one day. So what he will do? He will wait for 2 3 days and he will see that how many the checks received, or he will fix a time. Checks received for a week. I will wait for a week. During this week, whatever the checks I received, I deposit all the checks on Monday into bank. Earlier days. Earlier days, because earlier days there are no many branches now. Nowadays we have so many branches. Nowadays we can deposit checks. Today we receive check, tomorrow morning we deposit them into bank. That is happening. But in our ICI material, ICI suggested that instead of debiting checks in hand account, this will happen practically, students, and check in hand becomes asset. Check in hand becomes asset because it is equal to cash. It is equal to cash. Okay. ICAI material, they are suggesting us instead of debiting check in hand, you debit cash. You debit cash account. Means we received check on one day and deposited into bank on some other day. In that case, on the day of receipt of check, treat it as cash received. On the day of depositing check, treat it as cash deposit. This is very important concept in entire cash book chapter. In entire cash book chapter. Practically what happens, we debit checks in hand. At the time of deposit, we credit checks in hand. So that the combined entry becomes bank account debit to debtor account. But in our ICI material, they suggested that whenever you receive check and it was not deposited into bank on same date, then debit cash account. You may ask, sir, if we debit cash account, then we should have physical cash now. I repeat, sir, if we debit cash account, we should have physical cash now, sir. Yes, but we can show checks. Physical cash will not tally. Physical cash will not tally. Books, as per books, one balance, physical cash one balance. Now what we do, we add physical cash balance plus check amount. I repeat, we add physical cash balance plus check amount, then only it is equal to cash book balance. Hope you are following. So look at the concept once again. This is very important concept. Most of the students, they get confusion here. So in the problem, whenever you get three column cash book, see that in the problem they will mention that checks received are first treated as cash. You will get this point. Clear? Now make a note of it. Okay. Now we understood so much of information about three column cash book. Now we apply the same knowledge to illustration 3. Be ready to solve illustration 3. Okay. I hope you understood illustration 3. So in illustration 3 we have prepared a three column cash book now. So here we have applied some concepts like contra entry, and when we receive checks, first we treated them as cash receipts. Yes or no, students? Yes. Now come to the next concept, that is entries for sale through credit or debit cards. Nowadays, most of the people are having credit cards plus debit cards. What is debit card? When you open a savings account in the bank will issue a debit card to withdraw money in the ATM centers. So through debit cards only you can withdraw money only when you have money in your bank. But if you get credit card, then the bank gives some credit limit to you and you can utilize that credit limit. After utilizing the credit limit, you have to pay the amount on due dates. If you fail to pay this credit card bill, then automatically they levy some interest rate. It ranges from 3% to 5% per month. Okay, right. And nowadays you can see in shopping malls or in online platforms, we purchase various items by using these debit cards and credit cards. What happens when we use debit card and credit card? The amount is transferred from our bank account to merchant bank account, business bank account. Yes or no? As a businessman, how do I record these transactions in my books? Because earlier I used to take cash. Earlier I take cash or checks or UPI payments. Now this is credit or debit cards. Look at, nowadays credit or debit cards are issued by almost every bank in India, either directly or collaboration with some other banks. Like I got Axis Airtel Axis credit card. or IRCT SBI credit card, Flipkart Axis credit card, ICICI Amazon credit card, third parties with collaboration with third parties. Direct bank directly issue credit card, or it will collaborate with some other organizations. For example, HSBC, SBI, Bank of Baroda, ICICI, HDFC, and Andhra Bank cards are some of the popular cards. From the seller's point of view, this type of sale is equivalent to cash sale, but we will not receive cash. The amount goes to bank. The commission charged by bank will be treated as selling expenses. For the see, bank will provide this swiping machine. Bank will provide swiping machine. Through swiping machine only we can use this credit or debit card sales. For the services, for this service given by the bank will charge some amount, that is called commission. Some it ranges from some 0.75% to 1.5%. Okay, so from a seller point of view, this commission is treated as selling expense. Now, what are the journal entries we record? What are the journal entries we record here? For the sale of goods, when we sell goods, simply bank account debit to sales because amount is deposited into bank. For the commission charged by bank, then we treat it as expense. Na? Either we debit bank charges or commission. Bank charges or commission. Clear? To bank account. These are the entries when we sell goods through credit or debit cards. Now look at the next important concept, that is petty cash book. Petty cash book. Already we understood the businesses will prepare, depends on the nature of business, they will prepare either simple cash book or two column cash book or three column cash book. In some organization what they do is, generally if you take any payment from organization point of view, the payments may be ranges from small amount, medium amounts, or large amounts. That depends on nature of business again. And the small amount may be small for some businesses and it is used for other businesses. For example, rupees 10,000. 10,000 is a amount, small amount from Reliance Industries Limited point of view. But the same amount is, it's a large amount, it is a large amount from a small business point of view. Yes or no? Whether the payment is small, limited amount, small amount, 1 rupee, 10 rupees, 100 rupees, 500 rupees, 10,000 rupees, or medium amount, some thousands, large amount, some lakhs, it depends on business to business. In large businesses, what they do is, the head cashier, he will appoint one petty cashier. What the petty cashier will do is, the petty cashier will pay small payments. They are called petty expenses. In the organization, apart from the payments which involve huge amounts, there may be some payments involves very little bit of amount or very small amount, and the small amount depends on business to business. I said already, even 500 rupees is a small amount from Reliance point of view. It is negligible amount from Reliance Industries Limited point of view, but the same 500 is a medium or large amount from a small business point of view. So here the payment, whether it is petty expense or normal expense, all are expenses, but the amount involved in the expense may be very limited. Because if all payments should be made by the head cashier, he will get overburdened. That means he, he will get so much of work na. Already he has to pay so many payments. Apart from that, to pay these petty expenses also, it becomes a little bit difficult to him. That's why what he will do, he will appoint a petty cashier. Generally, petty cashier is a person from among the one of the employees, okay. Now he will hand over, some fixed amount. Let us say some 10,000 rupees. 10,000 rupees is fixed for petty expenses. For petty expenses. Now, head cashier will give orders that Mr. Petty Cashier, if any payment less than 500, if any payment less than 500 or 1000 rupees, if any payment less than 1000 rupees, then you need not to ask my permission. Simply you can pay the amount to any petty expenses. Okay. And periodically, petty cashier prepares petty cash book. Periodically, petty cashier prepares petty cash book, and this petty cash book is submitted to the head cashier. This petty cash book is submitted to the head cashier, and the head cashier will see all the account details with supporting documents. Even the amount involves less than 1000 rupees. The petty cashier is responsible to prepare source document. We call them as vouchers. Vouchers. The petty cashier should prepare vouchers. It is a small document, contains the date of payment, what is the purpose of payment, and who is received the payment, and who is authorized the payment, and how much amount is paid, amount in numbers and words, all these the signatures of parties, all these details contains in the vouchers. In the business, even one single rupee is incurred as an expense, we need a source document for that. That is in the form of vouchers. Now the petty cashier will submit petty cash book along with the vouchers to the head cashier. Head cashier will verify that. Suppose head cashier is given amount on 1 4 2023, and he fixed a time period. Mr. Petty Cashier, you do one thing. Excuse me. Mr. Petty Cashier, you do one thing. I am fixing a time period. That means 1 4 2023 to 15 4 2023. For every 15 days, for every 15 days, what you have to do is, on that day of 15th day, you have to submit petty cash book along with vouchers. Along with the vouchers. Now I am fixing 10,000 rupees. Now today I am giving you 10,000 rupees, and this 10,000 rupees is fixed. This 10,000 rupees is fixed, and during this period, assume during 1 4 23 to 15 4 23, petty cashier incurred rupees 9,000 expenses. 9,000 petty expenses. Tell me, what is the amount fixed? 10,000 rupees. But during the period, how much amount incurred by petty cashier? 9,000 rupees. Now how much balance we have? Balance is equal to 10,000 minus 9,000, that is equal to 1,000 rupees. This much of amount now petty cashier has. Again again, head cashier head cashier will reimburse. Head cashier will reimburse rupees 9,000 to petty cashier. Then he will have 10,000 again. Yes or no, tell me. How much amount fixed for petty expenses? 10,000. Petty cashier is allowed to make payments involves less than 1000 rupees without any prior permission of head cashier. If he wants to make any expense more than 1000 rupees, he has to take permission from the head cashier. Permission from the head cashier. Okay, like this. So head cashier is fixing the amount and time. Petty cashier periodically should submit this petty cash book and the vouchers, supporting with the vouchers. Head cashier will check all the details and again he will reimburse the amount. How much amount he is reimbursing? Actual expenses paid. Actual expenses paid. If I reimburse, I am the head cashier. If I reimburse 9,000 rupees to you, then again you will have how much amount? 10,000 rupees. Again you start the new period from 1/16/3/2023 to 30th 3/2023. Again during this particular period we incur expenses. Again we render this petty cash book to the head cashier. Again the head cashier will reimburse the amount. Again we will have 10,000 rupees in our hands. So it is a cyclic process. It is a system followed by the head cashier, and this system is called impressed system. This system is called impressed system. It is not mandatory for every business to maintain petty cash book. No. Generally, this petty cash book is maintained by large scale organization which involve small payments. Payments involve small amounts. Okay, without disturbing the head cashier. Petty cashier will manage all these small payments. Suppose you visualize you visited to a gold jewelry shop. Immediately you will get some refreshments. Suppose for bringing these refreshments, you need cash. To whom you approach? Will you approach head cashier for 10 rupees, 50 rupees, or 100 rupees? No. There is one other cashier that he is none other than petty cashier. Petty cashier, he will look after all these small payments. Earlier days for stationery, cartage, and some postal expenses, Xerox expenses. Okay, and for the employees we have for the employees we pay generally some conveyance or bus fare which involve 2 rupee, 3 rupee, 5 rupees, 10 rupees. Those days the small amounts are incurred by businesses which involves the head cashier some headache work. That's why he will appoint one more person as petty cashier, and the petty cashier will look after all these things. Nowadays also big organizations they will maintain petty cashier and he will maintain petty cash book. In the small businesses you will not see this petty cash book. Hope you are following. Yes sir. Now look at the concept here. And actually petty cash book is not a main cash book. Simple cash book, two column cash book, three column cash book, these three are considered as main cash books. Petty cash book is not a main cash book. Hope you are following. Look at in the firm several small payments such as telegram expenses, taxi fare, cartage, etc. are to be made by the businesses. If all these payments are recorded in the cash book, it will become unnecessarily heavy. Also, the main cashier will be overburdened with work. If you observe our cash book, if we record small payments, 2 rupees, 5 rupees, 10 rupees, 50 rupees payments in the cash book, our cash book becomes huge. And the head cashier also overburdened with these small payments. That's why, therefore, it is usual for the firms to appoint a person as a petty cashier, head cashier, petty cashier, and to entrust the task of making small payments, say below 200. Here they are giving just for example. In our example, we have taken less than 1000 rupees. Okay. Of course, he will be reimbursed for the payments made. So first he will make payments out of the petty cash amount, and after some period of time he will get reimbursement of the same. Later on an analysis, the respective account may be debited. From petty cash book, what we do is we record entries in the main cash book. I repeat, From the petty cash book, we record the entries in the main cash book. How, sir? That we understand. Look at impressed system. This petty cash works under impressed system. It is convenient to entrust a definite sum of money to the petty cashier at the beginning of a period and to reimburse him for payments made at the end of the period. Just now we have discussed, we have fixed a time period 1 for 2023 to 15 for 2023, and we are giving 10,000 rupees to him. At the end of 15th April, he will render the petty cash book along with vouchers. Head cashier will check all those things, and again head cashier will reimburse the actual expenses incurred by the petty cashier. Again he will have the same amount of 10,000 rupees. So it is a system. This system is called impressed system. Okay. Thus he will have again a fixed amount at the beginning of the new period. Such a system is known as the impressed system of petty cash book. Such a system is known as the impressed system of petty cash book. Okay. Now, the system is useful especially if any analytical petty cash book is maintained. Analytical petty cash book. Analytical petty cash book. What is this analytical petty cash book? Look at. Normally, what is the petty cash book format? Simple cash book format is what? Simple cash book format. Simple cash book format. Here we take date, receipt, LF, amount. Date, payments, LF, amount. This is a simple cash book format. Now, petty cash book format also can be followed in the same manner without using the words LF. Without the using LF column, but here we use voucher number column. Voucher number. Because to write voucher number, receipt side, payment side. Receipt side, payment side. This is one way of preparing simple petty cash book. Petty cash book can also be followed in the simple cash book format, with the exception that instead of maintaining LF column on the payment side, we maintain voucher number. And we also have another format, that is, anyway, petty cashier is not allowed to receive amount from anybody except from head cashier. I repeat, petty cashier is not allowed to receive any amount from anybody except head cashier. Okay. That's why what we do is, instead of maintaining two date columns, we maintain one date column. Instead of maintaining two particulars column for receipt and payment, we write only one column. And amount columns anyway we write two. That's why here observe, amount, cash book folio, date, particulars, voucher number, and total amount, means payments. This is another format for petty cash book. Another format for petty cash book. Observe, either you can follow this format or you can follow this format. In our ICA material, for one problem they have followed this first format, and for the another problem they have followed this format. This is simple petty cash book. Now, in the petty cash book, what we do? We write various petty expenses. And petty expenses means these are repetitive expenses. These are repetitive expenses. Now, what we do is, for analyzing these petty expenses, I repeat, for analyzing these petty expenses, we also maintain some analysis columns. Analysis columns means, suppose I have paid conveyance fees, conveyance for employees in a during a period of 15 days I have paid 10 times conveyance amount. 10 times conveyance amount means here I will maintain in the analytical column conveyance column separately, and I will accumulate what is the total amount of conveyance paid. I repeat, total amount of conveyance paid during the period of 15 days. In the particulars column we write the amounts in chronological order. In the particulars column we write the amounts, or we write the payments in chronological order. On the other hand, we accumulate the expenses. We accumulate one particular expense. Here I have written conveyance. Next you may write postage. Next you may write postage. We accumulate what are the various payments made towards postage, and at the end of the period we total postage. Now this conveyance and postage both are recorded in the cash book. Both are recorded in the cash book. And these amounts are posted to the ledger also. We open conveyance account in the ledger. We open postage account in the ledger. Like this we accumulate, because it is not possible to ignore. It is not possible to ignore all small payments. Even 1 rupee also we have to make a record, and we have to control the money. That's why this analysis columns. So petty cash book may be followed, simple petty cash book or analytical petty cash book. Sir, which cash book, which type of petty cash book we follow, sir? Analytical petty cash book. I repeat, analytical petty cash book. In the examination, if you get any problem on petty cash book, it is nothing but analytical petty cash book. Analytical petty cash book. Observe. Simple petty cash book format: receipt, date, voucher, particulars, total. In the receipt column we write the amount. In the date column we write the date of transaction, voucher number. Particulars column we write whether it is receipt or payment. Receipt name, payment name. After that voucher number we enter. Next amount of payment. Fifth column, amount of payment we record. But this petty cash book is not followed. We follow analytical petty cash book. Analytical petty cash book is nothing but it is an extension to simple petty cash book. First 5 columns are same. First 5 columns are same. Observe. First 5 columns are same. Next what we do is we maintain analysis of payments. Conveyance, cartage, stationery, postage, wages, sundries, like that. It depends on the analysis columns, depends on problem to problem. What we do is we accumulate individual expenses. In the particulars column we write all the expenses one by one. But again in the analysis columns we write the same payment and we accumulate separately. Right? Explanation, look at column 1 to 5 are similar to simple petty cash book. 6, a separate analytical column is maintained for frequent payments. If we solve one problem on analytical petty cash book, then you can understand it easily. Okay, look at now we solve illustration 4. This concept we apply to illustration 4, and we have another problem, that is practical question 1. We apply this concept to those two problems. Okay, look at illustration 3 and practical question 1. I hope you understood illustration 4 and practical question 1 on the concept of petty cash book. Now look at the remaining concept of petty cash book we see in this video. Balancing of petty cash book, already we understood how to balance the petty cash book. Look at the end of the week or fortnight, every 15 days the petty cash book is balanced. The method of balancing is the same as for the simple cash book. What we did here, first we have taken total of receipt and here total of payment 373.60 and the balance is 126.40. It's like a simple cash book balancing. Okay, next the total of the analytical columns is totaled but not balanced. The total of the analytical columns, like this, analytical columns are just totaled, not balanced. Okay, now look at posting into petty cash account at the same time various expenses account. If you observe from practical question 1, in the practical question 1, you can observe how many various payments we have. Analysis columns 4. Stationery account, traveling account, miscellaneous and repairs. First we prepare stationery account. Observe, I will show you one account. Stationery account. In the ledger we prepare stationery account. Stationery account is expense. Now we come to expense, the stationery account debit side. On which date we are balancing? 12th date. What we do is 2022 September 12th, two sundries or two petty cash. Just a minute. To total as per petty cash book. Total as per petty cash book. How much? 121.20 paisa. Like this, we post into all petty expenses accounts. All petty expenses accounts. Observe carefully. Now we open traveling account. Debit side we write 68.50. 68.50. Two sundries as per petty cash book. Next, miscellaneous expenses we open. Repairs we open. So all the expenses accounts we post on the debit side. Okay, the same look at posting into expenses account. Posting into expenses account. The total of the analytical columns shows why payments have been made. Yes, these columns are totaled and posted to the debit side of the relevant accounts in the ledger like this. Like stationery account, we post into various expenses accounts. Next, two methods may be used. One, from the petty cash book, the total of the various columns may be directly debited to the concerned accounts. First, what we can do? So already we have recorded the expenses in petty cash book. Now, directly I will take these amounts from petty cash book to ledger. Petty cash book to ledger. Or second way is a journal entry may be first prepared based on the petty cash book, debiting the accounts shown by the various analysis columns and crediting the total of the payments out of the petty cash accounts. Like what? I will show you. Observe. Here I will write a journal entry first in the journal proper. In the journal proper. Stationery account debit. Stationery account debit 121.20. After that, traveling account debit. Traveling account debit 68.50. Next, miscellaneous expenses account debit. Miscellaneous expenses account debit 27.20. Next, repairs account debit. Repairs account debit 156.70. And all these petty expenses are paid out of petty cash. To petty cash. How much total? 373.60. This is the entry we can write. So what is the two alternative? First alternative, the amount of various expenses can be taken directly from petty cash book. Or second alternative, first we write the journal entry. First we write the journal entry on September 12th by taking the totals of expenses. After that we post from this journal entry, we post into various ledger accounts. From this journal entry we post into various ledger accounts. These are the two alternatives. Okay, this is how we post expenses accounts from petty cash book. Next one, posting into petty cash account. Posting into petty cash account. Here what we can do is, you can prepare petty cash account like this. It is like a normal ledger account. It is like a normal ledger account. Look at, When an amount is given to the petty cashier, the petty cash account is debited and a petty cash account is maintained in the ledger. See, we maintain in the ledger. Like that, we write here to cash account. Let us say in our example, what is the total petty cash received? 500. In PQ1, how much petty cash received? 500. Okay. Already how much balance we have? 134.90. This we write it as to balance brought down 134.90. Next we receive cash na to cash account remaining 365.10. Like this we write. Okay. Now from this petty cash book, all the payments are recorded on the credit side, or first option, or second option, I have written journal entry na. I have written journal entry. This journal entry is directly posted. Like by stationery account, by traveling account, by miscellaneous expenses account, by repairs account. Like this we write one by one. 121.20, 27.20, 68.50, and 156.70. That's it. Now petty cash account is balanced like this. By balance carried down, how much balance here we have? 126.40, 126.40. Total becomes 500. Now on the next day it becomes to balance brought down. Again he will receive cash as reimbursement. How much amount he received? 373.60. This is how we prepare petty cash account. I hope you understood how to prepare, how to post petty cash book into ledger. From petty cash book, we post into petty cash account plus expenses accounts. Petty cash account like this, expenses account individual accounts. Directly taken from petty cash book, or we can write journal entry. Okay, but most of the cases they will not ask about this preparation of accounts and entries. They will ask just prepare petty cash book. That's it. Okay, now look at next. The total of the analytical column credited to this account each week fortnight, like this. Okay, next. The petty cash account will then show the balance in the hand of the cashier, and on the on demand he should be able to produce it for counting to the head cashier. Yes, next one. At the end of the period or year, the balance is shown on the balance sheet as part of the cash balance. That's it. Next one. Posting from petty cash book, already we discussed this. Next, advantages of petty cash book. What are the advantages of petty cash book? Tell me. See, when the payment involves small amount, then it is better to appoint one petty cashier. We assign that task to the petty cashier and he will make payments so that the time can be saved for head cashier. Okay, there are mainly three advantages. First one, saving time for the chief cashier or head cashier. Next, saving in labor in writing up the cash book and posting into the ledger. If you observe, here we have paid different dates, different amounts. Instead of writing entries for all these transaction, what we can write, what we can do, we can write only one entry, enough. Only one entry, that is enough. Yes or no? That is the meaning of this. Saving in labor in writing up the cash book and posting into the ledger. And control over small payments. By preparing this petty cash book, we can control small payments also. Even paisa, 1 10 paisa, 1 rupee, every small payment also we can control, because we are appointing one separate person to maintain these petty payments. Clear? And the person who prepares, who maintains this petty cash book is called petty cashier. Petty means what? Small payments. Hope you are following. This is the concept of petty cash book. Okay, now go through the entire concept of cash book once again. This chapter is very important, students. From this chapter, if you get a problem, that is nothing but three column cash book, subsidiary books or cash book. Out of these two chapters, you may get one problem because they are giving like such. Clear? So this is our cash book chapter. Next we discuss true or false statements and multiple choice questions. Look at. Now we discuss illustration 1. Illustration 1 is based on simple cash book. We understood how to prepare simple cash book. Simple cash book is prepared just like a preparation of cash account. All receipts are recorded on the debit side, that means receipts side. All payments are recorded on the payment side. Do remember. Now look at, enter the following transactions in a simple cash book. What is the format of simple cash book? The format of simple cash book is very simple, that is similar to cash book format, sorry, cash account format. Look at 2022 January 1st, cash in hand 1200, means already we have some balance of cash in our hand. How do we represent this? On the debit side, we write to balance brought down. We also understood that cash account never shows credit balance. Why? Because whatever the physical cash we have, we can expend or we can incur expenses only to that extent. Okay, beyond that, it is not possible to incur the expenses, payments. Okay, now observe, draw the simple cash book format. This is our simple cash book format. Date receipts LF amount, date payments LF amount. Okay, now look at first one, 2022 January 1st, cash in hand. How do we write? On the debit side, on the debit side, January 1st, to balance brought down. How much? 1200. That's it, over. Next one, January 5th, received from ROM 300. Is it receipt or payment? Received from ROM means receipt. Normally, what is the entry we record for this? Cash account debit to ROM account. In this manner, also you can prepare cash book. Okay. So, January 5th to ROM 300. Very simple. Next one, paid rent. Paid rent means it is a payment. Normally, what is the journal entry we record for this? Rent account debit to cash account. So on the credit side, January 7th, what we write? Payment na by rent 30, over. Next one, 8th date, sold goods for cash 300. What is the journal entry we record for this? Cash account debit to sales account. So on the debit side, that means receipt side, 8th date, to sales 300, to sales 300, over. Next one, paid to Sham 700. It's a payment. Normal journal entry is Sham account debit to cash account. So 10th date, by Sham 700. Next one, 27th date, purchased furniture 200. We purchased furniture. It is also payment for us. What is the journal entry we record? Furniture account debit to cash account. So 27th date, buy furniture 200. It's a payment, na? Next one, 31st date, paid salaries 100. It's a payment for us. Normal journal entry is salaries account debit to cash account. So 31st, buy salaries 100. Okay. Next one, 31st, rent due not yet paid for January 30 rupees. You may ask a question, sir, already here we have paid rent 30 rupees na. Again, why they are giving on 31st? Observe carefully. They are giving that rent due means we have to pay the rent not yet paid for January month, because January 31st we have to pay January month rent na, but it is not yet paid. You people tell me, what about this rent paid on January 7th? It may be relating to previous month of December. Hope you understood. Now, it is not a cash transaction. It's like outstanding expense for us. It is like outstanding expense for us. So, last date, January 31st, this transaction is not recorded in the cash book. Why? Because we have not paid cash. That's it. Now, what we do? Simply balance the account. Balancing of cash book is similar to balancing of cash account. Already we understood this. So, balance it. In the ledger chapter, we understood how to balance various ledger accounts. Okay. Look at first total debit. Look at total debit first. How much? 1200, 300, 300. 1800. 1800 total debit. Just a minute. 1800 total debit minus total credit 30, 700, 200, 100. 1030 total credit. What is the difference here? Difference is 770. After writing 770, total becomes 1800. Clear? This we write as by balance carried down. Same January 31st. At the end of January 31st, we are balancing cash book. Now the same becomes opening balance now. February 1st, to balance brought down. Opening balance, how much? 770. That's it. This is our simple cash book. Hope you understood this. So preparation of simple cash book is nothing but it's like preparation of cash account. And this account, this cash book is also balanced like a normal ledger account. If you observe, we have prepared purchase book. In the ledger, we maintained purchase account. In the subsidiary book, we have maintained cash book. Sorry, sales book. In the ledger, we maintained sales account. Observe carefully. Purchase book, purchase account we have maintained. Purchase returns book, we maintained purchase return account in the ledger. This is subsidiary book. This is journal. And this is ledger. Next, we maintained sales book. In the ledger, we maintained sales account. Here, sales returns book, sales returns account. Bills receivable book, bills receivable account. Bills payable book, bills payable account. Do remember. So whatever the special book we are maintaining in the journal, for that we maintain account in the ledger. But whereas here we are maintaining cash book now, you need not to maintain, no need to prepare cash account. No need to prepare cash account. Why? Because in the cash book itself, we are writing receipts on one side, payments on the other side. So that here itself we can identify the balance of the account. Balance of the account itself. But whereas if you observe purchase book, in the purchase book we are recording only credit purchase of goods. What about cash purchase of goods? Because in the purchase account, we should maintain credit purchase and cash purchases. But whereas purchase book we are maintaining only one amount column for recording credit purchase of goods. Hope you are following. Yes. But whereas cash book we are writing receipts on one side and payments on the other side. That's why you need not to prepare cash account in the ledger separately. Here itself you can balance. Here itself you can identify the balance of cash. That's why cash book is a very important statement here. Sometimes you may get this statement as true or false statement also. Cash book is subsidiary subsidiary book as well as principal book. Whereas purchase book is only subsidiary book. Sales book only subsidiary book. But whereas cash book is a subsidiary book as well as principal book. Hope you understood this concept. Yes. So go through the problem once again. Okay. In the previous class, we have discussed two column cash book. Two column cash book is maintained either for cash and discount columns or cash and bank columns. Yes or no? So what is the two column cash book format? Here discount allowed on the receipt side, cash. Discount received on the payment side, and cash. Discount allowed is recorded in the discount allowed column. Cash is recorded in the cash column. Received. Discount received is recorded on the credit side and cash paid on the credit side. Do remember this concept, and based on that we solve illustration 2. Ganesh commenced business on 1st April 2022 with 2000 as capital. He started business for the first time. We already discussed this point also. If business is started for the first time, then we open cash book. We open a fresh cash book. It will not find any balance, or it will not have any balance. Hope you understood. Next, he had the following cash transactions in April 2022. First, we draw two column cash book with the discount and cash columns. Then after we start reading one by one item and we directly record it in the cash book. First, write down in the books of Ganesh. In the books of Ganesh, in the books of Ganesh, cash book. Okay, in the brackets write down cash and discount columns. Just a minute. Write down two column cash book. Two column cash book. In the brackets write down cash and discount columns. Because we are maintaining only cash and discount columns now. That's it. Now look at first one. He started business on 1st April 2022 with a capital of 2000 now. Normally what is the journal entry we record? Cash account debit to capital account. The same we post into this cash book. April 1st. April 1st to capital. Which column? Cash column 200. Sorry, 2000. That's it. Understood? Over. Next one. On April 1st, what happened? Purchased furniture and paid cash 250. We purchased furniture and paid cash 250. Normally, what is the entry? First of all, it is receipt or payment? Payment. What is the journal entry we record? Furniture account debit to cash account. So, April 1st, buy furniture. Buy furniture, cash column 250. Clear? Next one. Second date. Do record the transactions in cash book chronological order. Okay, chronological order is very important. Purchased goods 500. Entry purchases account debit to cash account. So here we write purchases 500. Purchases 500. That's it. Next one, fourth date. Sold goods for cash 950. What is the journal entry? First of all, is it receipt or payment? It is receipt. Normally, what is the journal entry we record? Cash account debit to sales account. So fourth date to sales 950. Next one, fifth date. Paid cash to Ram Mohan 560. Paid cash to Ram Mohan 560. Is it receipt or payment? Payment. Now what is the journal entry we record for this? Ram Mohan account debit to cash account. Did you remember journal chapter? Fifth date by Ram Mohan 560. Over. Next one. And he allowed discount also 10. Yeah. He allowed discount also 10. Now you people tell me, normally what is the journal entry we record for this? Normally what is the journal entry we record for this? Observe carefully. Yeah. Ram Mohan account debit. We are paying cash na. So to cash account. How much cash we are paying? 560. And he allowed discount. Ram Mohan allowed discount. Means discount received for us. Means discount received for us. So 2 discount received 10. Total 570. This is how we record the entry. Now the same entry you post into cash account, discount received account. See, cash account we are maintaining in the cash book and discount column also we are maintaining. How do we write? Observe carefully. By Ram Mohan, discount received in the discount received column. Very, very important. Discount received in the discount received column. Cash paid in the cash column. Observe. Discount received is recorded in the discount received column. Cash paid in the cash column. That's it. This is how we post into, record into cash book. Clear? Next one. Krishna and Co. Received cash. Received cash from Krishna and Co. 600. Allowed discount 20. What happened? We received cash from 600 Krishna and Co. and we allowed a discount of 20. So how normally we record the journal entry for this? Cash account debit 600. Discount allowed account debit 20 to Krishna and Co. 620. This is how we record the entry. Yes. Now the same is recorded in the cash book. How? Observe carefully. Cash column we are maintaining anyway in the cash book and discount allowed column also we are maintaining in the cash book. So now look at it is receipt now. So sixth date. Observe carefully. To Krishna and Co. Krishna and Co. Discount allowed. Record in discount allowed column. Receipts side whatever discount we have, that is discount allowed column. Payment side whatever discount we have, that is payment column. And how much cash received? 600. Over. This is how we record this transaction. Look at next date, April 7th. April 7th. What happened? Observe. Paid for petty expenses 15 rupees. See, petty expenses means small expenses. This we discuss in the petty cash book. Okay. Now, what is the entry? First of all, it is a payment. What is the entry we record? Petty expenses account debit to cash account. Petty expenses account debit to cash account. 7th date. By petty expenses 15 rupees. Clear? Next one. 8th date. Cash purchases 150. It is payment na. What is the journal entry we record? Purchases account debit to cash account. So 8th date. By purchases. By purchases 150 over. Next one. 13th date. Paid for labor 1000. Paid for labor is nothing but wages. Paid for labor is nothing but wages. It is a payment. 13th date. By wages. Normally, what is the entry we record? Wages account debit to cash account. Wages account debit to cash account. Next one. 13th date. Paid Ali and Sons 400. They allowed discount 8 rupees. We paid to Ali and Sons 400. They allowed a discount. What is the entry we record? Ali and Sons account debit. Ali and Sons account debit. How much? 400. Sorry, 408. How much cash paid? 400 cash paid. How much discount received? 8 rupees discount received. Now, how do we post this? Cash and discount received or credit now. Go to credit side. Go to credit side. 13th date. By Ali and Sons. Discount received 8 rupees. Cash paid 400. That's it. Do you have any other transactions? Nothing. Nothing. Now look at we balance. How this two column cash book is balanced. Why? Because here we have two columns. Here we have two columns. One discount allowed column. Sorry, three columns total. Two cash column. Three discount received column. First, balance cash columns. Balancing cash columns are just similar to simple cash book. Just similar to simple cash book. Whereas discount allowed column, discount received column, both are totaled, not balanced. Why? Because if you want to balance the two columns, then debit side, that means left hand side and the right hand side, both should be same columns. Both should be same columns. But whereas this is discount allowed and this is discount received. Left hand side, receipt side it is discount allowed, right hand side it is discount received. So these two columns are not balanced. Do remember, these two columns are not balanced, simply totaled. So first total discount allowed column and discount received column. Discount allowed column total is 20. Discount received column total is 18 rupees. Discount received column total is 18 rupees. Now come to cash columns. Cash columns are balanced like simple cash book or cash account. Total 2000 plus 950 plus 600. Total is 3550. Credit 250 plus 500 plus 560 plus 15 plus 150 plus 1000 plus 400. 2875 credit. Now find the balance. 3550. So 675 is the balance. How do we write? By balance carried down. Month ending date April 30th. Now the total becomes 3550. Now the same balance is carried now. May 1st. Two balance carried down. Two balance carried down 675. Two balance carried down 675. Here in the two column cash book only cash columns are balanced. Discount allowed column, discount received columns are not balanced. Then how, sir? Simple. We go to ledger. We open discount allowed account and a discount received account. Observe carefully. Discount allowed account, discount received account, discount allowed account, discount received account. Clear? Now, discount allowed column total is how much? 20. Now, what we do is simply write discount allowed is a expense financial charge for us. So that 2022 April 30 to sundries as per cash book. How much? 20 over total. If you remember this, in the subsidiary books, we have discussed subsidiary book total. Subsidiary book total, periodic total is posted into that particular account. Now, it is also same. Discount allowed column. If you remember in the subsidiary books, we have discussed freight column. Now, total of freight column is posted to the debit side of freight account. In the same manner, discount allowed and discount received also same. Discount received 2022 April 30. We write buy sundries as per discount cash book. Buy sundries as per cash book 18 rupees over. This is how we deal with the discount allowed and discount received columns of two column cash book. Cash column is normally balanced. Observe this problem. Illustration 2. Very important. Sometimes you may get one surprise question from this cash book chapter, that is 3-column cash book. 2-3 times they have asked the 3-column cash book in the previous examinations. Clear?